Good morning and good evening. Wherever you are on this wonderful planet, we'd like to welcome you to TopstepTV. And congratulations, yes, you are at the right place at the right time. We've got exciting, informative, educational programming for you today. And throughout the week, we will be your trading buddy, your trading mentor, your newscaster, your fellow trader, and even sometimes that bank teller who throws in a couple hundo on the house. Get yourself ready for some top-notch, up-to-date market and trading knowledge with John the Hoagland for opening call. Good morning, sir.
Good morning, Eddie. How are you feeling this morning? You doing all right?
I'm doing okay. A little cloudy here in Chicago. At least it wasn't raining like it was yesterday. It was really nasty yesterday. So
we needed
good day to work.
We needed the rain.
We needed the rain. Yes, we did.
Yep.
Yeah, good day to trade. Lots of stuff coming up here. But let's jump right into the news here. Lots of important things. And we've got to be ready for this, okay? So,
yep, it's the opening call, Thursday, September the 7th.
The 7th. What happened on the 7th? Put it in the chat. If you know, special day, anything special happening today, let us know.
It's Buddy Holly's birthday.
Is it Buddy Holly?
Buddy Holly's birthday, yep.
Wow, okay. All right. Good old Buddy.
What's in the news, Eddie?
Well, you know what? U.S. stock futures pointed to a mixed open for equities on Wall Street. Investors examining how the recent service sector data that we saw in the closely watched good old Fed heads survey could impact the central bank's monetary policy. Now, U.S. stock futures were mixed today. Stronger than anticipated U.S. service sent Treasury yields higher and weighed on equities in the prior session. Now, the Dow added 41 points, 0.1%. The S&P earlier today lost 9 points, 0.2%. NASDAQ 100 futures dipped by 87 points. And, the monthly data from the ISM yesterday showed the activity in U.S. service industries, which made of the American economy unexpectedly accelerated in August, hitting the 6-month high.
All right. Well, we certainly see the equities and some of these markets turning lower after the early economic numbers this morning. 7:30, the jobless claims numbers came out. The initial jobless claims was expected to be a little bit higher. The anticipation was 234,000 new jobless claims. Initial jobless claims came out at 216,000. It is currently at its lowest level since February. Continuing jobless claims also came out a lot lower than expected. They were looking for 1,725,000. It came out at 1,679,000. So a lot less people leaning on the unemployment, and that should be good news. Of course, because everything is focused on interest rates, it's considered bad news, apparently, because we see the markets moving lower already. We've got the E-mini S&Ps down 0.75% as we speak. NASDAQ lower than that. Non-farm productivity and costs also came out. Productivity was 0.2% lower than expected. The thing that hits me is costs are rising. Costs were expected to be up 1.6%. They came out at plus 2.2%. So higher costs also weighing on the equities. We've got a talking Fed here at 9 o'clock. Harker is due to speak. 9:30, of course, we have nat gas inventories. 10 o'clock, EIA crude oil inventories. At 10:45, the Chicago Fed, Goolsbee, is due to speak. Later, there's a whole bunch of other talking Feds. They're going to be speaking at a fintech conference as after the close today. It is the G20 conference this weekend. It's in India, and that's going to be all day on Saturday and Sunday. They're going to be trying to put together some sort of policy, global economic policy for those 2 days. It could be an interesting week next week. As far as the VIX is concerned, we got a little spike in the VIX after the numbers came out this morning, up, last I checked, about 5% at $15-20 index. Now firmly above 105, dollar continues to rally, and the yield on the 10-year up to 4.3%. I see Josiah's first one in the room. He's 3 days in a row. He's the first one here. Josiah, you are the early bird. And as always, we're going to be focusing on context, risk management, and patience this morning in getting into these charts. How are you feeling about all that, Eddie? A lot of information to digest.
Another thing, too, is Fed rate monitor tool. Fed might choose to hike interest rates later this year. And we were talking about that for their November meeting. It now stands at 43.6% that they might. That's my bookie's odds, up from 39.3%. And that was yesterday.
Right.
So, and the thing is, too, that we got more clues coming ahead today from FinTech conference, where a number of Feds, like you mentioned, are going to speak. Another thing, too, Apple. You got Apple shares, Johnny?
I do not.
No, I don't either. Apple decreased just under 3.6% yesterday. That was after the Wall Street Journal reported that China has banned government officials from using oxygen. No, wait. No, from using the tech giant's popular iPhone. So shame. So Apple took a big hit. Crude today, climbing down from a 10-month peak. More signs of slowing with this Chinese growth that is overshadowing another draw on the U.S. inventories. Don't forget, we've got, yesterday American Petroleum fell for the fourth straight week, dropping 5.5 million. And today, like you mentioned, we've got our EIA.
The expectation for that is a loss of 2 million barrels, not as deep as what came out from the API last night, but still another loss in inventory. So that $88 in the crude oil really kind of pivotal. We're going to see that in the charts here shortly.
Yes, and don't forget, if you're a football fan, it starts today.
Yeah.
Today.
That's right.
Hey, it's a football. Okay, let's get to our ES. We're going to start with the daily. If you're new here, if you can see John's charts, it's going to tell us what market it is and what time frame it is. ES, and that 1D means 1 day. What do you got, John?
All right, starting with the daily and the S&Ps. We've been monitoring this downside auction pretty well, and I don't think that it has performed all that well. I think we're really seeing shorter time frame sellers into this market more than longer time frame traders into this market. Look at the volume yesterday was pretty good. I mean, it was a little bit higher in futures, but it was still rather meager on the New York Stock Exchange. I think it was 3.4 billion shares traded. So we're not bringing in huge volume on this downside move here just yet. That part of what makes me think that we're really looking at shorter time frame here. We did add a little bit of open interest yesterday of 4,000 on this downside move. We're starting to see some short bets coming into this market. I'm not sure that necessarily we have squeezed all the laggard longs out of here just yet. So remember, we are in rollover. We will probably be rolling from the September contract to the December contract on Tuesday. I'll be watching volume very, very carefully and let you know when I'm going to move over. Then you're going to want to move into the next contract month, which again will be the December contract. Take a look at the 30-minute here, Eddie.
Z is December. Mark that down.
Z, yes, Z is
December.
The futures signal for the December contract. So
30.
Coming off these highs, we've had very weak lows. There's a sign of potential excess off the low from yesterday. Opening below that indicates continuing success at lower prices, continuing acceptance at lower prices. Overnight inventory, we've got some pretty good shorts here. We're probably going to be opening with another gap. We opened with a gap yesterday. Sellers took control right away. As far as visual targets, anything that we might look for as for possible exits of shorts on the way down, possible opportunities at these levels. There's at 44.34, there's a naked TPO point of control that the markets are, as we all know, extremely visual. Let me see what we've got here as far as our current low. So in the overnight, we've traded basically right down to that naked TPO point of control. Visuals below that would be last week's low, 44.1450, and then down to the weekly kickoff low, 4400, which is where we might start to see the longer time frame, bigger, deeper pockets, traders begin to sweat and start thinking about adjusting inventory. They don't want to right now because they're more interested in moving their positions from the September contract into the December contract. We can talk more about how that works and what that means maybe during fast markets. So as far as the profiles are concerned, yesterday we did have a B-shaped profile. A lowercase b usually indicates long liquidation, but that's not being supported by the increase in open interest. But we're still putting in some pretty weak lows. And when we look at this, we're putting in lower highs, lower lows. The market is in a downtrend. Don't fight the downtrends. Try and find a way into them. And again, we find a level, a meaningful level, last week's low, weekly kickoff low. We start to build some structure down there that allows us to lean on that level and helps us to limit risk. That might be something we might want to think about. But we still have information. We still have a lot of talking Feds coming out. So trade what you see.
Trade what you see. You got that, and we'll be doing that. We've got some about 12 after the hour here. What do we got here next? We're going to go to the NASDAQ daily. Got the 30 up. There is the daily.
There we go.
And what are we doing here? What are we doing?
So the NASDAQ has been the stronger of the two between the S&P and the NASDAQ. It's got further to fall. Yesterday, it tried to break out below the 5-day balance that we have here. Today, it is successfully doing so. Yesterday, we lost open interest in the NASDAQ on lower volume. This was long liquidation, more so in the NASDAQ than visibly in the S&Ps. Volume and open interest lower. Today could be potentially an acceleration day. There's lots of visuals down below for the market to try and focus on. When traders are focused on a visual level, they have a tendency to make price go there. So this is, again, possibly an acceleration day to the downside in the NASDAQ, possibly in the S&Ps as well. So we've got some space. We've got visuals down below. We've got possibly some longs trapped up here. Anne Marie talked yesterday about how the volatility in the puts down below and the open interest is really big in the options down below. So that's going to try and attract price down to that level. Take a look at the 30 here, Eddie.
Yeah, I'm watching the 30, watching that thing take a little bounce here right now.
Yeah, we are prior to the open. Here's
Could you open it up a little bit more, Johnny?
Yes.
Open it up a little bit more. See those candlesticks a little better. There we go. Pretty.
There you go.
Thank you, sir.
So, overnight inventory short, opening with a gap. Yesterday we opened with a gap in the S&Ps. We did not with the NASDAQ. So the NASDAQ has further to fall, I think. So we're going to be looking at potentially a pullback based off of the overnight inventory, but gap rules are in play here. If we cannot close the gap or find acceptance inside yesterday's range, we're going to be looking for opportunities to sell this market when it exhibits strength. Anything can happen. ACH, we always said that on the market prep, and it rings true here. What we're talking about here is trying to put the market in context so we can so that you and we can put together hypotheses on what we think might happen. And when we recognize, hey, this hypothesis is playing out, then you apply that strategy that suits that hypothesis. If my hypothesis is looking to try and find an area of strength to sell because the market has been moving lower, I will try and head to that hypothesis. If my hypothesis is we open and leave the opening range at the high of the session the way we did in the S&Ps yesterday, maybe the hypothesis will be we need to react quickly, find a spot to get in where we can limit risk and see if that hypothesis continues to play out. We're not trying to tell you what to do or where the market's going to go. We're just trying to paint a picture that you can use.
Now, if opportunity is knocking or ringing your doorbell, answer it.
All right. So as far as downside targets, very similar to the S&Ps, there is a naked TPO point of control at 15,039. We've not gotten to that level where we have in the S&Ps. The NASDAQ is still presenting as stronger, even though it's got a pretty good gap to the downside. As far as other targets, last week's low, 1499.73.50, and then the weekly kickoff low, 14,880 for visual levels for price to attempt to try and get to. As far as the profile yesterday is concerned, it's a V shape, and it lost open interest. So this was more of a long liquidation than new sellers coming in. Will the new sellers come in today, Eddie?
Well, let's hope so. Let's get some action here.
Yeah, we got to get some daytime frame movement going here, right?
I want to trade, man.
All right. Well, let's take a look at crude oil. Maybe there's some good opportunity here.
Now, crude taking an unexpected dive here overnight. I know that we've been a lot higher these past few days into last week.
A lot of that, Eddie, has to do with Chinese economic numbers, right?
Right. That is one of the things that is happening here. We see that because the Chinese growth, more signs of China slowing growth, and this is the reaction, the feedback that we're seeing.
And even with the API announcing a 5.5 million barrel draw on crude stocks here in the U.S., it still seems to be, kind of weighing on price, the demand side of it, right?
Right. And don't forget, crude traders, EIA today. It is Thursday, and it is at 10 o'clock Central. And it moved it up. We got nat gas at 9:30. Just had to throw that in there.
All right.
Yes.
Because of the holiday on Monday, the EIA crude is today.
Right.
So be patient. When we look at this daily chart, we've had 2 days of trying to test and hold above $88, that weekly kickoff high. Each one of them has failed. Although we continue to build open interest at higher levels, we added another 40,000 contracts in open interest. Now, remember, that goes across 10 years of contracts. Most of it, of course, is in the first 3 to 5 years. So we did see some new longs coming into this market. We've been seeing open interest increasing all the way up. We had volume increasing all the way up until yesterday. Yesterday, there was a little bit of a hint that the upside auction may be getting exhausted. It may need a pullback before it can move higher. We, of course, don't know this for sure. We've got an inside day here.
What's an inside day, John? John, what's an inside day?
Inside day is where the range is inside of the previous day. It's got a lower high and a higher low.
Okay. Thank you.
So there may be a little bit of rest, at least until the EIA comes out here. Now take a look at the 30-minute chart.
There it is.
All right. So, the highs that we've put in over the last 2 days are relatively weak. They're exact, and exactness in markets is not necessarily a good thing. Some would call this a double top, and if it plays out that way, fine. But the market has taken 2 attempts to get above and stay above $88. It hasn't succeeded in it yet. We're still seeing money coming into the long side. We could, by all means, trap some longs up here and end up with a pretty decent pullback for opportunities, of course. And then those of us that are looking to buy crude, I would be a little bit patient, look for a pullback, or look for acceptance above this level for continuation. The overnight session, overnight high, overnight low, inside the regular trading hour session from yesterday. The market is just opened here just a few minutes or 20 minutes ago and it opened inside range and inside value. So my suggestion for crude traders today, stay patient, look for the extremes. Weekly kickoff high, last week's low currently would be the short time frame extremes, or if there's some sort of reaction that you can take advantage of after the EIA at 10 o'clock today, go for it, but make sure you use opportunity to limit risk. We're traders, yes, but before that, we are risk managers.
All right, let's hit gold. We got a couple minutes here.
Gold. Daily. Here we go. Okay, so we've got some rotations going on. We've been talking about that all week, really. I mean, we've gone to high to low, to high to low, to high. The highs are getting lower. The lows are getting higher. This market is coiling. It is going to build some energy and break out of this. I don't know when. I don't know what direction. In the short time frame, yesterday on this pullback, getting close to weekly kickoff low, down to last week's low, we lost volume. We lost 1,800 in open interest. The downside of the short time frame downside auction is showing signs of exhaustion. Inside extended trading hour range today, down near an important inflection level. Is this market going to prove that it's too cheap? Keep your eye on the dollar. That's one thing that could keep us from kind of rotating back up near the highs of this area of balance. Because, you know, a strong dollar, that's going to put downside pressure on gold. Although, again, a lot of it has to do with the inventory of those that are involved. If we are too short in the hold down here, we could see a pullback to the upside. Eddie, let's take a look at the 30, and we'll get ready for the open and fast market. So here's yesterday's range. This market gives you one or two decent moves through the day and then sits. When the number came out, it looked lower. It tested yesterday's low of the range and rejected. So that's another sign that makes me think maybe this downside auction for the time being is a little bit exhausted. If I find good trade location for longs where I can limit risk, that is something I would consider today, unless we start to show acceptance below last week's low and definitely below weekly kickoff low, if we even get the opportunity to see those levels. We've got the moving averages involved today in gold. I said yesterday, I'm not really that interested in gold. I'm getting more interested in gold. Take your deep breath. Stay humble, grateful, and creative in your trading today. Oh, yes. And centered, and get out there and profit. Eddie,
all right. Good to go. We are good to go. Coming up here next, we've got Fast Market, and of course, we've got our good friend John Hoagland, the Hoag. Mike Patak going to share the trading platform. Hopefully, if the opportunity knocks, put some trades on. And what do you think? They're going to profit, or they're going to hit a loss today? Put it in the chat. Let us know what you're doing. All right, let's keep it up. And hey, if you're here early, first time, smash that like button, smash that subscribe, be a sub, be part of Topstep here, and we'll be right back.
Hit the lucky like button. We'll see.
Hit it.
And let's
Does everybody
do
know what
it.
time it is?
It is time for Fast Market, featuring Michael and the Hoag. Guys, how are you today?
Doing good.
I'm doing well. I took notes on opening call. Hopefully you guys are joining me on opening call.
I hope everybody is. I mean, notes all. I mean, a lot of good information here, and that's what we're here for, right?
Yeah, it's a lot of information in a short period of time.
Yes, sir. Hey,
Go,
we got.
go.
Speaking of short period of time, 3 minutes, 2 minutes, whatever your clock says, till the open, and we're gonna get started on fast markets. This is gonna be a good ass time, and we're gonna talk shop. We're gonna do.
Okay,
what are all the things we're doing today?
We got 2 minutes here, real quick. Here, Steven's asking, "Hey, it means weekly kickoff high and low, but that doesn't make sense. What's the range?"
What's the range?
That was a
I
question.
don't know.
Let's get into that when the market's open. So today we got Stat Guy that comes on, talks about Topstep stats. We got numbers that will be alerted on. We'll what else do we got? We got Talk Shop with Andrew and Andre, and we have So Crude session with Danny.
Dan.
So Crude. And this is PG-13, John and Eddie. So his crudeness stops at about a Pixar movie.
Dan, his crudeness.
Right? So we will make mistakes, we will lose, and we will make, and we will have technical errors, and we will have everything that you would probably guess could happen. And if
you got any comments, suggestions, now this is something that we're developing. You got any ideas for the show? Share them with us. We'd love to hear what you think might need to be added to Topstep TV.
Yep. And if
So hey, we've got inside a minute. Let me hit the horses here. Line your horses up. Watch for the bell right now, and see if we got some opportunity.
Yeah. So
There is definitely opportunity.
Definitely opportunity today. Acceleration, John. Acceleration, maybe the downside.
Could be.
You said it. I'm trading the NASDAQ. John's trading the S&P. We're watching it. We will watch paint dry sometimes and do nothing. And we will hopefully make this tradertainment and fun for everyone. But hopefully there's traders watching. If you're trolling, only troll about your sports team.
And we are open, ladies and gentlemen, and they're off. Spinning out of the turn.
And another big thing that I got in front of me that we will be sharing in a special something coming out here soon is the tilt. The tilt. I'll talk more about the tilt here shortly, but the tilt.
Let's get some trades. We'll break that down.
We will.
Oh, they're gonna love the tilt.
The tilt. We used to have the tilt in the trading pit, didn't we, guys? All right, John.
You could see it in their eyes.
You can see it in their eyes. We'll talk about that in a second. Hey, John. The tilt right now says 75%, 72% of everybody here at Topstep, including not myself because I don't have an open position, are long. What are you thinking about the open right now? It's open.
Well,
S&P showing some strength right out of the gate.
I think they're right. I think for the in the short time frame, we've got a lot of overnight inventory that are holding short positions. If they don't get what they're looking for, which is continuation to the downside right away, we could see a pullback.
What's confirmation of continued downside?
Well, when we open with a gap, if we can't close the gap to yesterday's regular trading hour session low, which precisely is 44.47 even, if we can't even close that gap, that's going to be, I think, some confirmation for acceptance of lower pricing. Does that mean price has to go lower right away? No.
All right, S&P did not want to hold back.
We have
continuation. So your continuation. Okay, you also talked about naked control 15.039. No, that's a ways away. Okay.
Okay, so we're short.
You're short?
Yeah, we broke out the low of the opening range first. 44.42. We put a stop up here.
So on the tilt, like I was talking about, folks, we have thousands of people trading, all have open positions. Some don't, some do. When they put them on, it's a bias. You're either long or you're short. 15 lots, 2 lots, doesn't matter. Bias. we're going to share the bias because the bias is a good thing for a community to have. We see this as a trading pit. We can see and understand what other traders and our own friends, if you can touch them with your tie in the trading pit, they were your friend. We had to wear ties in the trading pit. And you would say, you know if they're long or short. You don't know how many. You don't know how much you're up in a day. That's personal. But we
used to wear ties in the trading pit. My God.
What's that?
Remember when somebody wouldn't have a tie? They had like a box in the coat room of like ties that were like through like every war possible.
Yeah, right. Okay, so Eddie, you cut out on me on that one, but I'm going to share really quickly the tilt. This is what I see. John looks at things a little differently, but I'm going to share the tilt. So right now it's like 50-50. Half the community is short, half the community is long. And I'll be able to share this with you guys here soon, more so that you'll be able to see it. But this is good for us, again, to understand what the bias is, because the bias also, there's thousands of people here. Maybe the bias is the whole retail or active trader or pretty much the active trader is thinking. So I'll share that as we go. 78% of people are long right now, S&P. John, I'm going to get short right now, and I'm getting short because you're short, and I'm getting short because the continuation of the downside, and I'm getting short also because the herd gets paid and the herd doesn't get paid. We got the herd getting, and I say the herd, the community usually gets long and short. When they get heavy long, heavy short, some stuff does happen, and we're going to talk about that. We're going to share that, but it's always good for us to share with you.
JT is sharing here on YouTube. He went long at 165 in the NASDAQ.
I got a fly buzzing around here. Sorry, I'm not waving at everybody or waving everything away, but I think it's bothering me.
Yeah, I got Eddie on I'm still short from 75 half. I talk in the quarters half, 75 even. So 15, 17. No, sorry, 15-1, 75 half. 15-1, 75 half. So I'm only going to be talking about 175 half now instead of the 15 handle.
Oscar's trading the S&P short at 44.40, covered at 44.35 at the open. There you go. Nice winner start.
We just got stopped out of my short here in the S&Ps. I took the short because the opening range was initially left at the high of this session with the gap. Thought it was a good risk. Lost about $250 on that.
Okay. Yeah, I am. I'm liking the short still, John, but I am taking heat on it. I still think, we're 5 minutes into the market open. There's a lot to digest. I'm close to getting stopped out. 15-190 half is my stop. I have a 15 handle stop, and I have a 15 handle target. So I'm still going to like this downside. Everybody trade your own way. This is to each its own business. To each its own business. So if you're following somebody else's trades, you're not a trader because
you're coattailing. It's not you're not learning nothing.
Somebody's handing you a fish or whatever.
Yeah. Hey, we got Steve S 44.39 quarter. So exactly what Mike was talking about. The tilt 50-50. I mean, we're seeing bids and we're seeing offers. It's just about where you're talking.
Yep, I got stopped out, so I'm down 300. One loss in the day. Johnny has one loss in the day. I don't like three losers in a row. You see me take a break. The markets are firming up. Who just got long? Eddie.
Stephen got long at 44.39 ES though.
Nice,
not your NASDAQ.
You know what? We that 44.34 naked TPO point of control I mentioned in the opening call. Look what our low of the session in the S&Ps 44.34.75.
44.30.
So that little target there, that little naked point of control, targeted and offered opportunity if you're short to get out, or if you're thinking about leaning on it for a long, it lets you limit risk.
It does.
All right, Stevens flatted out, got out of the trade 44.43 quarter.
Stevens up money on the day.
Nice.
Well, I don't know if he's up money, but he had a winner.
Winner.
So
James
John,
Long, NASDAQ. Where are you? We got any trades in NASDAQ right now?
I got nothing on. I just got stopped out. I'm doing a little watch right now as it digests. I was looking for continuation to the downside. Didn't get that early. showing some strength. Maybe people like the Apple and the NVIDIA that are getting smoked right now at these levels and buying a little pullback, if you so to speak. The bigger investors, we're traders, we're not investors. Something to think about. All this stuff is something to think about, right, guys? We talk about it all the time. This is just information, and then we decide what we want to do with that information as traders.
Hey, John Hoag, Alex is asking, excuse me, Hoag, why didn't you go long to close the gap on the ES after that stop loss?
Because my thought is, I'm still looking for opportunity to sell strength. Leaving the opening range at the high of the session yesterday was the best trade location of the day. We opened with a gap. We left the opening range at the high of the day. Thought maybe we could see that happen again today. It didn't work out. But what I'm looking for is an opportunity to find strength in this market to continue to look for a short unless we start to show acceptance inside the range from yesterday. So a gap close might be an interesting spot because there again I can limit risk. What I think we're seeing now is just an overnight inventory adjustment. Our short time frame overnight traders were short in the hole, they got out.
Short time frame, short in the hole, they got out. Yeah, they just poked its head over 15,200 level. Right when it did that, well, look, we're down 15 handles from that, guys. I talk about handles here. 85 to 200 or here, well, 185 to 200 is 15 handles.
Sure, the gap that we have in the NASDAQ, the gap is much more substantial. It's lower probability of closing the gap in the NASDAQ than in the S&Ps. Our overnight inventory is pretty deep. I mean, it's pretty short. So we're going to now stay patient, look for opportunities as the day goes on here.
So speaking of patience, I found this, the old Topstep bull. I got a bunch of them.
You got yours? I got mine.
Yeah. John was talking about acceleration to the downside and opening call, so I decided to rip this the horn.
Oh, you did?
Guess what it looks like now?
Bear. Yeah.
So I got
those things are selling for $200 on eBay.
Oh yeah.
And yours just
I bought a four-pack.
We have to not re-accept in range from yesterday or even close these gaps for it to be a true acceleration day to the downside.
Yeah. Hey John, how do you get your weekly kickoff levels?
The weekly kickoff levels are, let's start at the beginning. The weekly kickoff levels are levels that I calculate on Fridays, the end of the day, where I just take technical analysis, market profile information, measured moves, recent highs or lows, swing highs or lows, and I mix them all up and I throw in some tea leaves and some chicken bones and I come up with the weekly kickoff levels. So
that's what John said.
They're not meant to envelop any particular range. What I look at those as are longer time frame traders are probably likely or potentially likely to adjust inventories as those levels are approached or when they're breached.
Yeah.
So, we take a look at crude oil.
John, 75% of traders are long. They've been getting paid. So everybody, when we talk about the tilt, hey, which way is people tilting to? Everybody's been long. Everybody's been heavy long from the lows. Now, here's a big question, too. I'm going to challenge a lot of you guys in the trading combine. If XFA, live funded traders. Yes, we have tons of live funded traders. We've been doing this for 13 years. Didn't ever keep anybody on sim that trades well, ever, if you know what I mean. Taking live traders live. So 78% of them are long right now. I've liked these 220 levels up here anyway because of the continuation and because I'm short right now. So any the guys in the back room short from 223 quarter, 223 quarter. And I like this one because of what I was just saying. I think the continuation. I do like the continuation. I'm holding a bear anyway. And going back to the longs have been getting paid. I'm going to tell you guys this again. 80% of people here are long. So you guys have been holding this position. So I'm going to tell a lot of you guys, take profits. I know you guys look for big moves. Take profits. Take profits. And those in the XFA and those in the funded accounts take payouts. So still showing strength. Still showing strength there.
Yeah, we've closed the gap in the S&Ps. We closed the gap early.
So
big change here, big move here.
Yeah.
Hey, real quick here, Terry in YouTube. Thanks for sticking with us, Terry.
Stopped out. So
you got stopped out there.
Yeah, I'm down 600, 2 trades in a row. I have a $3,000 daily loss limit. You will not see me.
No. You
will not see me size up. I trade small until I build a cushion. Then I start adding and trade a little bit bigger. To each its own on what you want to do. But we're going to share this every day. And here in the trading community at Topstep, if somebody's sharing their trades, you never bash them. And you never bash traders. There's going to be losers. You're going to have cold streaks. Nobody needs to call those out. Even if you do, you should be sharing what's happening in your cold streak. Because everybody has cold and hot. You're only done in this business when you're completely done in this business. You want to be around other traders. That's why we started this too. To have traders that are around other traders, that have partners that come in here. You can see the other partners we have that are kick-ass. Patrick Whalen, trades by Matt, Isaac, John London. We have these kick-ass partners that we're going to bring on here as well, and we're going to talk shop. Some of them might have made money. Some of them might have lost money. But we're all supposed to be learning every day. And if you're trolling, go to a different funding company.
Yeah, we don't need it. But what I was going to say is a good friend, Terry King, is trading Dow, but still listening to us. He was short 345.15. How's that trade doing, Terry? Because I don't have my Dow up. Let us know here in the chat.
You know, it's a bummer when you get stopped out right around the high of a move. But I don't move stops. You know what I do, John? I move entries to the best possible spot. That wasn't a good entry. Yeah. If you have good entries, don't worry about, your stops. I mean, do worry about it.
I look for where the market's proving me wrong before I start thinking about where I want to get in.
Yeah, but the market hasn't proven you wrong this week because you've been nailing it. We've been on here 3 days before this. We've been dress rehearsing for, 3 weeks, a month, doing this, having fun every day with other traders. John is pegged this week. Michael has not. And John is my trading buddy, and hopefully, John, I'm your trading buddy as well.
Absolutely.
And then we talk shop all the time. Yeah. And then Eddie is here to keep.
This was my first walk this week.
Everything glued together.
Glued together. That's right.
You're kidding.
No, I got the duct tape and the Gorilla Glue ready to go.
Well, Gorilla Glue, huh? Whatever happened to Elmer's, man? That was hot shit back in my.
Stuff is wicked. Be careful.
Wicked smell.
No
more Night Train. I just get Gorilla Glue.
I thought that was tasty.
Right.
All right. I want to get short again.
Well, Andrew says Hoag showed such patience. It was impressive. Very well done, Mr. Hoagland.
Yeah. So another thing is I want to let everybody know that in Topstep's Discord, there's a channel called TopstepTV. It's really where my eyes are. Eddie's eyes and ears is everywhere, so he'll pull people in. But a great thing to do is what Eddie said, is hit that like button and then come over to and join where the water is very warm, meaning a lot of traders, a lot of talking shop, and it continues after we end the broadcast. So right now, you're in fast markets. We're going to jump. This is an all-day broadcast, folks. I know.
Right.
Hey, John, what levels do you have up here? Because John and I watched 30 minutes. We have a pullback. We want to see continuation. I know I did. And then I was selling the tip, selling the rip, whatever you want to call it, right there. Just got stopped out, earlier at 38. We're back up here at the 35s, 235s, 33s, or whatever.
So you were looking for NASDAQ levels?
Yeah, and also what you're seeing, and since the sisters hold hands, the S&P and the NASDAQ.
Okay, I don't think the NASDAQ has closed the gap yet. So now what I'm looking for is the value area low from yesterday. If we accept above that, that's value area special situation play, and that could bring price all the way up to high of value from yesterday. It doesn't change the short time frame downside market state to do that. Okay. So this would be short time frame levels. I got this freaking fly on me. I don't know what the heck is going on, but
just start ripping cigarettes. It's going to fly away.
Yeah. I wish I had some.
Some incense or something. I don't know.
Bless it, man. I was looking for that, looking to take a short up here because we can reject range from yesterday. So if we get another chance up here, I know Josiah just pointed out the fact that value has moved higher, but it's still value is outright lower than yesterday. It's been moving lower.
Sure.
Yeah, we got to see what happens. So I'm still thinking short unless we accept inside value from yesterday, which that level in the S&Ps is 44.56. We've got to show signs of acceptance above there. We can talk about what acceptance means, which is very subjective later on. But as far as the NASDAQ is concerned for you, Michael,
yes,
we have not closed the gap. It's a much lower probability because it is a rather substantial gap. So what we're seeing, overnight inventory was short. They did not get what they were looking for in continuation. They're the ones bailing out. They're the ones that are putting the buy orders into this market that have it pushing in the opposite direction from the overnight. But so as soon as they're flat and we haven't closed the gap, I'm still looking for opportunities to sell strength. And I was looking at the kind of like 44, 49, 49. 44.50 in the S&Ps when we were up there, and I started talking or doing something, and I missed that opportunity. So I'm not going to cry about it. It may not actually play out, but just that gap close and then rejecting yesterday's range could bring continuation to the downside. I don't know. Anything can happen. ACH, right?
Anything can happen. That's why we never say in this business, this is where it's going. Nobody knows where it's going. You
don't. I mean, that's just it. We all want to be fortune tellers.
Yeah. Well, right now So, John, your 49s. The high around there. It was that 50 period. Well, on the 5 minute. That doesn't mean shit. But it was right there at the 449, 2 handles away from that. You would have not taken that much heat. I got in too early. Just so everybody knows, it's going in my favor if I had the trade still. I got short from 24s, right around there. 23. No, yes, 23s. Got stopped out at 38. The high was 41. Happens. 8, 9, 10, 11, 3 handles. John did 2 handles. Could have had that trade. Now it's down at the 204, 205, 200. So I would have been right there, 23 handles. Now, if I would have had a 23 handle, 25 handle stop, I would have probably not hit the stop and hit my target. So entries.
Hey, John, excuse me, Mr. Hoagland.
Yes, sir.
Our good friend Fred Decker has a question.
Hi, Fred.
S&P 500 has closed the gap and returned below the gap. Would a short below the prior low with a stop above the high of the day be a cheap trade?
Okay, so what Fred is talking about here is, let's go back to the ES. We're always focusing on finding cheap trades, right? Okay, so.
And just so everybody knows, it's 50-50 right now. Just really quickly, John, so everybody knows, it was longs here at Topstep, this whole rally.
Now it's 50-50.
Now it's 50-50. Did you longs take profit? Are there a bunch of longs in here looking for the absolute home run? When you come out of the gate in the morning, it's good to build a cushion. Just giving you a little 401 skinny on my take. Again, to each his own on how you want to trade. But if you didn't take profits on that rally, you got a whole bunch of handles that you could have taken. So
to finish answering Fred's question, what Fred is saying is we closed the gap. We got into yesterday's range. We're now back out of yesterday's range. Does that make this a cheap trade? So what was yesterday's low? Yesterday was low was 44.47. We're at 52. So we're looking at a 5-point risk on that. $250 a contract. That's relatively cheap. That's relatively cheap.
Yeah, I risk 300. So those are my base hits. I call them base hits. Base hits win ball games. Get a couple, 2 or 3 of those in a row. You're up 900. Get a couple in a row. You're down 600, like me. So 2 losses are it. Welcome to trading.
Coming out of YouTube, Antoine, Earth Healthy, talking about the FOM speakers. You'll take a look of FOM speakers. Well, we've got one coming up here in about 8 minutes. But the thing is, I mean, it's not, we're going to be sort of hanging on every syllable and vowel that they say. But we'll keep an eye on that. I know we've got a few coming out today, but there is much more important numbers that we got to be watching for. So thanks for that heads up.
You know, we're
Speaking of heads up, Eddie's going to keep us heads up around those numbers too. So we're going to try to help everybody out here. Man, see that sell-off, John? That would have been nice. And these are entries, man. Entries.
Double clutched. They double clutched on that short.
Yeah, I could have been at coulda, woulda, shoulda. Can't say that. Remember, John? We've been talking about that. 23s. I got short 23s. 2 23s, and I got stopped out at 238. High is 241. NASDAQ. That would have been a nice short. So 70% of folks are short now. 60% of people are short in NASDAQ. 70% ES. There you guys go. Do that information with what you will. They have been getting paid. Longs have been getting paid. Will shorts get paid now? John, with that continuation that you talked about in an opening call. The squeezed, the laggard longs. Did you call that? You said that earlier?
Right.
Yeah, I know.
Yeah, see, we haven't really seen a loss in open interest since we've come off the high here. I mean, we added 4,000 yesterday. So I still think we have some trapped longs up here.
Yeah. Tilt 70% short now. All right, so you either have 2 things when you think about this. You either have a majority of your longs that just covered, or we're looking for more out there. And why do we talk about all this? And when I'm in the trading pit, I learned that the markets move based upon people's opinion, price discovery, and their threshold of pain, their appetite for greed, all that kind of stuff. So it's very good to know and have a general understanding of people and their bias and where they want things to go. That's what I learned. And John said earlier, whites of their eyes in the trading pit. Yeah, tell me about what that means, John.
Well, when you were standing in the trading pit, like, something big like the S&Ps, and you could watch the brokers around the pit, and, with these big traders, big money, they would move their orders around the pit to try and hide their activities. But you could watch Shycorp buy 2,000 bigs. And then you'd watch Shearson buy 2,000. You watch Merrill Lynch buy 2,000. You watch Goldman buy 4,000. You watch J.P. Morgan buy 4,000. Well, they're not trading with other paper. They're trading with the locals. So when you see all that buying coming into the pit, and basically they're just buying it from the locals, from the shorter time frame traders. At some point, you got to figure that those guys are going to be so short. If they're not going to get paid, they're all going to turn tail and become buyers and run price even higher. So when we're talking about the tilt, that's kind of what we're talking about. When everybody is one way, usually that's going to be a high. We talk to sometimes Michael and Eddie. We talk about the bullish consensus, which was something
they
on the.
They did that too. They did it on the trading floor. They gave you consensus. It's the same, similar to this. It wasn't in real time. That's a big difference here. It's the importance of that. So, John, what was that?
Well, the bullish consensus was one question: are you bullish grains? And every time the consensus was 80% yes, bullish, you were probably near a high. Anytime the consensus for bullish was around 20%, you were probably pretty close to a low.
There you go. 80-20. Right?
Yep.
Hey, John, Amanda's asking, in your opinion, you think we're going to break below this overnight low?
Amanda, hello, Amanda. How are you? It's good to see you. Thanks for being here with us. What I probably should have given more weight to was the fact that we talked about that naked TPO point of control in the S&Ps that was at 44.34. Look at our low. The overnight low was right there. Our day session low is right there. I don't think it's a strong low. I think we are going to take it out.
Is your acceleration?
I've been wrong before, and now that I've said that, the market loves to make a liar out of me.
I don't know, John. I'm watching CNBC on the right screen right here, but I watch more TopstepTV than CNBC. Hopefully, that's a hint for everybody here. But Kramer's on here. I think Kramer's a really smart guy. He's wrong quite a bit too, but he actually explains everything out. And in the world of trading, again, you can be right. What's the whole line?
Bye.
There you go. Yes. What the markets can be wrong more than you're insolvent. What's that whole line? Somebody jump.
Yeah, markets can remain irrational longer than you can remain solvent.
Unless you're the Fed. You can print it. So you're always solvent, right?
That's right. You run out of money, you just print more. I got a printing press right here.
Speaking of print,
I got something here. It might be controversial from Lord Woodslinger. Excuse me. Can someone from Topstep debunk the theory that buyers and sellers don't move the market? Only algos do. No matter how much buying and selling pressure, it won't matter. What's your take on that one?
John, you take that one first.
Algos and HFTs are basically the market makers, right? They're the locals. They're the ones that are providing all the liquidity. That's why, we were talking the other day that 80% of the volume is the algos.
We have a number coming out top of the hour, right?
We have Harker speaking.
Okay, sorry.
Yeah, that's it. I got it.
So you got a Fed speaking. I was just going to say that. Sorry to cut you off, John, because if there was a number coming out, you'll see everything thin out. And you talk about market makers, John. Everything thins out. Go to your dome. I know there's a lot of chart traders here. I watch domes, and the dome tells me what's on the bid, what's on the offer, size-wise, all that kind of stuff. It thins out. So, John, algos, all that kind of stuff, market makers, they shut it off a lot of times, right?
Well, when there's news coming out, when there's an important information, they do. They just bow out. Certain ones. There are algos that fish the internet for specific words, and they'll respond to those words. But I don't think that any particular group of traders is capable of moving the markets substantially for a long period of time. Markets are always going to find that equilibrium.
Yeah, because who are you moving? I mean, you got to move. You got to move Apple and S&P 500. Now we'll talk about the Nasdaq, Nvidia. You got to move these $1 trillion market cap companies to get the whole index going too. So, yeah, we are just fish, minnows in a big ocean.
Yes, we are.
And all we want are crumbs.
And all we want are crumbs.
That's all we need.
Yeah, and every now and then you get the big whale is right next to you. Try to take a bite.
On this chart, Rob Whitlow is asking, what indicators do you have on your chart?
Well, we don't really use a lot of indicators. We try and keep these charts very simple. This is a 50-session simple moving average, 100-session simple moving average, and a 200-session simple moving average. We have volume profiles attached to regular trading hour session only. So we are looking at value areas and points of control. Value area high for this session so far today is up here at 44.46. Value area low is this blue line down here, which is 44.38. And the point of control, which is the single price with the highest amount of volume, is currently 44. Well, let's see here. Let's see here. 44.42. Is that right? 44.45 is really the volume point of control right now, looking at a different platform though. So as long as it's close, that's all we're really caring about. So
here's a request. Paul's asking, hey, can we take a look at a smaller time frame?
Yeah, here's the 5.
5 for entries, right, John?
If you're trying to really I guess, and fine tune an entry,
Yeah.
I was thinking about shorting up here, and maybe the fact that if I looked at the 5-minute up against the 50 session moving average, that might have urged me a little bit greater to do so.
Yeah, and no shits, no lies. I'm short from 93, 15,193 on that pop. As you're talking, still short now. Yeah. So just giving you guys.
All right, guys.
Nice job.
We got our
my screen, so
we got our stat guy ready to go with some good numbers here to share with us. We'll take just about 30-second break, and we'll bring Robert on. Sound good?
Awesome.
All right, we'll be right back.
Covered one. You got the NASDAQ short showing.
Yeah, it's a good short.
Yeah. Pretty much made up my day, almost. I still.
Dang, nabbit.
And there is a scratch day. I put a 2 lot on up there.
Test 1 2.
Oh my goodness! Put your clothes back on. It's just that guy. What's up, Robert?
Good morning, good afternoon, and good night, and greetings and salutations, everyone, depending on where you are in the world.
What is up, Robert? And I always love your backdrop. We've talked about. Hey, by the way, tilt's at 76% short, 68% short. S&P 72% short. NASDAQ. We got
They're
short.
about to get paid.
15,160.
I was short
160 is the target on the. Yeah.
And I covered at 168, and I was short 93s. So I opened up my downside a little bit. I'm sitting around scratch now for the day, which is good. I'll share my screen later so you guys can see everything. 75.
That short.
Yeah, those that are shorts. Jay Alexander, I know, talked about a short. He was short from 4.448. John, remember the 4.9?
I'm sorry?
Remember the 4.9, 4.449? Remember that?
Oh, yeah. I mean,
Yeah,
that's where I was looking, and I double clicked. I double clutched and missed it. I'm hoping that Fred took the short up there with the 5 points of risk at yesterday's low. He's sitting pretty right now.
Yeah, lots of shorts in here right now. Lots of longs took that upside. Lots of shorts are coming in a little later to the party, and I say later to the party because if you're trading the NASDAQ, it was 15, 2-handle 20. That was around where people started getting more short. The shorts are getting paid. Longs are getting paid. So we're learning today that the community of us active traders are getting paid. So something to learn about the market does giveth, and the market does taketh, and we'll learn all about that as we talk the tilt out and share it your way. But we have Robert, the stat guy, on here, and Robert, the Goodwill Hunting executive director, with his chalkboard.
Must be the new title over there. Well, I switched it up today because I typically had a chalkboard back here on the quote-unquote green screen, but everyone is wearing white today. I saw white hats and white shirts and all the big three you guys this morning. So, and I had a black shirt, and I'm like, I got to change it up. So we're going to put a whiteboard up here instead of a blackboard, just kind of playing with the game, right? Huh?
I like. Well, Eddie and Hoag are part of the Polo Club, if you know the fancy one. So
I do. I have a polo also. Thank you very much. I actually won that in a competition inside of Topstep. Love it, but it's black. So I had to do something with the white to match you guys, and there we are.
You look great.
You know me. All right. Well, you talk about people getting paid. So let's talk about a few of those individual trader stats that are getting paid. These are all express funded account traders. We're going to go through them one by one. You see them up on your screen now. Starting off with Samuel G. Samuel G did not have a good day yesterday. But the reason he is on here is because I do this sort by P&L. His P&L was still at 23,439. It was higher than that yesterday, and let me just make sure. That was 26,204. But Samuel G took one trade on NQ. It was a 14-second trade and a $3,200 loss.
14-second trade, 3,200. What was the size?
Wow.
15 contracts on his 150K. That is something that I wanted to put on. You know, when you put big numbers like that and you see these accounts that have these $20,000 things and, you know, it's $15,000 days, in relation, a $15,000 winning day and you have a $3,000 losing day the next day, you're still 3-1. So it sounds like there's big numbers, but I wanted to really drive the point home. This is talking, it can happen, one trade, one position, 14 seconds later, $3,000 down. It's just happens. It's part of trading. I wanted to make sure we put Samuel up there. Don't worry about it. It's part of trading. It's kind of tough to scale out of something when you're in a 14-second trade, but you know what he did? He got into the trade. It didn't go his way. He got out, and he called it a day. Done. Congratulations on that part of it. Sorry about the loss, but it is happening, and one step beyond that is the prior day, he did take a payout. So he made a whole bunch of money, took a payout, took one bad trade, called it a day. We'll see how he does later on today.
I took 2 bad trades today, and then I did not call it a day, but I take a break after 3 bad trades. Then covered a couple shorts. Now I'm back, back around scratch on the day. We did that during transition, so you guys probably heard the cover there. So glad we could do that. But dude, Samuel G, he's in an express funded account. Still putting up a great balance. And you have winners and you have losers. That's why we're going to talk about losses are ordinary and necessary part of being a trader because nobody bats 1,000.
Exactly. That's exactly why I put this up here. But the important part of this is that his losing trade, it was 3-1. His wins are generally up there for his $15,000 days, right? But his loss was 3,000. 3-1 difference right there, and he took one trade, one bad one, got out of the market, and just said, "Nope, I'm coming back again." Good risk management. Congratulations. Next up, Huang N. Huang N had $16,900 day yesterday. This is another express funded account. All of these are express funded accounts. Average winning trade for this trade was $306. Average losing $243 with almost a 70% win rate. This is something that we see when traders are short term. I'm going to say the word scalping, but his trades were winning trades were 16 minutes. The losing trades were 10 minutes roughly. So it's pretty close to scalping. Scalping I'm trying to consider 5 minutes or less. That said, small positions, small wins. Winning 70% of the trades, 116 trades for this trader. But you know what? He has $44,811 average daily profit across 4 days. He has been in the express funded account for 4 days, 4 winning days, 4,800 average daily profit. Keep it going. It's working for you. Keep it going. Another NQ trader.
Nice.
Final one up, we have Nicholas T. Previous day P&L $20,877. These, I love it. 14 trades on NQ for Nicholas. 92% win rate on these trades. That is just absolutely fabulous. Congratulations. Average winning trade of $1,100. Average losing trade of just $440.
Good stuff.
I mean,
very good.
These are great traders. Bring some live ones on tomorrow. I want to see what the live guys are doing. XFA, awesome stuff.
Yep.
And thanks for coming on with that. What other hot stats you got for us?
We got the hot stat. We got everyone's favorite stat, and we close up with a fun fact. So the stats for this week so far, we have 659 traders who passed to funded. That's from the One Step One Rule Combine into the funded account, 659. Last week was a total of 1,807. You're kidding. I am not kidding. This is statistics here. But we haven't closed out Thursday yet. We haven't closed out Friday yet. And Monday, there was no trading due to the holiday. So even though we're at 659 so far this week and 1,800 last week, we're still ahead of the ball when you look at the big picture.
Bring me the stats tomorrow too, and how many we're bringing up to the live account, guys. Here at TopStep, when you make it to the funded account, express funded account, you're on sim. Your trades inform our trades. Your trades help build the tilt. Your trades help our prop firm make decisions. Your trades help us all make decisions, and that we deem that valuable enough that we're willing to pay you a portion of your trade ideas as a percentage of your profits. So that's what XFA folks are. And just kind of give a little 401 skinny again. When you start kicking ass in XFA, the Samuel, the ones that are in the tens, $20,000, we then pull that trader onto our live account, put them in the pro ball status. Eddie always uses the word pro ball, and they're trading with that balance, and they're trading with us on our prop firm live, real trades going to real exchanges like the CME, the CBOT, the NYMEX, and all that CME group stuff. And that's what we do here at TopStep. We've been doing that for 13 years. So as you think about the industry and you think about what they do, nobody wants to be a sim trader for life, and we've never put a kick-ass trader on sim for life. So trade here at TopStep. Pro ball stuff.
Pro ball stuff. Playing with the big boys. That's exactly what it goes. Make your
and girls.
Yeah, playing with the big traders, right? All the pros out there. We have, work out the kinks in the combine, get your strategy down, get your status, use your practice account, kill it, pass over to funded, express funded account, make some money there, take a payout, move over to the live side. That's the name of the game right there. There's no hurry, but a lot of traders do that within a month.
Okay, so give us some stats. Give us some final. What do you got?
Absolutely, we got a real good one for you today. Now, this one, for full disclosure, these stats here are for combine. I wanted to pull out the combine and see how our traders are doing against the funded accounts. So this is an interesting one. This is all stats of last week, all combine traders.
Combine or combine passes?
This is all just the combine. All combine traders now. This got nothing to do with funded, but I wanted to show this. This is important. Winning traders in the combine. Their average winning trade was $4,500. Average losing $620. That is a 7.5 to 1 win to loss ratio. That is a combine now. Okay.
Who is this?
These are the winning traders. The traders that have the traders that at the end of the day, or excuse me, the end of the week. This is the full week last week. The end of the week last week, all the traders who ended positive. Their average winning trade was $4,500. Average losing trade $620. 7 to 1 win to loss ratio. Now, the traders who had a losing week at the end of the week had an average winning trade of $900, an average losing of $3,100. That is a 0.3 win to loss ratio. Moral of the story: cut you losers off. You do not need to hold those losers. We should not be making a $3,000 loss to every $900 win. It's not good trading.
That's a badass stat.
It is in the combine, so we know traders are working out the kinks. So that's a good place to do that. However, it's still good. We should not be having $3,000 average losing trade with a $900 average winning trade. Not good.
No. Well, that's why
you should never have. I mean, how do you have a one trade for a $3,000 loss?
That's the average losing trade for the traders that finished the week on a losing week.
Wow. It's the finger crossing, eye crossing, toe crossing. I hope the market turns around.
Yeah, it doesn't have to be a lot of changes. It's just struck cut those losers out. You can always get back in. We don't
stop the
do
bleed.
That here. Yeah. Stop the bleed.
Hey, yeah. Robert, yes, thank you very much. This is awesome. Appreciate it. Live stats, if we can get them this week, our live guys, and. Thanks for bringing in the combine folks, so everybody can kind of give a little sneak peek on what some of these folks that are making money and those folks that are losing money, what the difference is. My big lesson learned is John always talks about keep the math on your side. Your average winning trade and your average losing trade. There's a big risk and reward number right there, and then that next to your win percentage really tells you how profitable you are. So thanks, Robert. This is awesome.
Yep,
appreciate it.
Absolutely. And as we say, trade well, and always trade for tomorrow.
There you go. Hey, coming up here in about 15 minutes, we got Crude Dan. Also, if you're trading nat gas number is coming out here at 9:30 Central Time. Top of the hour is our EIA, so I'll be watching that. But let's take a look here back at what we got going on.
John, I'm glad I covered those shorts
Mhm.
I'm down $100. I was down like 650. $100.
Nice, good job.
Yeah. I was talking during the break too about it, and I like the position. You were talking about the position, but you can't get married to a position because right now I would be stopped out if I would have kept it. So
Right.
there's these, and you talked about it this morning. Acceleration to the downside. Well, it's trying, but now it's firming. So then it's like
It is trying.
Yeah, well, John, you said acceleration to downside. No, we're talking markets out. And that's why it's great to talk to other traders. We're bringing your thoughts in here. I know there's some traders in the Topstep Discord. And that's really the area where I'm focusing on. So if you guys want to engage with me and I know Eddie's in YouTube chat and Topstep Discord and Topstep Discord, Topstep TV channel. So go into there. We just have some traders that are calling out some of their trades and then telling us where they got out of the trades. And
there is a question here in YouTube I'd like to address from Alex. Alex is asking, the price is under the opening range again, but you didn't consider the idea to go short again. Is it possible to know why? Yes, because the opening range has been traded on both sides. It takes a little bit of the desirability of that as a trade location away. Now we were at these lows here, and we were talking about how the tilt was pretty short, and I was expecting him to get paid, but I didn't want to short down there because in the daytime frame I'm shorting in the hole.
John,
That's why I didn't consider that once we went back down below the opening range.
So the opening range is just so everybody knows is where those two blue lines. Widen it up, can you, real quick, just so we can see a little bit.
The range is really, well, you can't see the upper one here. I'm going to put on the 5 minute. You can see it better there.
What are your blue lines?
Range.
What are your blue lines right there?
No, the blue lines are value area high and low. These red dots and these green dots represent the opening range.
And John is a volume profile wizard, professor, or whatever, and he's been really, I don't know, 20 years. How long have you been doing volume profile? And volume profile is a pretty special indicator. Did it come out of the Chicago Board of Trade?
Well, yeah, the market profile, which is more time-based than volume, is really my tool. But I do like to watch the volume profile as well because of the high and volume and low volume nodes. But yeah, the Board of Trade, there was a guy by the name of Pete Stilemeyer who kind of put together a different way to organize market information. I remember the first time I heard about it, I think I was in 8th grade, and my dad came home and he says, there's this guy named Pete, and he's found a new way to kind of organize charts for price charts. And I'm in 8th grade. I'm not even thinking about it. But when I got into the pit as a proprietary trader, a friend of mine actually handed me
5 minutes remaining.
He's bringing out the artifacts.
Actually handed me this book, Mind Over Markets by Jim Dalton. Now it's the same theory as it is market profile. Basically, Pete Stilemeyer and Jim Dalton are kind of the grandfather and the godfather of market profile. But it wasn't until I read this book that I really found a deeper understanding of the auction process and how markets work.
I think that's where I've learned. So 2 big things I think you're going to hear a lot here on TopstepTV is things that you probably aren't familiar with, and that's tilt. That's the bias in real time. Topstep's the only company out there that provides this because we know we can all learn from this information, and we deem all of our information, data, or opinions, trader ideas as valuable. So we're going to share that with you. Right now, Nasdaq's 71% long. S&P's 50-50. So 50-50 in the S&P crowd. But the other indicator that we're going to talk about too is John in John's volume profile. He can bring this here because why? There's an element to this that he can explain. That again, he's never going to say, "Oh, this is where you should buy it and sell it." But you can see the importance of volume and price. And how they all work together. So John will be talking about that. You guys all have your libraries full of indicators on your charts. We're not going to talk about Bollinger Bands and RSIs. You guys probably already know about that. I already found yours out. We do talk simple moving averages, as you see, John, right here, the blue, the white, and there's a red somewhere, probably up further. There it is, 50, 50, 100, 200. I always learned that the 50 is like a speed bump. The 100 is like a chain link fence that you push through. And then the 200 is like the Great Wall of China. It doesn't mean it stops. Everything can break through anything. And if you hit a wall hard enough or enough times, you can break through. But
you can wear it out.
You can wear it out. Thank you. Yeah. So 75% of people are long right now in NASDAQ, 50-50 in the S&P world.
You know, Mike, you mentioned the Great Wall of China. News this week. A farmer was sort of pissed off that he had to keep walking around it. He put a hole through it, and he got in trouble.
Get out of here! Seriously?
Seriously.
Was his name David Copperfield?
Presto, chango.
Remember he did that? Remember he did that whole thing?
Yeah, it's Copperfield.
Smoking beer guy.
Now they're all the ace of spades. Hey, Mike, Richard Blake's got a question. Now, you mentioned this before about your 3 trades. How many trades have you had today?
Well, if you count the 2 lot that I put on, that's a trade. 1, 2, 3, 4.
Okay, 4. Now, he says that, do you stop after 3 missed trades if you planned on getting in or didn't do it?
Take 15. I like to take a 15-minute break. It's going to be a little harder here when I'm with all you guys. Taking a 15-minute. I'll take a 15-minute break sitting here. But I'll typically get out of here, kind of do a little walk around, which is very nice to do. Refreshing, fresh air, resets the mind. But 3 in a row is 369, $900 down. And anybody's like, oh, I need more room. Come on, like you're already down 1,000 in that scenario. Like 1,000 a week's $52,000 a year. Like, so I like to sure have a $3,000 daily loss limit, but I don't like to hit that at all. The risk manager guys, they even watch me there. They'll even tap me on the shoulder, which is a segment coming up, to say, hey, Michael and Mick, if you're listening, you tapped me on the shoulder before and said, Michael, maybe today's not your day. And I'm like, damn it, Mick, just moved my loss limit. And he'll say, if you want to, I'm like, no, you're right. And then I'll shut it down and I'll go for a while. That to me is practicing discipline. Taking a break after 3 is practicing or instilling discipline. I'm a big discipline guy. If you don't have discipline, you're just writing checks to the market.
Right. Hey, real quick here, we've got 5 minutes remaining here.
5 minutes remaining
on our Nat Gas Traders Heads Up. And hey, if you are listening and like what's going on, hit that like button, smash that like button, kick it in the junk. Make sure you get it going here. Be one of our subs, okay? Subscribe to our Topstep TV. Hey, if we get 500 likes here today, Mike's gonna wear a shirt and a tie tomorrow.
Oh, I will.
500 likes.
I have like one.
Actually, he looks quite handsome with a shirt and a tie.
Eddie, I'm challenge accepted.
Okay, 500 likes right now. Oh, look at this. We just got 20 right away. Hit that, smash that like button. I want to see him in a shirt.
Before I didn't even know where we're at. Before I started agreeing to the old Duke brothers. Where's my dollar at, John? Remember the old Duke brothers?
Yeah.
The usual $1. $1 bet. Duke brothers, Trading Places. If you guys haven't watched, I don't know, a futures trader or commodities trader has never watched Trading Places. Dan Aykroyd, Eddie Murphy, killer. Eddie, I'm down. I'll wear a shirt and tie. I got
we got 429 already. I think we just got another 100.
Jesus.
You know what? If we get 1,000, he's going to wear a dress.
Well, I mean, my wife's got some pretty stylish clothes, so you know
step
what?
Over the line?
Yeah,
not at all.
I'll do the tie for now.
Yes. That
just means I cut the beard off. I could do that. It is getting. I wore a stocking cap here.
Conrad Dolber.
It is getting cold here, so if I did the Fu Manchu, then I kind of think that the beard a bit keeps you warm, but
you might look like Hulk Hogan.
Less the physique.
I think the Macho Man was my favorite, Randy the Macho Man. Randy the Macho Man.
I like
Snap
Randy.
to a Slim Jim.
Yeah, he was great. Ultimate Warrior. I don't know.
That was it. They used to say, well, I wasn't a big wrestling fan, but they said he had a big ego. I mean,
I would think they all.
I would think so too.
Right?
No, the guy's pretty soft. Hey, 50-50 S&P and NASDAQ. So your shorts, I don't know, do your shorts get squeezed? Your shorts still in it? What was it before? NASDAQ was short? No, the NASDAQ was long. I don't recall. I don't have a chart.
I think at the lows, I think they were getting pretty short down there. And remember, because I said I think they might get paid, which when I say that, the market loves to make a liar out of me. They did not get paid.
They did not get paid.
All right, kids. Nat gas here in a deuce. Oh, a deuce.
So acceleration to the downside, tried. Now we're firmed up a little bit. And Eddie, you can cut me off if I'm still talking. Lots of area below, but it's holding its ground a bit. And I would say, like, the NASDAQ clearly is the weaker one. It's pulling the market or S&P down the best it can. We like to talk about leaders and laggers here too. That's another thing. John, you want to explain really quick what a leader to lagger is?
Well, with the NASDAQ, just like between the NASDAQ and the S&Ps, they're very similar assets, although they do exhibit different behaviors from time to time. So once in a while, you may be able to notice, and there is kind of consistency between the two of them as far as longer term direction is concerned. But if you can recognize which one is leading on the day, you can probably take advantage of the other one. Now, that said, I'm more of a fan of trading or looking at the market than I'm actually trading. But there's information here that we can use that might be helpful for us if we're trading the S&Ps, because gap rules are in play in the NASDAQ. We have not been able to close the gap in the NASDAQ relatively early, which is marking acceptance of lower pricing and increasing the probability of price continuing to move lower as the day goes on. So I would say today, the leader is the NASDAQ. Yesterday it was the S&Ps because we had a gap in the S&Ps. Today, the NASDAQ seems to be leading.
Yep, and when you say leading, it can lead to the downside. It doesn't have to lead to the upside.
Now, you guys can't forget about the Dow. I mean, let's put the Dow in there. If we're talking about the sisters, we got to put that Dow in there.
We always call them the sisters, the brothers. They all hold hands and kind of go to, and then one of the sisters or the brothers gets a little bit ahead in the Red Rover type of deal. You guys ever played that in recess back in the day?
Oh yeah, it's a wicked game.
Yeah,
You'd look for the smallest kid.
Yeah, and you just go right. Oh, I tried to go through your arms, but I went through you.
Dislocated.
The Dow is inside yesterday's range. It's the blue chip, and it's the smallest of the indices.
Nat gas what?
We had a forecast of 43 coming out at 33.
Oh.
Okay.
So prior was 32. Today we just got nat gas storage 33.
We'll have Danny So Crude dissect that one on here when he comes up. Don't forget about the Dow. It says right here. Yeah, tell us, John, a bit about it if you want to jump back to the Dow. Everybody should know the Dow is your bigger blue chips, and your NASDAQ and your S&P. They all work.
Here's Terry. Our Dow trader.
I trade the Dow. This is item. This is right here. I don't know if you can see. Yeah, you can. This young me on the picture. CBOT and here.
Young me. Is it? Oh, that's you. Okay.
Young Michael. Yeah. Okay. So this is the Dow futures bet. Eddie, you were in here with me. Eddie was known as Kid Comedy. It actually said Kid Comedy down here.
I was funny looking.
Here's one of my old badges.
Hoagland,
I had several.
When the CME bought the Dow, John, I ended up getting this one. So they all changed. So no more pictures because I get rid of everybody's faces.
Yeah, they did that. Well, hey, we got half past the monkey right now, and we got Dan ready. Dan ready here coming in for Dude Crude. Okay. In about 2 minutes, we will have Dan. But speaking of badges,
Badges? We ain't got no badges. We don't need no badges. I don't have to show you any stinking badges.
we all had badges.
Oh, what a great show.
It's like, yeah, I'm a.
Another classic. Wasn't that around when Trading Places was?
That was Bogart, Sierra Madre.
What year? What year roughly did that?
Probably like 46. I'm taking a guess here.
What?
Know.
That's in 46.
You've got to convince me that you know what this is all about, that you aren't just fiddling around hoping it'll all come out right in the end.
Oh, we're hoping it does.
That's what I think every time Eddie, you're chatting with me.
I'm doing the.
All right, so Nasdaq and S&P trying to make new lows. Look at the 30-minute on the S&P, John. 1, 2, 3, 4. If you say 5 bars, all firmed up right here.
All right at the bottom. That's a weak low.
That's a weak low. What does that mean?
Well, the market has taken the opportunity to go to that level 5 times 3 in the regular trading hours. This exactness is usually not a good sign. What it's doing is it's a mechanical buy order for short time frame traders, and every time they buy it, they get paid a little bit less. And then if they continue to buy it, you're going to see a whole bunch of stops down below.
Yeah, here we go. You can see stops get ripped here.
There they go. Now they're ripping.
When you see these little flashes, they're flushing stops. You're like, whoa, the market's going to my stop. No, it's not going to your stop. I could have said that on my poor entry that got stopped out 2 handles away. No, I got a bad entry. So we also talked about if it bangs on the wall hey, 72% short, 70% short. They're both S&P and Nasdaq leaning more shorts. That could be the longs that are getting covered or stopped out, which would be more open positions that are short if you want to play, that math. But yeah, we talked about the Great Wall of China and whatnot, but no matter what, if the market keeps coming back to a level, it tends to.
It wears out the buyers at that level or the sellers if that's the case.
Okay, gentlemen, we got to take a break. We got Danny coming on here. Danny with the Crude inside of a half an hour. We got our EIA. So we'll be right back, just a couple of seconds, and we're going to get Danny in here to talk about Crude. Welcome, Danny. Danny, this is about Crude, dude. So Crude with Danny.
What's going on, guys? How are you?
Good. John, can you do it?
Do what?
Danny boy.
Yes.
What do you stand
for, Danny?
Another movie. Hold on, Danny. Another movie that we're going to recommend here is Caddyshack. 1, 2, 3, 4, 5.
I'll stick to just number 1. Number 2 is where they lost me.
Yeah. I don't even know if they had a third, did they?
I don't know.
Trading Places, Caddyshack. That was all around the same time. Maybe
80s comedies were classics.
Yeah, they were. They're also they'd be canceled nowadays.
It's easy to grin when your ship comes in and you've got the stock market beat.
Yeah. Well, what a great quote for this. All right, Danny. Crude oil. Yeah, here we go.
We talked about it yesterday. EIA coming in at 10 o'clock this morning. Right now, excuse me.
You're going to have to talk about your position from yesterday. You got Seal Trader 1-0 too.
Yes. Now, Dan took a loss on that one that we talked about yesterday. I think I was kind of laughing. First off, to be clear here, the trades that I am talking about are my retail day trading. I'm on a live account, and I'm making trades simply based off of the retail sentiment and the daily movements. And so I looked at that one yesterday, right? And I came in. I like the location of the trade. I saw acceptance inside value. I'm looking for extension to the other side of value. Nothing crazy. We broke back lower. And I watched it tag me out and then rally. And I sat there and I go, gosh, I thought about it. how many times have I talked to, traders here at Topstep that said, well, my stop got pegged, but I had the right move. Very common thing. I hear it a lot. I've heard it for years and years. We've all been there, right? Like, it's totally normal to take a loss and then the market go in your direction. What you have to do is you got to look back and go, number one, was this really a valid trade for me? Yes, yesterday that to me was a very valid trade. I was inside value looking for extension to the other side of value. I was very content with that trade. I'm very pleased with it, especially with the information in the news that has been coming out lately that tells me long directional moves are good. And sometimes they just stop you out. So such is life.
Such is life. Such is life. The reality of it. 70% of folks are short down there. You see this little pop here? I told you about the markets give it and the market take it. And the tilt indicator this morning, all longs were getting paid. Then the shorts got paid. Right now, shorts wanted the continuation. They didn't get it, getting it jammed up there. And then we have, what was the trader in here? Fasten seatbelts. Look out. It's going up from here. It may be going up from here, but it's showing it is going up from here. So that was, who said that? That was Top GMASOOD.
We are starting to see a little bit of a potential delta divergence in the S&Ps. We've got delta nearly negative 5,000, and we haven't been able to really break it. So a little bit of information there for you.
Yeah. All right. Back
before I got to get out of here, and you guys keep going down the equity train. I just want to give an update on crude oil. We have inventories coming out in 22 minutes on the top of the hour. So going to be sitting patient, be conscious of that. We know the forecast right now is approximately a draw of 2 million barrels. So continuation to pull supply out of the marketplace, with demand maintaining for the most part. The one thing I will say is look over the last 4 weeks, the forecasts have been between 2 and 3 million barrels. But the actuals have been between 6 and 10 million barrel draws. So the actuals are coming out well more than double what the forecast is. What I think is super important to pay attention with any number, any number that comes out, any market that you're trading, if it hits an expectation, the emotional reaction is going to be a little bit different. If the number is drastically different than an expectation, that's when the volatility comes in, and that's when you really have to be patient. So we can sit here and say, hey, we expect a draw. If it hits a 2 million barrel draw, as forecasts are stating, okay, then maybe it's not going to be as emotional. If we're expecting a draw of 2 million and it's a increase of 2 or a boost to 2 million, there could be some volatility. Or it's another draw of 10 million a day. That could be increased volatility. So be patient, wait for that number to come out. And I'm going to highly recommend everyone sit on your hands at least for a half hour afterwards, or not a half hour, couple of minutes. Be patient on that number. Let it slow down a little bit and bring back liquidity.
Cool.
Go
Mike?
ahead. Yes.
Real quick, have your tie ready for tomorrow. We're at 5:07.
I got one tie. My wife typically dresses me in the morning, so I got to text her right now and say, honey, press the good shit.
Well, there you go.
Both you guys wearing white after Labor Day. I'm really disappointed after we talked about that on Monday or on Tuesday.
That's like a white after Labor Day. I don't know.
I think it's pants only.
I think it's pants only.
I'm wearing my cheetah spandex. Is that okay?
Hey, 80% of people are long right now. So we had people short. Now we got people flipping longs. These now are people possibly like, hey, I'm chasing shit. So be careful here. Those are chasing shit. Remember, I got stopped out at 15,238 level. If I would have held that trade thinking I was sowing the money, which I would have been, and I would be like, this is going to go all day long, I would have probably been getting stopped out right here, even if I would have got back in at my 38 level. So it's all about timing. It's all about knowing when to get out. Getting in is fairly easy. Getting out is the hard part. So, Danny, thanks. Thanks, you.
Guys.
Yes.
Trade smart.
Hey, John, what levels do you like up here? Because I want to get short around these levels.
Well, hang on a second here.
I'm holding on to my bear that used to be a bull until
I've already extended the initial balance in the NASDAQ above. So all of these overnight shorts are still nervous. They're still not getting paid. I don't know, Michael, if I'm going to be too aggressive in looking for any shorts here. The market has been spending time down here. If I'm going to be looking for shorts in the NASDAQ, it's going to be yesterday's low, which is 15,310, or value low, which lines up almost perfectly with this 50-session moving average.
15,310. Yeah. I'm looking at it.
Just because we're accepting price lower doesn't mean we have to go straight down.
Longs are getting paid. Longs are taking profits down to 60-40. There you go. See, guys, it's good to know. It's good to know stuff. John, volume profile says what around these levels? You said yesterday low, but what about volume profile?
Volume. We're currently extending the range, so you don't want to fight range extension until it proves to be wrong. So just let this go unless you're going to try and go with it, which is dangerous.
No, I'm not going to go with it at this level. The risk isn't worth the reward.
You then look for some sort of structure as the day goes on to look for an opportunity for a short. Then stay patient.
My volume profile says 281, 280s. It's just a little. Is that a node? Is that can you widen up right there?
So okay, you're looking more at the entire overnight session as well, right?
Yeah,
we're really just focusing on the regular trading hour. I mean, I can put that up.
Okay, I just got short 74 on that rep. I'm short from 74. 274.
Here's the NASDAQ.
I like the 280s. I talked about the 280s, but you can see a little extension that could happen here.
NASDAQ.
All right, I'm out. I didn't. This is one after extends like this. If I don't get in the money fairly soon, I get a little, especially on these rips, on the rips. No.
So there's your little volume node you were looking at right there, right?
Yeah, exactly.
71.
What time period is this?
This is the 30-minute.
Oh, there you go. I mean,
the overnight.
What moving averages is that one that just came and touched?
That is, I think that's something that somebody had me put on here. And hang on.
While you guys are figuring that out here, top of the hour, don't forget Crude traders.
20.
Yeah.
We don't do
Go ahead, Eddie.
It's simple.
No, I'm sorry. Just saw a little gap there. Crude traders, you got 15 minutes. EIA coming out. Also, as soon as we get that number out and see what happens, we're going to bring Dre on. Andre for Talking Shop, top of the hour.
Nice. Hey, I'm jumping into Discord, TopstepTV. Top G, can I get a free combine for the call above? I don't know if you need a free combine. Sounds like if you're not in the combine, or if you're in the combine, you would have got literally past the combine on that call out. So something to think about. Or if you're at the, well, I guess you wouldn't be express funded account if you're talking about a free combine. So
if you're in the combine, don't forget we're offering coaching here, so check that out.
Yep, we're going to be really leaning into group coaching. Group coaching is going to be something that we're going to be doing after Fast Markets, guys. Fast Markets ends at about what 7:30, 8:30, an hour.
Yeah, about an hour.
About an hour. After that comes up with what, Eddie? What's the rest of the day in store?
Well, we're going to be having Shoulder Tap after Talking Shop with Andre. Mick or Brett are going to join us. And stick around. You guys are asking for free freebies. Well, we've always got Top Quiz with Jack. And we're going to be giving away combines. Yes, Topstep Trader trading combines. I do believe a 50, 100, and 150, if that's correct. I hope it is. We've been doing that here since we opened shop Monday. And try your luck. All right, that's going to be at 10:30 Central Time. And remember, when we talk about times, we're here in Chicago, so we're not too well educated on different time rates. So we've got to go by Chicago time, Central Time. Okay, so we're always talking Central Time.
Right.
Why do we talk about Central Time and why do we wrap it around Chicago? Futures. Didn't futures originate out of Chicago, or is that like the tulips?
Well, modern futures, yes. 1848, the founding of the Chicago Board of Trade.
So we are all futures traders. Well, why don't you guys trade CFDs and FX and all that crap? Because it's not real. CFDs aren't even, they're not. Sorry, we trade real products from real exchanges and futures, commodities, indexes, publicly traded exchanges, prices off that. So that's why we're all about futures over here. And the gravitational thing is from a stock trader, penny stock, an options guy. But the path that it really ends up with people taking their professional trading career to the futures markets. At least that's in our history. So John, the rip higher, it's up here. I got out of that short. I was short from 74. I got out of that short from 74. I got out at 76, 2 handles. So I'm down $145 today. That's 5 trades. Taking it easy. 50-50 in the world of tilt on both.
Yeah, there's probably a lot of indecision here right now. After my early loss here, I missed one good trade that I had my hand on and started moved it away and missed the opportunity. So now I'm just going to be patient, and there will be an opportunity. I'm going to, instead of go looking for trades, Michael, I'm going to let a trade come to me.
Ooh, my old man always said, Junior, let the race come to you. And I think we're at a NASCAR race.
Junior. Junior.
I'm not even a full junior, but he called me Junior, but same name, just different middle name.
If you ain't first, you're last.
Yeah, my old man, he loves NASCAR and stock car racing, all that kind of stuff. We're out in Nebraska. That stuff's pretty common.
My dad used to race. He was a racer.
Oh yeah, there's something to it. Hey, John, up at the 84, we just ripped, when we ripped, we got up to like 81. Volume profile, I mean, there's this gap that was between, the 229, 230, all the way to the 273. Is that how I'm reading it right there? You're at where we're at right now? All the way down. That little, right there. There you go.
Right here.
Yeah. Yep. What's that typically tell you when you see there wasn't a lot of action at those prices?
Yes. Yeah. You see on the way down, and this was prior to the regular trading hour open, the market moved probably pretty quickly because there wasn't a lot of opportunity for volume to accumulate there. Now it's moving relatively quickly back through it. This is, of course, again, this is the entire session from 5 o'clock last night. So you're going to see lower volume up here. I mean, it spent a lot of time up here. Where the volume is down here. Well, where is the market going to go?
Yeah, I think what I'm saying, the lower volume up there, there's still little spikes in it. So if those spikes are still areas that are important. Sure, the volume was lower, but if it was a daytime session, that would be a bigger.
Yeah.
What do you call those nodes?
Yeah. So it's the volume nodes that I'll lean on in directional days. Like here, let's take a look at the S&P yesterday.
John, D-Hall, real quick here. Can you download your chart template in Indicators so we can save it and use it?
I'm not sure how I'm gonna be able to get it to you. It's a file.
Yeah, well, you have these studies on your charts, guys. Just look in their volume profile. It's an important one that we've always, from the trading floor, has always been a market profile. What was the other volume profile? Mind over markets, the one John just shared. Any trader would love, even if you don't want to get into all that this stuff. The first 80 pages is talks about. We'll just read it. It's really it's not really talking too much about. It's just mind over market. It talks about your mind, of course, and how things work.
And the auction process. What markets really are, right?
Yeah.
So if you remember, yesterday the opening range was the high of the session. This is the 5-minute chart from yesterday's session. This is how I will use volume profile. Most of the time, this is what I'm really focusing on, is on directional days. So the market opened, left the opening range at the high of the day. It balanced here. It drove back down. It drove down to here and accumulated volume here. If I'm thinking that the market is going to continue to move lower, I'll use the low volume node for resistance. Okay, the market, if the market's going to continue in that direction, it should continue to go in that direction. So we took a short yesterday at 44.81 quarter right here, right up against this low volume node. It never came and went all the way through the volume node to hit our stop, and we had a pretty decent trade.
Speaking of trade, about 75% of NASDAQ folks are short now, but they've been short for a little bit, so they're getting paid on this one. How short time frame are they? I don't know. We'll want to see. But this is your little pullback off this last, I don't know,
280.
Yeah.
Right. So look at what we're up against here in technical analysis. In the 30-minute chart, you've got two lows right there. Okay, the market was holding. This is where it broke. This is where the sellers decided to come in and continue this move to the downside. So a return to it can offer some decent opportunity.
I hear that. Trading 252. Yeah, so now it's 60-40. Nice job. Shorts taking profit.
Nice work, right?
The tilt tells you so much. Market profile, volume profile.
Eddie, you see who's in the chat and YouTube?
I'm sorry?
You see who's in the chat and YouTube?
Who we got? Who we got? Hoop. I remember Hoop.
Absolutely.
Yeah, Hoop. Man, that's back in the Squawk Radio days.
What's going on, man?
Back in the Squawk Radio. Hey, John, I'm looking to get long.
That was his badge.
Let's go. I got long 243 evens. 243
Okay.
even. 15 handle stop. It's pulling back. It's still 5 pullbacks on bit of rallies. Market may want to gravitate towards back to settlement. That's a long ways to go.
Yeah, we still probably got some overnight shorts in this market as well, which is why I'm kind of sitting on my hands, remaining patient.
Yeah. So I'm long from right here, right now. 15.243 even. I like the pullback. We've been showing strength for the last hour or more. We had a lot of longs this morning up at below here, though. Squeeze laggard longs. You talked about squeezing laggard longs. Maybe they got squeezed, and now you're when laggard.
We're talking about squeezing laggard longs from up here.
Yeah. But I'm kind of like opening it up a little bit more on is there a big herd of laggard longs that got squeezed on that sell off? 90 minutes ago ish.
We did see a reduction in open interest yesterday, so that I'm sure was part of the longs that were in losses lightening up in those positions.
Yeah. So I'm long from 15.243, even if you guys want to pop that up there. I have a 15 handle stop and a 15 handle target. I'm taking heat on it right now, like 3 ticks or 3 handles. Usually when it does a pullback like this, I like to if it doesn't go my way right away, I like to be okay with getting out and then looking for a better entry.
5 minutes remaining.
Ooh.
We got 5 on the EIA.
There you go. So that is what I typically like, to find better entries on a pullback.
Mm-hmm.
Let it sit here.
Sometimes I'll use that volume profile for that purpose as well.
Yeah.
Okay. Here's a little hint. This is a different platform, but this is market profile. And in the S&P there is a difference here. S&P is this dark blue bar here is the first hour of trade. That's the range for the first hour of trade. It's called the initial balance. We looked below it and we failed. We looked above it and we failed. When we trade both sides, outside both sides of the initial balance, it increases the tendency for the market to remain range bound.
Okay.
Just a little hint there. Now the NASDAQ, the bottom of the opening, the bottom of the initial balance remains. It did not take out the bottom of the initial balance here, and we've extended above the initial balance. But it doesn't change, I don't think, the idea that we opened with a gap. We've been unable to close the gap relatively early. I get it. Relatively early is a subjective number. It's a subjective thing. The market is attempting to do it. Hasn't been successful in doing it just yet. So I'm still of the frame of mind that I want these these shorts to get unraveled, and then figure out that they messed up and they should have stayed short.
I just covered. It's sitting down here. I've been taking heat on it for a little bit. Small heat. I just got out right here right now with 3-handle loss.
Yeah, that's good. I mean,
I'm looking to get back in though, John, on a big. If it's going to flush
bigger pullback.
Yeah,
that's good.
Like a 20.
That's good. You'll get better trade location instead of getting stopped out and then start looking for better trade location. Then maybe you should think about the trade location where your stop just was for an entry.
Yeah, 100%. It was down at 43, so that'd be 40s, 10s, 25 ish. So I'm getting there. Well, you have real time? I'm on delayed. Here we go, John. I'll get an entry back here around the 25s, 23s if it goes there. Again,
I was a little off. Sorry.
What was that number again? 15,243?
I covered it. Little loser.
Okay. Little one. It's good management.
If it didn't go, it doesn't go your way right away on these moves, especially in NASDAQ. I don't like to really let it sit around. It kind of grows legs, so to speak. And if it's sitting, I don't know. I'm an entry guy. You don't see me trade that much because I like to be a little bit more patient. It's really easy to be patient when I got a trading buddy like you guys and we're doing this. So those that don't have a trading buddy, or tune into Topstep TV every day because it may help you. Hey, Andre's going to be on here talking shop with Andre, but Andre always taught me good trading is like watching paint dry. So we started Topstep TV because those good traders that watch paint dry need to have a little tradertainment while they do that. So hopefully some of this conversation is enjoyable, if not all, and we're going to keep having it throughout the day. So there you go. Nathan, thank you very much. Trading Buddy. There's a channel in Topstep TV called Trading Buddy. You can go in there. Tell him, say, hey, I trade the
Discord.
I trade the S&P. I trade the NASDAQ. He's my trading buddy. So find somebody.
Just about ready to come out.
Okay.
Yeah. I am on it. So we got a prior of negative 10,584,000. Expectation negative 2,064. That's 2,064,000. And we'll see what we've got here in just a few seconds.
Dun, dun, dun.
Last in crude right now, 87.54. And we'll see where that sort of takes off. If it does.
Here's your 33s, 233s. Johnny, you think it's going to get 225s, 220s? That's that pullback. Yeah.
I got crude up here now because it's just coming out with a number.
All right, we got negative 6,307,000. So swing and a miss, much lower than the expectations. Negative 6,307,000, and we're still looking at the crude right now. Looks like buyers are jumping in here, but like Danny said, let the dust settle, let the noise clear the way. So you can get an honest movement. I mean, that's some of the problems with a lot of traders when a number comes out and they want to jump on that run because they got the FOMO, fear of missing out, trying to get something off that move. And usually, I know from my experience, usually most of the time you're catching that move too late, and now it's in your face. Now you're negative on the trade. It's not looking good. And that's exactly what sort of happened here. We saw some bids, some buyers coming in market, moving higher, and now it's just sort of hit the and kick back. We also got gasoline inventories coming in at negative 2.666. Expectation was only negative 950,000, but they got negative 2.5 million.
All right, thanks, Eddie. Looking at your NASDAQ here on another chart here. Let's bring that back up now.
Yeah, the Nasdaq's that pullback didn't go all the way. Well, I mean, I thought I was looking for a little bit stronger flush out.
Yeah.
I would have taken. What would I have taken? About 13 ticks, 13 handles heat. But I got out with like a 3-handle loser.
Right.
But that would have been a nice, it wasn't coming down to 20.
Mike, you need glasses.
I know, right? 30s. Came down to 30s. Hey, 75% of people are long right now, both ES and S&P. Sorry.
And
NASDAQ.
And it's time for shop talk with Andre.
Let's talk some shop.
So let's take a couple seconds. Andre. Welcome, Andre.
What's up, Dre?
What's up, boys? You got me?
Yeah, talk some shop.
All right. You guys
shop
long or
some
what?
talk.
Yeah, man.
No, we tried. Johnny and I tried to on that pullback.
Chop slop a little bit today.
Yeah, a little bit. Small ranges too.
Yeah,
it is. I think the markets are we're in a holding pattern right now. I don't think the markets know. Well, we've been lower, obviously. Oh, by the way, Ho, you nailed that 44. What was that number? Yeah, 44.35 in the spoos. You nailed that call.
Put in our low.
Dude, just bullseye. Dart in a bullseye. That was beautiful.
John's been nailing it this whole week. Like literally yesterday, the day before. Me not so much, but John, yeah. I'm learning from John this week.
Sometimes you nail it, sometimes you get nailed.
Yeah, I figure I'd throw you a shout out on that one.
What's your old man's line when you have too many on and all that kind of stuff, right and wrong?
Yeah, if the market's going your way, you'll never have enough on. If it's going against you, you'll always have too much.
Too many.
Spot on. So I don't know. I think market's a little schizophrenic right now. I don't know. Looks like we're pricing in another rate hike. Dollar index not all-time highs, recent highs. Oil, recent highs. Equities on the recent lows. Job data cooling off. So I think that's kind of where the equities are. Have to see this downward pressure. I don't know how much conviction is behind it, so to speak. I think it's a lot of speculation. Hoag, I don't know what the volume's telling you with this breakdown over the last couple days, weeks, but it's kind of where it feels like. That's what it feels like, at least.
It hasn't been that impressive, and neither has open interest, really. I got to step away for 2 minutes, guys. I'll be right back.
All good.
Okay.
So what is your take? I'm going to ask you, flip to you.
Yeah, I think the markets. I think that rally we had over the summer was kind of aspirational and hopeful that we're going to have one more hike in August.
November?
Well, that's what we're 50-50 on November.
Actually,
Eddie updated us today.
Yeah, I was talking to my bookie.
Oh, no kidding. Well, the football season does start today, so go on.
It does, yeah.
His bookie started to take
easy.
Hey, hey, you've woken me from my slumber, Michael. Let's watch the sailor talk here.
I left the K word at the end of it off.
What his bookie? He's taking action on Fed funds.
He's taking action. Yeah, I was trying to go a little hard on Bueller. Sorry, God. That's that voice in there.
Yeah, my bookie. November meeting now stands at 43.6%, up from 39.3%, and that was from yesterday.
Yeah, so we're starting to see this little upward pressure on a rate hike. Under pressure, but I don't know. Like, we got CPI and PPI coming out next week. Obviously, the Fed's watching. The Fed's watching closely on that. So, who's to say that they don't act? They don't act in September. I don't know why be so delayed on it if you know that's interest inflation isn't coming down as fast as they'd like. I don't know why they wouldn't be preemptive with it. Obviously, they have to be reactive, but still.
Well, they like to stretch it out. They get free lunch every time they meet. I mean, wouldn't you?
A trip to Jackson Hole with your buddies?
Yeah, exactly. If people are all factoring in, I just wake up like Jerome Powell, look at what everybody's saying, and go right back to bed. We're fine.
Hit up a dead show and then do that. So
the Jackson Hole party that they had, they were all having a good time.
Out this whole thing. They're going to string this out into 2024. I'm
sponsored
guessing.
by Wild Turkey. I think that's what it was. Jackson Hole.
Wild Turkey. A lot of it
sponsored by Wild Turkey.
So I don't know. It looks like inflation isn't quite under control. Equities are acting like it. The dollar index is acting. Hell, the euro's down big time with the strength in the dollar. So kind of looks like.
Hey, you know what else?
More action is required. What do you got, MP?
It's September, so you got all that. You got all that summer activity. Where they say never sell a quiet market, and the markets were just cruising in the summer. October, anybody that's traded for over a few years knows that the pattern is markets get pretty busy in October and November.
Yeah, they do. Leading into they got December too with Santa Claus rally, hopefully. Hopefully.
Santa Claus rally. That's right.
Yeah, it hasn't. I don't think it's last couple of Decembers. It hasn't really come.
It hasn't
through,
really
but,
done it. No, it's like an elf.
Who came up with that one? Like Macy's to sell more things, or like get a Hallmark, Hallmark new card.
So anyways, so what's up? How you trading, man?
I'm down $200 right now.
Oh, not bad.
And a lot of this is either slippage or getting out early, but I'm probably, if I put up my trades, I'm probably 50-50, losers to winners. I do know, looking over here, that Topstep TV channel, there's a lot of folks that are crushing it. And I do know, watching the tilt that in the morning the longs got paid, and right after the longs got paid, the smart shorts got in and rode that one up. So there was a good morning. Anybody who quit in the morning, ending on a good note, is probably doing pretty well. The tilt is it showed that they probably the shorts got beat up a little bit on this last little pull.
What was that pop? Any idea what that pop was about? I didn't see a headline or anything, so I was wondering if you guys got caught short.
No, it was just. We need John on here to say it was overnight inventory or the squeeze.
As my mentor would have told me, there's just more buyers than sellers. I know that. I know that.
Anybody who doesn't have a trading mentor, if you want to shorten your learning curve, do that. There's a Trading Buddy channel that Nathan just dropped in our Topstep Discord, Topstep TV channel. Not to be confusing, there is a link to another channel that takes you to find a trading buddy. Andre's been my trading buddy. Eddie's been my trading buddy. Hoag's been my trading buddy. Mick has been on here, a trading buddy. Danny, and you name it. Even Robert started trading with me later on in my career, and it's just fun. Brett on there, so.
Dude, it's like having another set of eyes, another opinion, something they might not have seen. Someone watching your blind spots,
Watching your six,
man. It's important, It's this thing's trading gig ain't the easiest thing. If it was, everyone would do it, as they always say. So
that's why community. That's why community is so important. That's why no trolling other traders.
The worst. The market trolls you enough. We don't need other humans trolling you.
Yeah, it's been a love-hate. I've already had a love-hate relationship with the markets. I don't want to take my hatred out on other traders.
No, the market does enough of that.
Yeah, I take it out on the dog when I get home.
Oh no!
I don't have a
PG-13, huh?
No.
What are you trying to do?
I'm kidding.
I don't have a dog.
I'm gonna put you in a corner here.
I'm a dog. I've had 4 dogs in my life. My Cassius, my last one, passed away.
What a good pup.
Wasn't he awesome?
Hey, real quick, Trey, you know anything about this Lux Algo Premium Indicator?
I do not. Go on. Tell me.
No, he's Artson's asking, what do you guys think about that?
Lux
indicator. Is it worth it? Lux Algo Premium
indicators, and I think we partner up with them as well.
Okay.
We have great partners: Patrick Whelan, Trades by Matt, John London. We have Casper. We have Isaac Suffren. These kid guys. One, I think Lux is one of them. We have our partner team that gets in here, and I don't know what level of partner they are. We partner with folks that have good communities and traders that they can connect with. And again,
real people.
real people. And it goes back to community. So if you find a connection with Patrick or Trades by Matt or Isaac, they all are different and unique in their own way. And that's why I love partnering with them. We'll have them on a lot on a regular basis still. As today's kind of the kickoff day to the big group. But yeah, it's just, you know, it's an indicator that I would always check out indicators, because I went through a couple in my career, and
which ones did you used to like or use, or which ones do you use?
Oh, just the simple movement. I used well, you know, when you first start trading, I think it's like Bollinger Bands. I'm talking about
Bollinger Bands, MACD, MACDs, oscillators, all that. Yeah,
oscillators, RSI,
fib levels. I mean, I don't know, isn't it? It's paralysis by analysis. Like almost.
If you get more, if you get more of them, and then if you start throwing lines on chart lines on your or trend lines on your charts, and you get them all crossed over.
I could draw you a pretty picture for sure.
Yeah. What'd you call it? Astrology for
traders, but some people don't like that. We gotta dial that one back.
Well, no, I mean, it's just if anybody takes everything serious, then you're not having fun in the world of trading, because everybody should be. I said it earlier. To each its own. Whatever you be, you could have. Smoke signals that are your indicator.
Well, John has chicken bones, right?
Tight. Johnny had chicken bones and seances or something.
I heard that. That's how you come up with those levels. But yes, indicators, they're what they are. I think indicators hold value if, like we say, we're just minnows. So we need the big fish, the big kahunas, to be watching those same levels and those same indicators for them to hold or push through. I think it's a volume play, so the volume needs to push through or drive price action to those levels.
Speaking of volume, we were talking about John with volume profile.
Hoagie.
That 43 I was long with on the pullback was good. I would have taken 13 ticks heat on it, which I have a 15 handle or 13 handle heat of a 15 handle. So I would not have been stopped out, and I would have gotten filled on my target. So it's a missed opportunity here, but I think there were some people again in TopstepTV on the Discord channel that took good advantage of that first big pullback.
Can we just rewind real quick here?
Nice.
Regarding regarding indicators. Now, for those in the program, don't forget you got that practice account. Okay, my traders that I coach is be a sponge, absorb as much as you can, try everything, and see what you like, see what works for you. And like you said, to each his own. And you got that practice account for that reason, for a lot of reasons more than just that. So remember, use that practice account to test things out. You might not be on the right horse right now. Okay, maybe there's something that we talk about, something that somebody brings in, even in the Discord channel, the YouTube chat. Somebody mentions something, check it out. It might work for you better. So give it a shot.
Give it a shot. I do like in here, it says, which indicator do you use? Post it in chat. Do post it in chat. Then after that one, I would love to see what the funniest indicator creatively you could come up with. Smoke signals is one of them.
I like that, man.
I'll start that. Smoke signals is mine.
Don't they have like the moon? People watching the constellations and
pull.
I mean, I remember having when we were doing the top. When we were doing the broadcast years ago, somebody was like trying to convince everybody that this is the way to trade.
It's following the moon.
The moon, the seasons. I mean, it's something real. It's not BS.
I do know harmony or music or harmony. What was there? The trading psychologist Denise Scholl. I think
music.
James says.
Yeah, they're the rhythm. Rhythm. There's a rhythm to the markets, and there was a conversation that she had. I think she's a great one to tune into on Trading Psychologist. Jared Tendler is another one. Dr. Menaker
for sure.
I mean, the Godfather, Steenbarger, and I think, I do have him. Brett Steenbarger, this guy. Yeah, Enhancing Trader Performance is an incredible book. Kind of where I got the idea to start the funding industry. Yes, Topstep started the funding industry before all the Forex companies, before anybody else. I read Enhancing Trader Performance 2008, 2009, and it's really about helping traders learn on a simulator and then get them in a position that they become professional, excellent traders, either on their own or whatever. Great book to read even for your own performance enhancing, journey of trading.
You guys mentioned astrology. I thought I'd display this tweet I saw this morning.
Ooh, I like this. Dudes will make fun of women who are in astrology and then read shit like this.
That's pretty much where I got it from. That's exactly the tweet I got.
I hadn't even read the headline yet. I just read the word Bitcoin. So I
mean, he's not wrong,
Pretty good. Jack, I love it.
Yeah, that was good shit.
So the markets are rallying off our...
They are rallying. We bounced off those 35s, man.
Is that where it bounced off? Oh,
and the SPOOs, and S&Ps, my bad.
Yeah, you know what? We talked about, look at the 30-minute. What does he have, the 30-minute NASDAQ? Yeah, John's not up. Oh, there he is. John, go to the ES 30-minute. Remember we said it was knocking on the door so many times? Well, it tried to get in the house, if you want to spread it out, in the very last prior 30-minute. Did a little head fake to the downside.
Yep.
There's your little head fake on the prior one. So we're holding 35s. And then what was the low? 34s.
And S&P's 34 quarter.
Market's like, so.
Market said sold, and then it looks like the buyers came in and defended and said no, and then something made us pop. I don't know if it was. It couldn't have been stops. Maybe new longs coming in. I just gotta look at see what the volume profile might say there.
Tilt says nothing right now. 50-50, 60-40, nothing.
What's a big lean in Tilt? What's like an overextension in Tilt? Would you say 80?
80-20,
80-20.
Yeah.
That means everyone's looking.
I use this scenario when it gets to like 90 or 95, which I've rarely ever seen it that way. When you get into a cab and your cab driver tells you to buy Bitcoin, that's when the bias hit 95%.
Oh boy.
That's what they say. They say when you get into a cab, I've always heard this joke. When you get into the cab and the cab driver says buy this stock, that is a stock you should short, because that means the final, general public now is all biased in one direction. So the markets are made up of fear and greed. They're made up.
There's fear in the streets. Get long, right?
Well, yeah. Well, who said that?
I thought Michael Patak said that.
Well,
it's the bullish consensus. When everybody's already in, the high is in.
The high is in. And when there's blood in the street, who said it? There's blood in the street. When there's blood in the street, you buy.
That shit holds too.
A lot of people probably said it, but anybody in here? Warren, the Oracle of Omaha.
Warren Buffett.
Now, remember in 08 when nobody would touch anything? 08. When he's like, you know what? I'll hold it. I'll hold the markets up. What do you guys want? I'll take it.
Goldman, right?
Oh, Goldman. Oh, by the way, I'm going to put some options here that I can buy more of it later. Nailed it.
I think Bill Gates just did that with Budweiser. Not that Budweiser needs saving, but he came in and bought a bunch of shares of Budweiser.
Bill Gates?
Yeah, after this whole thing. They call it the hangover, but yeah, it's coming in to save Budweiser or Anheuser-Busch. Hey,
it's not a bad thought.
What's that?
Not a bad idea.
No.
Hey, question. What's the headline I saw with China and iPhones? What did I miss? I know it's kind of a little off topic.
So
what did I miss there? So if we're talking shop, I want to catch me up.
The government says that they're no longer allowing government workers to use iPhones in the office. They can't even bring them in.
Is that in retaliation of something, or is that?
Well, the article I read about it was less about retaliation, but more about supporting Chinese smartphone companies.
Protectionism. I got you.
Right. But God forbid we do that.
God forbid we do that. And why does it have such an impact on Apple's stock? How many public officials are actually using an iPhone in the first place?
Well, if you think about that,
1,000, 2,000.
There's 5 billion Chinese people, and probably fifth of them work for the government.
Well, hold on. Didn't we say no TikTok for any?
That's what I was thinking. Is this a TikTok thing?
Is it a tick for tack thing?
Still here. TikTok is still here.
That was bad. I'm kidding.
I mean, I think we did it to all of our government officials, didn't we? I don't know. If somebody
we did. They banned TikTok.
Yeah, you can't have it on. You can't have it on government-owned phones.
Yeah, they just took it a little bit further.
Yeah, because I saw Apple was down big. I'm like, what? Their earnings were great.
I mean, you're still seeing 1% down in the Nasdaq today, and you're seeing 0.5% in the S&P. So yeah, I mean, there's your Nvidia. Nvidia's. I don't know where it's at now.
Boy, these markets are choppy. If anyone's up there, if they're up, anyone out there is up money today, man, be content with sitting on those profits today. We're whipping all over the place. This is chop slop, if you ask me.
Squeeze that chart in tighter, John. I can't tell what symbols you got. Our pictures are over it.
Yeah, I was just looking to see where Apple was on the day today, but here's the chart.
There you go. Market type, thanks for dropping links in here. Guys, if you have links to stories that are from reputable resources, drop them in, help others out, and smash that like button. Where's that anywhere we need them?
I always say hit the lucky like button. You hit that lucky like button, you're lucky that day.
Oh, wow.
Yeah, Eddie's on a break for 5 minutes.
All righty.
We got Mick waiting, though.
Yeah, let's bring Mick in. Go ahead, Jack.
Yeah, for the videos, we'll just wait till Andre leaves, and then we'll bring in Mick.
Okay, Andre's going to leave right now. So later, guys.
Later, Dre. Thanks.
See you tomorrow. Bye.
Hey, got some comments in here. All talk and no trades. Hey, watch your paint dry. You guys can keep trading. We're here at Tradertainment. I'm not here to sit there and for you to follow my trades. We're going to talk out trades, though. Yeah. So we're all in the trading. Hopefully, we're in the trading combine funded, and we're all should be on our own personal journey, and we can learn.
Everybody has their own time frame. If I take 3 trades a day, that's about average for me.
I'm not going to be
trading. I'm not trading for small bites. And a lot of them, I'm looking for bigger bites and fewer of them.
Yeah. Since we're talking shop, whatever happened to your FX offering? Remember you offered FX. We sunset that. We don't do FX. We're futures traders. We found out we know futures better than anybody. Hence, probably the biggest futures prop shop. Man, we all came from the futures business. We don't talk pairs. We don't talk pips. We found that out. We're like, no, this isn't for us. We sunset it. So glad we sunset it. Don't want to be in that business. It's not the business that we wanted to be in the first place. We were all futures. I met John on the future. Andre traded euro dollars. Futures, Eddie futures, Mick futures, Danny's family futures, Hoagland's family, many generations of futures. So we'll stick in the business. My dad always said, go narrow and deep on one thing, Junior, and you do very well. So futures.
All right. We've got coming up here next. Of course, Mick's going to be with us here. Shoulder tap. So take a few seconds here, and we'll be right back with Mick and shoulder tap. Good morning, Mick.
Good morning, Eddie. Good morning, Michael.
What's happening? How are you?
Hey, I'm good. What's happening is I've got a shoulder tap for you. I know you were just talking about a question for FX. We don't do Forex, but we've got FX futures here at Topstep. I just wanted to clear the air there.
Yes, I'm glad you cleared the air because we don't do futures. Sorry, we don't do Forex. We do FX futures. So you can go over there and trade. What can you trade over there?
We offer all the big ones: Japanese yen, euro currency, Canadian dollar, Australian dollar. Not one of the big ones, Mexican peso. Am I missing any? British pound, that's a big one too. So all the popular ones, we base our permitted products off what has good volume out there.
Right. And good volume. And we talk about volume. We talk about these are real contracts traded on real exchanges. That's a big thing that we like in futures. These are real. Professionals trade them, institutions trade them, and all that kind of stuff. Sure, there could be an argument about all that in the FX spot world, but FX futures, you can trade that. And you can go to our permitted products page and see all the permitted products that TopStep offers. And if anybody wants to drop that link into any of the chats, please do. But Mick, tell me what tap on the shoulder is.
So tap on the shoulder, we're talking about traders that are in the markets. We're looking at all of our funded level traders, people in the express funded accounts, people in the live accounts. Going to feature some people that are doing well, going to feature some people that have room for improvement. And the purpose of that is we always want to talk about and highlight our traders that are doing well. But when we can talk about people that have areas for improvement, which most of us do, even the best traders are always progressing, learning new things, especially as the market environments change. We want to talk to our traders in our community about some things to consider for themselves that they might not have come across, or they might be falling into the same traps or bad habits that others are. So we're talking about everything.
Awesome. So we're going to talk about everything at the funded level.
Yes, everything at the funded level. Speaking of funded level, I want to shout out to Fred D., one of our long-term traders. I saw he was in the chat earlier in the broadcast today. He was trading live today. I also want to do a shout out to Alessandra. For those of you that were tuning in yesterday, I was talking about some fabulous performance out of her. And yesterday afternoon, we decided to move her from her express funded account into a live account. She's going to be starting with a little over 20K in that account. And nice. we are confident that, yeah, I like the cash register there.
Yeah, very nice.
We're confident she's going to keep doing what she's been doing. So really happy about that.
What made you bring Alejandra up to the live? And when you're trading on the live account, live trades, real orders, go to real exchanges. We don't keep people in sim if they're trading awesome. That's Topstep. Been doing that 13 years. You go straight to the live account if you are crushing it from the XFA account.
Major League.
Major leagues, yes. We have our group of elite traders we pull out of the XFAs and put them in a live account. We're looking at a number of things here, trading activity. We like consistent profitability over all else. Base hits. I was tuning in earlier, listening to you guys talking about base hits. That's a big part of it. She has had some big home runs, which is always good. I like the base hitters that eventually, they keep doing what they do and then they catch the home run. That's always fun. And those people tend to fare better than those that are always seeking home runs or swinging for the fence, because they have the biggest blow up days.
Yeah.
So with that, I want to feature a couple people. If we could pull up the trading card for Kyle Russell. Now, I didn't talk about him yesterday, but he's someone that we called up from XFA to live yesterday. A lot of good trading activity here. He'll be starting with about 23 grand in his account. He's actually been very good about paying himself too. He's taken 11,000 in payouts from his express funded account, which I like to call the XFA. So I think, everything looks good with him. He's averaging almost $1,000 a day so far, trading metals, equities, energies. Where I see a little room for improvement, and this is just me being, very picky here. I see he takes a good amount of heat on some of his trades. He has had the ability to turn those days around. So if you're taking heat on your trades when you put them on, that tells me there's an opportunity for looking at trade entry and location, and maybe being a little bit more patient, working a bid below the market or working an offer above the market instead of jumping in. But overall, that's nothing negative about him. I just see an opportunity there.
To that opportunity, when you say gonna pay him, ability to turn around losing days. So he gets in a trade, takes some heat on the trades. So his entries could be better, but typically, do you know his daily loss limit that he puts that he has? Because that, and then the size. So if you're trading a little bit small and you have a bigger daily loss limit, you'll be able to handle or stop, I should say, be able to handle some of that heat coming around.
Definitely
turn into profits again.
So Kyle's in a 150K, so he's got the $3,000 daily loss limit. I haven't seen many P&L lows that butt up to that, but I see on a lot of his winning days down, $1,000, $1,500, which isn't that bad considering he's been growing his account and he has the ability to risk more than that. I've just seen that on a lot of days. But hey, the guy's been picking the right side of the market because, you know, when he has seen that P&L low on those trades, the day ends in the green, positive.
Mick, let me ask you a question. I do see his products traded here. Nat Gas. How many? That was like called the Widowmaker at one point.
Yeah, you're not kidding.
We don't have a lot of people trading the natural gas, and I like seeing this because I haven't been too active in it, more so in the last few months as we've been range bound, but natural gas has had my focus over the last 24 months, 36 months. It's been the one product I've predominantly been trading, higher time frame, more so trend trading. So I love it. I love it. And it's a market that's got a nice daily range.
Oh, okay.
So yeah, and you know, when I started with Topstep many years ago, I would say that most of the volume from our traders, both in the trading combine and the live accounts, was all energies, predominantly crude oil. We've since seen people more so gravitate towards the equities, quick movement of the NASDAQ, the S&Ps and whatnot. But I always like it when I see people trading other things outside of those equity products because there's a totally different story there with the fundamentals and supply and demand and whatnot. So it's fun. Great question, Eddie.
All right, who do we have next?
Let's talk about Sean C. Sean C. out of New York. We got the East Coasters today being featured. Sean also got called up from the XFA to a live account yesterday afternoon. Look at that average daily P&L, about $3,200.
Pro ball.
Pro ball.
Yeah. Real level.
86% winning days. Can you do the math on that? 86% of the time, they're putting up almost $3,200 a day.
What's their counts?
They're going to be starting in the live account with a little over 23 grand.
Nice. That's a good nice
chunk of dough, and Sean did that in pretty short order. Not a lot of trading days to get him there, as you could do the math with that, 3,200 a day. So really good there. I do think there's some room for improvement with Sean. He spends more time in his losing trades than he does in his winning trades. Statistically, that's not where you want to be. It's been working out, but something to keep an eye on. My mentors over time, and that includes you, Michael, and you, John, people I talk trading with regularly. You want to be more patient with the winning trades and impatient with the losing trades. So something for Sean to consider if he's tuning in.
Cool.
So what else do I have? So we featured a couple good traders here. I want to talk about Brandon S. This is kind of a sad story, and it's been hard for us on the risk team to watch. Brandon's in a live account. We moved him from an XFA, started with a very large account balance. Now, it has not been going well for Brandon in the live account. He's on his 14th trading day today. He's having a good day today, up a little over 8,700 last I looked before I hopped on here. But he's on a 13-day 13-day losing streak since starting in the live account. And each one of these 13 days, he's hit his loss limit, $3,000. So do the math there. It's been very, very ugly. I am not featuring him today to put him on blast. I'm featuring him today to paint a perspective for everybody else out there watching. You can have a lot of money in your trading account, and if you're risking a lot of money every single day and your strategy is not working with the current market environment, this money can go so quickly.
So quick.
13 days at $3,000 a day, that's almost $40,000 in losses in 13 days. And it's not the performance we saw out of the trader when they were in XFA. It's not what we want to see. I will say, to all of you out there, as a rule of thumb, if you have a few losing days in a single trading week, that's a really good indication that your strategy is not working in the current market environment. Take the rest of the week off, scale back your position sizing, give yourself a personal loss limit. When things aren't working, we as traders need to have the discipline and responsibility to pump the brakes.
Yep.
early on in my career, I took multiple months off because I had some short bias in the soybeans, and I was getting smoked every single day. It was the best thing I did. Take a little break, come back fresh, because many people can stay in there and fight against the trend, against the waves, and they put themselves out of business. So I'm hoping that Brandon's turning a corner today with this nice winning day. Any winning day is a good confidence booster, even if you scale down and you can make $200 in a day. So string a few of those together, it's confidence booster, and that gets you back on track.
100%. That's why I wanted to kind of jump in here, make you talk about your bias and then taking a break. I was forced to take breaks. You don't want to be forced to take breaks. You know what forcing you to take? That means your account either blows out or pretty much blows out. So you can't put an order. You're just deactivated from trading. You can't meet the margins or whatever you want to call it. Right. I had that happen 3 times when I first started trading. I'm 44 years old, and when I started trading at the age of 18. I've been a trader my entire life. I think I've had one job that I've worked for, not trading, and that was only for like 6 months. I blew out of 3 separate $30,000 trading accounts, real money. I had a vending company. I didn't have a rich uncle, anything like that. Blew out of that. Had to take a break. A year and a half later, built up another 30 grand, put it back in the markets. I wanted to go with bigger money. I had this stupid, I want to go bigger. That all blew me out. So I hear what the last trader's going through. 13-day win streak or losing streak. We're going to talk about winners and losers. Nobody should be ever judgmental to anybody on the losing streak, because we all been on one. And we should learn from folks, because we all have winners and losers, and we all go cold, and we all go hot, and we all go red hot, and we all go red or freezing cold. Mm-hmm. Thank you for bringing that one on here. And that's kind of the risk that Topstep takes, at that level, on the funded level and live level. And that trader is in there, and the trader put up those profits too. And, so it's all something we need to learn from. Mick, I appreciate you bringing these on here. That's super helpful.
Yeah, of course.
Hey, Mick, before you go, have you smashed the like button?
I'm already wearing my tie.
I've not smashed the like button. Well, with the production camera over here, I got the computer at my back. I can smash the like button in a little while when I get back to my desk.
Each and every day.
I can do that. A couple parting shout outs I want to give for some good performance from traders that are always on my radar. Dottie from France, 15 grand today trading the S&P.
Way to go, Dottie.
Great job. And then Milda from New York. Really happy to see that she's up 6K trading the NASDAQ today.
I mean, this is great. So thanks, Mick, for giving us some insight.
Thanks for having me on. I hope you guys have a great day.
Thanks, Mick. You too.
Thanks, Mick.
Johnny.
All right. Hey, we've got a cut here. We've got Top Quiz coming up. And I know a lot of our traders are just waiting for this, because you can win a 1972 Monte Carlo with 427,000 miles on. Actually, you can win something better. We've got 50K, 100K, 150K coming up.
We should at some point do a prizes first places raffle off a rusted out junk car in a junkyard. You can get those things for like $200. Put it, take a picture of it.
Somebody would want it. I mean, somebody would say, yes, I will buy a raffle.
Oh my God, my old man would say, because he was a big car collector. He would buy
guy.
Yeah, he'd buy that stuff, and he'd buy it for parts. Oh, it has this part. And Junior, did you know that it has about $4,000 in parts? I'm like, what? No. He's like, yeah, you can't find that.
You know what, Mike? I tell you, I still got 47 Dodge Fenders in my attic, in my garage. In the shed over here, I got 238 Cadillac Fenders. I mean, these things are big, huge things. So my dad did the same thing. Yeah, there's money in that. But the thing is, Dad, you got to find a buyer.
Now my volume is back here. Let me say that if this is your first time here, Top Quiz will be 8 trivia questions, some about trading, most about random trivia. If you would like to join, go to kahoot.it and type in that game pin up there to get the game, and we'll get started in a couple minutes. I'll let you guys... there it is.
.it.
Robert will keep the ID and code in the bottom there, so I can switch back to the charts.
Should we drop the link into the chat?
Thanks, Jake.
Make a little clickbait easy.
Kahoot.it. Okay. And hey, if you liked what was going on, we're not done yet. No. We're going to have Top Quiz. Right after that, we're going to switch it over to Squawk Radio. We're going to bring Robert on, and we've got Paul, our coach Paul, is going to join us. And if you got any questions, by all means, for our coaches, please bring them to the YouTube channel, to the Discord channel, and don't forget to subscribe if you like what's going on.
Yep. So this is kind of the closing to the fast markets. I appreciated it. And we had a lot of folks on here. We're just getting started on it. We're going to trade. We're not going to trade. We're going to lose. We're going to have technical difficulties. The only thing we're not going to allow here is trolls. Unless you're trolling your baseball team, football team, or any sports team, then you guys can have that banter. But we're traders here. Everybody especially the Discord, Topstep Discord community.
And don't forget, we're going to have fun too.
You're going to have fun.
Oh, yeah.
If you're not having fun, then I don't know, go play Sudoku.
Sudoku.
I never got into that, but hey.
No, a lot of guys on the trading floor did. That was like the new thing.
Yeah.
Password, jumbo, and Sudoku.
They'd sit there, quiet mark. So that's another thing. When markets get quiet, it's good to have something there to entertain. Hopefully you guys enjoyed Topstep's TV's Fast Market, where we try to have a bit of certified tradertainment. I'll be on, John will be on, Hoag will be on, and all those great people that dropped in will be on. And you got more coming on right now, but I'm going to leave you guys. I'm out. I'm going to get back to some Topstep meetings and stuff like that. So great job, funded traders, and great job to any of those that traded well today, and anybody that didn't trade well today. Hopefully filled up your think tank at the very least and got smarter for tomorrow.
All right.
Yep.
We're out of here.
You. Thanks,
I'm
everybody.
Eddie.
We'll see you
It's
soon.
Michael.
I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a stick up. She picture perfect, so I told him I'm a flick up. Feel I'm in the mood for a change up. I leave the city and return with my change up. They got amnesia, don't remember how they played us. They wanna knock me down, but somehow I just stay up. Look. Straight from the mud like Ruby. Straight to the stage, they love me. I understand they hungry, but please don't hate, that's ugly. I've been sliding, shaking, moving. I've been popping in my city. Shawty say she love the way we do it with me. I be too turned up to ever give a yeah. I ain't come to argue, let a please, baby. They been talking pennies, I need bigger bucks. About to catch a flight, I need to switch it up. Got that black boy joy, might do my dance on him. Take no disrespect, might put my hands on him. Hit this chicken, now she wanna marry me. But she gon' need some closure and some therapy. Came back to the city with my bank account on F. Giving rappers, I know they happy that I left. Hit the south in winter, I just put down my deposit. 82 degrees, I left that jacket in my closet. I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a stick up. She picture perfect, so I told him I'm a flick up. Feel I'm in the mood for a change up. I leave the city and return with my change up. They got amnesia, don't remember how they played us. They wanna knock me down, but somehow I just stay up. Hey, look, came in with the what's that? Left out with the who she. Laying game like 2D. I been kicking like Bruce Lee. Margarita to the brim tip. Black denim need a slim fit. Same people that I flex with be the ones that I'm in the gym with. I'm a living legend, you a dead cause, and I'm dead. No, I'm dead, right? Leaving early, but I'm here night. Long and short to keep the head right. Teed up out in Malibu, got sand all in my good shoes. With the pessimism, but I only came for the good news. I am the show that they came for. Hitting the target I aim for. We've been discussing the contract, just telling they get what they paid for. I am not with poverty. Really, it started to bother me. I need the yacht with the property. They come with the view that you gotta see. Came up from the basement, hit the rooftop with a passion. Bad with some good credit and a good sense for the fashion. Dope blowing with the left hand, gripping with the right hand. Uber share to the airport, I'ma hit you back with my flight land. I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that say stick up. She picture perfect, so I told him I'ma flick up. Feel I'm in the mood for a change up. I leave the city and return with my change up. They got amnesia, don't remember how they played us. They wanna knock me down, but somehow I just stay up.
Hello, everybody. Hope you enjoyed that music. Seems some people were getting turnt in there. I'm joined by Nick Dolby today for Top Quiz. How you doing, Dolby?
I'm doing great. I've never heard anyone call me my full name, so I'm a little bit... I feel like I'm in trouble already, and I just started.
Nicholas Dolby. Well, you could get a lot of trouble in that shirt.
Yeah.
All right. For those that this is your first time, how this game works is there'll be 8 questions that I have combed through trivia to find, and I believe are to be true. Your goal is to answer them correctly. They are multiple choice, and you get points for how fast you answer them. Now, there is an 8-second delay between YouTube, where you are watching this, and the words coming from my mouth. So look at your device. The questions will pop up there first. And Nick, because of that delay, you're playing with me. If you know the answer, we'll wait until we're at about 5 seconds on the clock before you say it, all right?
There's a slim chance I'm going to know the answer to any of these questions.
You'll know a few of them. Now, we play this every day. That's the plan. We're giving away 3 trading combines, 150, 150 to the top 3 people. If you can't get in right now, I got to cut it off at some point, but there's always tomorrow. So have fun with this. Hopefully it's a good time. Still see his names pouring in. Might give a few more seconds. My Lord. Okay, you ready for this, Nick?
Oh, yeah. Born ready.
Okay, let's begin the top quiz. Top quiz 497-2023. 3, 2, 1. Question number 1. In 2012, Guinness World Records named this character the most portrayed literary human character in film and TV. Was it James Bond, Hercules, Sherlock Holmes, or Batman? Any thoughts? You can talk it out, Nick.
Ooh, literary human character, I'm gonna go Sherlock Holmes. I don't know the answer, but I think that's gonna be my guess. I think Hercules is too old, and you'd think that IP would carry through. I feel like Sherlock Holmes has been around the longest.
That is correct.
Yeah. There we go.
Second, I have so many screens open over here.
Taco Master said Batman. Interesting.
One second here. Well, that's why I gave the side note that it was based on the 2012 Guinness World Records. Here's my screen. I cannot find... Well, the show must go on here, Nick.
Yep.
Let's just assume that we're still streaming right now.
I'm on a win streak, so got to keep this going.
Scoreboard after one. Dan Trader is in the pole position. Oh, man. This is the thing about a live show. Okay, there we go. Back now I can see what we're doing. All right, Dan Trader, congrats. Next question. Question number 2. What is the CME futures month code for August? Is it Q, N, U, or X?
Oh,
it's a tough one. I traded bonds where they didn't have this.
Right, I guess. Well, because for equities, it's only quarterly, right? So you only get 4 of the...
You get the U's, the N's, but Q is the month code for August. Looks like we have a few oil traders or commodity traders in here.
I should know that. I'm out of practice on that one.
After 2 questions, the leader is Nighty Night with a K. Love it. D Nice is in second, and Bob is in third, but there's a lot more game to play here. All right, next question. What is this northernmost capital city on planet Earth? Is it Stockholm, Reykjavik, I think that's how you pronounce it, Oslo,
Iceland,
or Moscow? Now, yesterday we did the southernmost, Nick. Any idea here?
Let's see. I went to private school, so my geography is terrible.
It's Iceland.
I think Iceland, yeah. How much time do I get?
You get the same 20 seconds they do. We're on a delay, though, so you can't answer right away.
Oh, my goodness. I need to apply for, what was that thing in high school? You have to apply for, extra time?
Oh, yeah.
Do you remember that?
I do remember that. If you had, needs that needed to be addressed.
Yeah, I got many. So I need, an extension.
All right. Next up, let's see the leaderboard here. D Nice. I think that's how they say it. I don't see you on here, Dolby, but you're just playing.
Well, I'm 1 and 2.
In 2008, a rogue trader at MF Global lost $141 million in one session while trading what futures contract? Is it bonds, oil, equities, or ES, or wheat futures?
Well, it's not wheat, that's for sure. I'm going to say bonds.
Are you so sure?
No, I don't believe in myself at all, but I am going to say bonds.
It was wheat futures. Yes. Talk about a bad night. You can, Evan Dooley ended up, I believe, going to jail for this, but started piling on wheat futures in the night session, and they didn't have their risk on. They weren't monitoring them, lost $141 million. It's quite the story.
Yeah, I mean, I'm gluten intolerant, so I would have a short bias pretty much perpetually against wheat.
Yeah, now MF Global's out of business now, and probably because they did things like, let someone lose $141 million trading wheat futures.
Hey.
All right. Bird Alert has moved into the top spot. All right. Question number 4. How many different quarterbacks have started a game for the Chicago Bears since 2000? Is it 12, 18, 24, or 28?
Oh, let's say 1 a year. I would say 28. We've probably started more than 1 per year.
Oh, we have started many quarterbacks.
Yeah.
And you are right, Dolby. It is 28 quarterbacks. Now, as we check the leaderboard here, I'm going to take a sip of water, and you will soon see why. All right. You ready for it?
Oh, yeah.
Here are all the quarterbacks that started for the Bears
fast
as I can since 2000. Cade McNown, Shane Matthews, Jim Miller, Chris Chandler, Henry Burris, Cordell Stewart, Rex Grossman, Craig Krenzel, Chad Hutchinson, Jonathan Quinn, Brian Greasy, Kyle Orton, Jay Cutler, Todd Collins, Caleb Haney, Josh McCown, Jason Campbell, Jimmy Clausen, Matt Barkley, Brian Hoyer, Mitch Trubisky, Mike Glennon, Chase Daniel, Nick Foles, Justin Fields, Andy Dalton, Trevor Siemian, and Nathan Peterman. Yikes.
God, that's so many.
We are such a bad football team. Hopefully, we get some relief this year. Bird Alert still on top. Black Swan knows some Chicago sports. Let's go. Next question. In the final season of Game of Thrones, what modern object made a mistaken cameo in the background?
I know this one.
A Los Angeles Dodgers baseball hat, a McDonald's bag, a Starbucks cup, or a laptop computer?
The season that shall not be named.
Yeah.
Yeah, that's going to be a Starbucks cup.
Yeah, you are correct on that one.
Yeah.
Yeah,
they were in a rush. The producers wanted to start working on Star Wars, I believe, and they rushed the script, and then they ended up not even getting the gig for Star Wars. I think they ended up losing it.
That was such a disappointing last season. Just thinking about that is making me upset.
It buried 5 quality seasons. It was so bad.
It certainly did. I'm scanning YouTube right now. All right. Some people saying no idea about American sport. True. We'll be doing other giveaways too, because we understand that, you know, the trivia, we have a lot of international traders. There will be other stuff that we do along the way. All right. Let's do the next question here. 2 more. Bird Alert still on top.
Good job.
All right. And Bashy coming in. Here we go. What is the largest freshwater lake on Earth by volume? Sorry, Caspian Sea, because that's got some salt in it. So is it Lake Michigan, Lake Baikal, Lake Superior, or Lake Victoria?
I think it's Superior, actually.
Well, by area, yes. But
but not by volume, huh?
Baikal is very deep. So yes, that's a crater lake in Russia. It's crazy deep for a lake. Really weird place. All right. Let's see our leaderboard going into the last question. We got Bob on top, Bird Alert in second, Maz in third, Kaka and Lil Stegs in striking range. One more question, Dolby. You ready for this?
Oh, yeah.
All right, here we go. The term jumping the shark originates from an episode of what popular 70s TV show? Was it Good Times, All in the Family, Happy Days, or The Partridge Family?
Yeah, I know this one too. This is a good question. And a great saying as well. I believe the answer is Happy Days.
Yeah, on that account, you would be correct. It is indeed Happy Days. So, Nick, great job. I just want to tell you that before we reveal the final winners. If you are a winner, I will send you an email sometime today with how you can collect your prize. And here we go. In third place, Bird Alert. Congratulations, Bird Alert. In second,
well done.
Maz. And that means number 1 is Bob L26. Congratulations, you 3. Runner-up. Sorry, Lil Stegs. Better luck next time. Nick, thanks so much for joining. Right now on TopstepTV, we're going to take a 5-minute break, maybe a little bit less, and then Eddie's going to start up right away with Squawk Radio. Might be shorter than that. I'll have to check on what Eddie's doing. Thanks, everybody, for watching. Keep trading. And I was going to say keep trading and trade well. That's silly. Monitor your risk. Make good decisions.
There it is.
Have fun and trade well. We'll see you.
See you guys. Thank you.
need it all. Do you want it though? Where do I begin? I see the hate, they don't wanna see me win. Bank deposits, I got more coming in. Top down, throw the money in the wind. I don't want it all. Heard he scammer, had to switch up the accounts. Moving paper, gotta call up my account. It's all in, I can have it coming out. And through the struggle, I can see another drought. Yeah, it's not a purse, it's a merch. 6 figures was a gold, now it's 9 or a hearse. Put it work. Used to pull up, not swerve. No time for the snakes, trying to put them in the dirt. That's word. I gotta get it, it's in my DNA. You only see the highlights, don't know what it takes. Last year, stressing, got no sleep. Now I'm right between the courts, out of nosebleed. Yeah, I see the hate, they don't wanna see me win. Bank deposits, I got more coming in. Top down, throw the money in the wind. I don't want it all. Heard he scammer, had to switch up the accounts. Moving paper, gotta call up my account. It's all in, I can have it coming out. And through the struggle, I can see another drought. Yeah, same circle, to the same gang. We just get to it, we don't gangbang. Lost some friends to the same thing. Keep a low pro when we maintain. Find us in a lost somewhere, kicking back. Find you on computers, type it Twitter facts. You lose a follow, throw a Twitter at. I lose a dollar, bet I get it back. Like a boomerang. My girl likes diamonds, big one shining on a ring. I got 3 daughters, you could bet that they gon' get the same. But they got more, I'll be damned if they sell out for change. They won't sell out a thing. I lose it all, you bet I get it back by any means. I trust in God, won't be a dollar that can make me change. I got that power, I could get anything. I got that power, I could get anything. Where do I begin? I see the hate, they don't wanna see me win. Bank deposits, I got more coming in. Top down, throw the money in the wind. I don't want it all. Heard he scammer, had to switch up the accounts. Moving paper, gotta call up my account. It's all in, I can have it coming out. And through the struggle, I can see another drought. Another drought.
All right, welcome back, Squawk Radio, and we've got our good friend Robert with us here today. Hello, Robert. How you doing today?
I'm doing just wonderful. How are you, Eddie?
Good. Had a good morning here today. Lots of good information going on, and had a lot of participation from our traders and those that were watching, listening, and we got our 500 likes on our YouTube channel. Actually, it's up to 614 right now. So Michael's got to wear a tie tomorrow.
He does. I was there for that.
You here? Rob, you here with us? Hello? You here?
Yep, I'm on.
Okay.
Check 1, 2.
All right. Barely hear you.
I'm on.
Anyway, there you go. Okay, now you're back. All right. What we're going to be talking about here today, one of our topics, I know yesterday we talked about having, looking at charts, your game plan, strategies and so forth. I think today we're going to talk about the trader's enemies. Lots of things that sort of keep us from moving forward. And maybe some of these that we're going to talk about are things that hold you back. If you've got any questions, please post them in the YouTube channel and or the Discord channel. I know, Rob, if you can watch that Discord channel, I'll watch the YouTube channel. Any questions that we do have. Okay. But coming up here at 11:30 Central Time, we're going to have Paul, one of our coaches here at Topstep. He's going to be coming in talking about ways he's helping traders, situations with traders, and he'll have a good story for us, and of course, a bad story. There's always a good with the bad and the bad with the good, but watch out for the ugly. Let's start this off, Robert. My biggest concern with trading, and I mean, this is human nature, talking about greed. Greed is, to me, a four-letter word. Okay. It is the nasty, the root of all evil as far as trading goes. Because, I mean, if you can sort of center everything around greed, there's always, most of the time, I'm going to say, not always, but most of the time, there's a losing trade in there somewhere, or you're losing something, or you're being reckless with greed. Now, one thing that I do tell my traders is this has to be left at the door, and it's easy to say, but it's very hard to do.
I am 100% agreement with you, and I'm going to put that the greed part in perspective, right? So when I switched from a job, so to speak, to full-time trading, the number one thing for me was to say, well, what was my salary at before, and can I do that now? And that's actually what made the transition. I actually added 20% to it, to be honest. I had a salary, and then in order for me to cut to full-time trading, I needed to make my salary plus 20%. It's just slippage, losing days, taxes, stuff like that. So that was the transition part for me. So where this fits into greed is that if I go for my salary, and let's just, I'm just throwing, let's say it's $10,000 to make it easy. So $10,000 salary, 20% on that is another $2,000, right? So that would be, I need $12,000 for my trading. Why would I go after $75,000 in that case? That's the greed factor. So I take that $12,000. Well, it's $1,000 a month. If I'm doing around $1,000 a month in that scenario, that covers it, right? Do I need to do $1,000 a day in that scenario? No. And if I push for that, that's not realistic. Not at that point, not at that stage of the game. So where the greed gets in is we see it. I've been there on both sides where I've clicked a button to buy or sell, lifted my finger off the mouse and went, wow, I just hit my daily profit target in 15 seconds. I have also hit my daily loss target limit in 15 seconds too. It's just the way that it happens. So once you get there, it's like, well, what do? I only traded for 15 seconds with one trade. What do you do at that point? You walk. You close your day. You close it down, or go to paper, look at a different instrument, get in a chat room or something, and continue that path of it, rather than being like, well, that was easy. Let me take 5 more and see if I can make 5 times the amount. Those are the days where you're up to your target and you end up closing with a red day. So yeah, greed is definitely the part of it. They always say there's fear and greed, right? And
it's the creeper.
I got to put greed over that. Yeah, I got to put greed way up over that one. It almost, I don't want to say that's easy, but it almost looks too easy, right? When you can get into a trade, you click that button, you click that mouse, you make that trade, and you turn your head, sneeze or whatever, and then you look back and you're like, wow, that was $500, $200, $1,000, whatever it's going to be. It just hits your target, and you're like, wow, that was easy. Let me do that again. And those are the ones that get you.
There's 10 things that I would suggest. And number one is set clear goals. Define your trading goals and stick to them. Determine your risk tolerance, your profit targets, stop loss levels when entering a trade. Make sure it is a clear path and a good plan to help you stay disciplined. Another thing is using a trading plan, a game plan. Do you have this? Follow it, commit to it. Risk management. You got to implement strict risk management techniques. You never risk more than you can afford to lose on one single trade. Right? Remember that. Never risk more than you can afford to lose on one single trade.
Right.
One of the common rules of thumb is risk no more than 1 to 2% of your trading capital in a single trade. Now, Rob, how would I figure 1 to 2% in my trading capital?
Well, it's the trading capital is what your losses are. So if we take the 50K account, for example, it's not 1% of $50,000. Your loss limit, maximum loss limit is $2,000, right? But you can only lose $1,000 for the day. So what would that translate to? Well, $1,000, 10%, you move the decimal point, is $100. And then 1% would be $10. Now with futures intraday high leverage trading, it's a little tough to figure that out because if we have $1,000 limit, loss limit, that's going to stop us out for the day. If we take 1% of that, it's $10. That's going to be your commissions in and out of the trade. So we need to put it in perspective with the account that we're trading. With every respect, it's more risking the amount of your account. I think is more of a longer play than the short term amounts, and only because we're talking small number of dollars. If you say 50K and you want to base it off your 50K account, that's $500, right? 50,000, 10% would be 5,000, 1% would be 500. That's more realistic if you're playing on the same leverage. But if you think about it, if you can only lose $1,000 to lock you out for the day, and you lose 500 on your trade, you're losing half of your account in one trade. So it's just trading small, trading smart, getting in, getting out. You don't have to hold trades that go against you. None of this averaging in or leveraging in or averaging down or dollar cost averaging, whatever the term you want to use. If that trade's going against you, there's no need to jump back into it to try to double up on the way back up again if you're long. Just get out of the trade. If you get out of the trade right there, you're going to take a small loss. Sure. If it comes down, comes back up around, you can get right in where you got out for your win if it goes that way. But if it goes down and does not come back up again, you save yourself a big loss. Be smart. Yep.
Be smart. Okay. Another thing too, avoid over trading. Over trading. It's a common result of greed. You've got to sort of commit. You got to stick to your predetermined number of trades. What's your average? A lot of times I looked at a trader pool, 13 trades one day, 16 the other, 18 the other, and then 180 the next. And it was like, oh, that broke the rule. Right. We tend to do that, and it's not that we want to. We put ourselves in a position where we're not thinking clearly. It's like having a cinder block tied to your ankle, and they throw you in the lake. Okay, you're kicking and fighting to try to keep your head above water. I tell you, it is avoidable to avoid over trading. You just get in this sort of, I don't want to say groove. What's the opposite of groove? But it's a negative groove where you're just, let's try it again. Let's do it again. Let's do it again. And usually that's when your account's in a hole, where you're saying, okay, one more trade's going to get me out of it. Another 100. All right, the next trade, this is going to get me a good trade. And you just keep digging the hole deeper and deeper. Another thing, you got to set realistic expectations. All right. Understand that trading is not a get rich quick scheme. It's not. It's a lot of work. And you got to set realistic profit expectations to your trading process. Now, this is another thing that greed loves to eat. Another thing, stop loss orders. Okay. Always use stop loss orders to limit potential losses. It's like free insurance. It's like, hey, if the market goes against you, not what you're seeing, it's going to limit your loss. So consider that. It's I tell you, it's a common trap for greedy traders that don't use that. Something very, very important that we need to know. How about taking profits? Okay, take profits for your trades. Don't get greedy by waiting for the market to give you maximum profit. And I firmly believe, I mean, this is a different view from a lot of people. Take what the market gives you. I am happy if any winner is a good winner in my book. If it's a $50 winner, okay, fine. You know what? Book it. I'll look for the next opportunity. As long as it's a winner, and you got to put this in perspective. If me and Rob are walking down the street and there's a $50 bill on the ground, I'm going to try to get to that quicker than Rob and put that in my pocket. I might even push him out of the way in front of traffic just to get that $50 bill. But I mean, put it into perspective. US $50 is a lot. Don't be upset that you're working an order and the number's coming out and you got to get out. And I'm only up $75 on the order. Oh, now it's only up 50. I got to get out of this trade because of big numbers. And you take the $50. Don't be upset. All right.
No, just take it.
It's a winning trade. Sure. Book it. And it's a little confidence booster, but it's still a confidence booster. Another thing too that I like to do, and I know you're not too hip on it, is stay informed. Keeping a good eye on the news, keeping a good eye on what's going on behind the scenes, keeping a good eye on what's coming on over the wire. This is something too that you got to keep yourself informed about the markets and of course the assets you're trading. Have a good understanding of market conditions and how markets can fluctuate. Now, you're not one to really hip on the news, are you?
No, I just don't trade with it. I don't let it influence what I'm doing. If there is news that's coming out, we had oil and gas prices and stuff that's coming out, and there was news around that. Fed was talking today, and one later on today actually. I just go flat. For me, it's just not worth it. We can trade 23 hours a day. We don't have to. For me anyway, it's like, oh, it's coming out at 10:30. Well, just 10:15, 10:20. Just stay out of it for a little bit. Let it happen. Let things go around. Let them go crazy. And you can get a good move if you're on the right side of that. But if you're not, if you have your stop on, you're just going to get whacked right out of it, and then maybe it goes the other direction. To me, it's just too volatile. It's a little risky. I hate to use the word gambling because some people get it right, but it's just too unpredictable for me. Not that we can predict the market, but if you have something going, it's drop, it kind of goes along. You can not predict, but you have a higher probability that this might keep on going. Then if you have a news event, we have no idea what's going to happen. A lot of times, if it's going down, it spikes up, drops right back down to where it was, and keeps going. If it's going up, it'll drop down, come right back up to where it keeps going. So that's usually what I keep an ear to it, just for information. Being like I don't. Doesn't matter to me like what happened with oil today. I just thought, all right, oil came out. All right, I'm in a trade. I'm not in a trade. Let's just wait for it. Be aware for me. Be aware and pick your spot. Excuse me. I want to comment on the over trading part of it too that you touched on earlier, Eddie. For definition, because a lot of traders will ask, especially in coaching, and say, "Well, am I over trading? I'm taking X amount of trades per day." Well, it depends on your style. If you're, like you alluded to, if you are constantly taking 5, 8, 5, 7, 9, 8, 3, 4, and then you have a day of 57, that's an overtrading day. But if you're constantly in the 50 trade range based on your style, and you're doing 50 a day consistently, it's not really overtrading. Might be your style. I'm roughly around 30, 35 a day. So
we're all different. Yeah, to each his own.
Yeah. Yeah,
You know,
but it's just when it's
whatever
out of
your
context.
wheelhouse
If you're only taking, if you're only taking 4, 5, 6 trades a day, like Hoag said this morning, if he takes 3 trades a day, he's, that's good. He's between like 1 and 3 a day. If he took 17 the next day, that would be over trading for him.
Right. Another thing too is one of the basics: patience, practice, patience. I mean, you need to be patient. Wait for the right trading opportunities. I mean, never force trades, or what we all like to do, chase markets after the hottest trends, just because you got that FOMO going, fear of missing out. We talked about that yesterday, and once again, if you miss this bus, there will be one right behind it very shortly. So if you miss an opportunity, don't freak, don't get pissed, don't chase the market. You're only going to hurt yourself in your account. But wait for the next opportunity. How about emotions, Robert? Emotions definitely can hijack an account. You got to learn to recognize and control these. And once again, easy to say, hard to do. And sometimes you don't realize that you're being emotional until it's too late. Right. So keep that in mind. 100%. Once again, emotional control sort of leads to FOMO and the desire for quick profits. Oh, I need my money. And that's where the greed sort of steps in. Rob, we're human. How do you control your emotions when you've sort of fallen off track?
Oh, that's a tough one because I still struggle with it. It seems to be I don't want to say a daily battle, but maybe every third day battle it comes, and it's not just winning or losing trades. It's sometimes missing. Right. Literally today, I was doing some back-end work for TopstepTV. I needed to use the little boys' room, and I just kind of went out and came back over here and looked at my chart, and I was like, dang it, that's the move I was looking for the last 45 minutes. And that can be an emotional response to it. But as you say, I agree, missed the bus. We're just going to wait right around because there will be another one coming around the corner. I'm a very short-lived. I make appear like, calm-wise, as far as personally, I'm an emotional person, but I'm like a bottle rocket, I'm just like, if it's up and I'm really good, I'm like, wow, awesome, yay, congratulations, that little piece I worked on, I'm like, whew, all right, what's the next trade? And then if I'm losing, I'm like, dang it, son of a, and I'm out, what's the next trade? So that's the part of the recognizing the emotion. It's okay to have them, it's okay to recognize, but that's the way that I control them, is by acknowledging, experiencing, and then cutting it off and forgetting about it. Each trade is its own trade. Each day is its own trade day.
Right. Each trade. That's good. I like that. How about when we do make mistakes, when we do get reckless, when we do get impatient? Review and learn from this. That's the best education you can have on something that needs to be adjusted, fine-tuned, fixed, is the experience you've had with that issue or that problem. And if in fact you have corrected it, if not, and you're still sort of spinning your wheels wondering, what the hell am I doing? That's when you got to reach out. You got to reach out and consider it like coaching or a mentor or a trading buddy, or ask one of us here at Topstep. I mean, we open up the chats and the questions all day long. If there's something that you're having a problem with and it is following you till this day, reach out to one of us. Perfect timing now is the Squawk Radio coach's call. We've got Paul coming in, and he's another one of our all-star coaches, and we're going to talk to him. So we'll keep that in mind. But Robert, anything you can add while I get Paul, or while I get Paul in here?
Sure. Yeah, we talked about the emotions and handling your style, trade your way. Knowledge is power, and take a look at other traders, other styles. Talk to the coaches here. It is free coaching at Topstep as long as you're in the program, you're in the combine, or you're in a funded account, whether it's express funded or live funded. Plenty of coaches here, happy to speak with you. It's all free. Just be part of the program. That's all. These shows, Topstep TV, is all about that live training every morning, right? We have the opening call with Hoag. We have 2 hours with MP and you, Eddie, and Hoag, and then guests coming on, and I jump in and do stats. Mick comes in and does a shoulder tap, gives congratulations or kudos or corrections. Danny comes in with talking about Crude. There's so much information here. Take advantage of it. That's kind of where I was going with all that. Take advantage of it. All of the opportunities we have. Round the clock Discord is nearly 24/7. There's traders in there. There's ambassadors in there helping out. There's coaches in there, specific areas. And then you have the streams like this. You get the Squawk Radio. You have Topstep TV. It's all here. We're all here for you. Take it easy. Learn something. Prep, trade, reflect. That's what we've been doing. A lot of prep, trade, reflect, prepare it, trade it, and then look back on it. Just like last thing I'd mentioned there is to review, right? Review, rehash, relive. A nice little saying you got.
Right. Oh, definitely. Well, Viper says, thanks again, Horn and Cooney. Arson's got a problem, and we're going to bring Paul in if Jack is available. We can get Paul in. I've told him to click the links here.
Is he in the thing there? Yeah, just taking a look at it. Jack, who we lovingly refer to as God, which is GAWD or GAHD. It's not a religious thing. We just lovingly, and he's behind the scenes, the voice in the sky. You all saw him just a few moments ago on the top quiz. It's
indeed. I am here. Okay. I don't see anyone in the group yet, so I'll keep you posted if we can get Paul. All right.
He said he clicked on there. Let me make sure here. Both links.
And while you're doing that, we all traders here, all have our Topstep books. I'm not huge on journaling, a big journaler, but I definitely am a proponent of it for those that it works for. I'm more of a, hey, this is what happened in the market. I've been doing this a while, so I know, I know my answers. I think I don't have to read about what's going on. Write down like, how did I feel on this trade? How did I feel on that market?
Yeah. 1 second here. I got to get him. Yes, I will do this. I'll get him.
All right. Well, we thank everybody for being with us. If you're still here on YouTube, we still have it open in the Discord channel as we get Coach Paul in. We had Coach Jay yesterday. I think he is still listening. I just saw him commenting here as well. Oh, I hear somebody coming in.
All right.
Yeah.
All right, he's coming in here right now. Of course, Coach Jay, we had him on yesterday, and I'd love to talk to Coach Jay. And as Michael said, Patak, we're looking to open this up as far as group coaching. Instead of the one-on-one, where not only learn from our coach, but learn from the trader next to you, or the trader behind you, or the trader in front of you. And I think this is going to be much better as far as getting problems out there, getting problems solved. And there might even be a question or a comment coming up that's like, you know what, that's right. Every once in a while, that happens to me. So working on that in our Discord channel. Do we got Coach Paul here? I think we might have him.
Yeah.
Hello, Paul. Yes. Got your camera on? I don't see you. Okay. You got him, Jack?
He is in Wirecast, but I do not see a camera.
Okay. You're in Wirecast, do not see a camera. You're in Rendezvous. Yes. Your camera is not on. All right. Well, while he's trying to fix that,
It's got to turn it on before you log in Wirecast, so it picks it up. I had to do that also. So when you log in, there's a thing right at the top. I'm pointing at the screen, but you can't see me, and maybe you're not. It's going to turn it on when you go log in. And
As
then
I've said before, this is one of the fun things that happens when you're doing a remote show.
Mm-hmm. First time, too. You got to get in there and get used to it and see what it's all looking for. And
well, while he's trying to get in, we got some questions here, Robert. Artson's asking, my problem is I cannot stop to trade. My profit target is 800 a day. But when I reach my PT profit target, I said to myself, I can make more after than I lose more than 50% of my profits. Well, here's the thing. First off, $800, that's a very healthy day. I would suggest to build confidence, break that up a little bit. 2468. Break it up into $200 increment. Once you hit that first one, 200, got it. Once you're up 400, all right, I'm halfway there. And I mean, not always you're going to make $800 a day. You might just make that 400, but still build confidence on your targets that you're hitting. Another thing too is, let's say you're up $600. What I suggest to my traders is they need to manually put some of that profit in the untouchable folder. And what I'm talking about untouchable is money that I can't trade with anymore. So if you do start a losing trend, that money you're taking something home. As long as you don't go negative. You're up $600. You know what? I'm going to take $400 home today. So I can trade with 200 now. And if I lose it, c'est la vie. If I lose it, you know what? I gave it a try. Still wanted to trade, but I'm taking $400 home. That's a good day. So consider that. You don't want to lose anything more than that. So hopefully that helps, Arson. Rob, what's your take on that?
it's pretty much the same way, my friend. We're in full agreement. $800 is a good day. It's a good day for me anyway. It's not my target. It's a little more than my target for daily. But if you're up at $800 and you're looking for more, we 10 or so minutes ago we talked about greed. Is that a greed factor? We can look at it that way. Let's put a positive spin on it. You hit your goal. So once you hit your goal, we need to stop. Right? What are we going to do? We've hit our goal. We've accomplished our task. We've done what we came here to do. Sometimes it's in 15 seconds. Sometimes it's in 15 trades. Sometimes it's in 3 hours. But we hit that goal. I'm going to go to the store and I'm going to get some steak for dinner tonight. And I like to have a steak that's this big. I'm not going to buy 10 of them just because I got my goal. I went to the store. I got my steak. I'm going to end up wasting. Yeah, I'm going to end up wasting that stuff. It's hard. And listen, thanks for the comment. It's hard to do. It's not easy to do, but it's part of the game. It's part of the rules. It's part of the process. And it is slightly different for everyone. If I had an $800 a day goal and I was at 710 for the day, I would probably walk. I just have the discipline for that. If I have a $500 loss limit for the day and I'm down 300, sometimes I walk at that point. It's just, how am I doing? What am I feeling like? What's the market doing? You're going to have winners and losers. Take that 800, take it, split it up, just like Eddie said, put 400 in your pocket. It's like, all right, well, I am now 400. Now you have your goal of 8. You only have 400 to lose. But I hate, really with a passion, giving back money to the market. I don't mind losing. It's part of the game, part of the process. I don't like giving it back.
That's a good one. Actually, you got a little prop here. Great analogy. Hitting goals on the day. Why would you want to buy more steaks? Roger likes it. All right, we got
full disclosure.
Paul.
I'm a full on carnivore, so I always buy more steaks. So let's
figure you. Well, I think we got Paul on here. Maybe he can help us with the next question. Let's get him in here.
All right,
Paul. What took you so long? You missed the bus?
Hey, I was lost in space there.
Who were you? Were you Penny or were you Will?
Not doctors. What was it, Zach? Zachary Smith?
Danger. Oh, the pain. The pain.
So good to be here.
Very nice to have you, my friend. And I think last time I saw you, we were drinking booze and fraternizing with our traders.
Yes, it was a great time.
It was a good time.
Really enjoyed it.
And I'd like to thank all those
just glad to
traders
be
that were
here.
there.
Yeah, that was fun. It reminded me of the floor days. So
Trading floor
camaraderie
days.
and
Yeah. Let's do this. Paul, tell us about yourself.
Okay.
And what you do, and why you're here.
Why am I here? I've been in the futures business since I was 19. It's 40 plus years. I started out on the trading floor. Long enough ago, I started out as a board marker. So,
were you bored? What's a board marker?
It was you chalk the prices as they came across.
Yeah, you'd be on the board.
The jet.
You'd be watching the trades.
Yeah, and then you'd be watching the trades. You'd miss one, and the members would throw things at you.
Did they really?
Oh yeah, because I started at the Mid America Commodity Exchange. The original mini contracts was across the street from the Board of Trade. A lot of the great traders came from the Mid-Am because they had to trade the market much like today. And they traded mini contracts, smaller versions of the big contracts. So it was a great place to learn, where you could afford to take risk. And you could afford to lose your account and come back, which is very common and still common today. Some of the greatest traders around, like Richard Dennis and the Turtles, they started at the Mid-Am, where they could learn their craft. So one of the reasons I'm really happy to be here and join this is that's much where most of the traders are today that we deal with.
Yeah.
So
then you gave from there. You're from the trading floor. You know, I've got the same sort of story. Started as a runner at the CME. Not too many people threw stuff at me.
Well,
I wasn't a big target. But see, the thing is, I had my a lot of people sort of knew who I was because of my sister. She was filling the S&P, so it was always good to have somebody that established themselves on the trading floor. Once you got your job on there, but so we got you here at Topstep. Very happy to have you as one of our coaches.
I'm glad to be here. I really enjoy it. One of the things that I really I think is great in that Michael saw the vision is that on the trading floor, you could learn, and you had people that were willing to teach you if you were willing to listen. When I was younger, I wasn't quite as willing to listen until I kept on making the same mistakes and said, well, maybe I should listen to someone who's been here before. And in that environment, as you all know, you find a mentor and just watch you and go, okay, are you finished making the same mistakes? If you want to succeed, you should follow these principles, or they would help you. When the floor went away, there was a void that I think Topstep is filling, in that, all wisdom comes from experience. The experienced traders that could survive and then thrive all had to learn how to trade. From my experience, trading is about managing risk. If you're not managing your risk, you're not preserving your risk capital, you're going to have a great percentage of failure. I know I did it many times, until one time I just said, I can't do this anymore. I can't just,
You hit the wall too, right?
Yeah, you hit the wall.
You hit a wall. We all do.
Yeah.
And more than once.
Well, I was really good at it. There was one time when the S&P was rallying for like 2 years, and I was trained as an economist. I majored in economics, and none of the fundamentals made sense. And this thing, it had to go down. It was too high. So I got good at selling the highs all the way up. I was really good at it. The problem was I kept on making new highs.
Yeah.
Right. So going with the trend, number one, that's the one that I learned is because I like to fade. It didn't work for me. I used to make fun of buy the dips. People were like, the dip buyers. Well, you know what? That worked. So I'm like, well,
right. Well,
maybe I should do what works. Yeah.
Markets change, and sometimes that's not always the fix, But, Paul, we've got you here. We got you here for about another 15 minutes, but I want to see if we can get to some questions here. Maybe you can help us out, help the trader out. This one's coming from DL. DL is asking, how about if I'm up in the morning, say you trade a 5 lot, then in the middle of the day, you only 1 lot. Then if you trade in the afternoon, you trade a 3 lot. If positive out of the gate, you don't give back more than 20%. Now, I think what they're saying here is the fluctuation of contract size. I think it just sort of matters in your P&L. What's your number? How many winners do you have? How many losers do you have? You say don't give back more than 20%. That's okay. I would say, I don't know. Like I mentioned before, the $600, I'm taking $400 home. I'll trade with $200. If I lose it, I'm still taking money home. If maybe I turn it into another $400. Okay. I mean, this is something that you've got to sort of work out. What do you think about that, Paul?
Well, in my plan, I don't like to vary my size unless I'm, because I like to maintain the same risk when I enter and follow a plan that is consistent. But one thing is, you're up money. Has anything changed in the market? I learned from my mentor Peter Stottlemyre to take one side of the market. So if I'm buying it and the market's still rising and I'm making money, and then there's another signal to buy, I'll take it. But at some point, you have to just take profit and walk away. And that point is, how much money do I have in my account? If I have a $2,000 account and a $50,000 combine, and I'm up $600, and I'm feeling pretty good. I think that's good, and I just be glad to take that. I've done well, and end the day, or put on a 1 lot and see if that runs to the close. But far too often what happens, if we stay in too long, we start getting greedy and we start making emotional decisions. If it's not in your original trading plan and you're outside of that and you're trying to push, you're in a place that if you start giving back any of that money, what's going to happen mentally? And that's where it all starts. It happens. I was really good at that. I wanted to stop being good at that. And so I highly recommend to take your $600, walk away. You're up, think of percentages. You're up, and if it's a $2,000 account, you're up about 30%. Is there any other place that you can get up 30% in a day? So
to put it in perspective, the S&P over time has been up 10% year over year over time. Warren Buffett, it's like 17% over time. So if you're up that amount in a day, 30% like that, it's staggering. It's absolutely staggering. Now, is it sustainable and is it consistent? Right? You got to put it in perspective. It's so easy to get those big eyes and get that factor, that green monster on the back, and just feel like, wow, look at that, $600. It took me 7.5 minutes. I can do that again. It's like, no, or maybe you can. And if you can, take your payout and open an account with yourself.
Well, going back to it, it's about consistency. Right. And if we go back, and I just reread this book, Mark Douglas's Trading in the Zone. And one of the greatest, and I can't, that's a hallmark. Read that. If you haven't read that and you're a young trader, read that. Because really it becomes about being consistent. When I was younger, because I didn't know how to, I was stubborn. I wouldn't take losses. Okay, so I'd be rewarded when there was a directional market because I was on the right side. I would run it up, and then I have euphoria, and I couldn't be wrong. And then when markets changed, I just give it all back. So I wasn't consistent. I was on the roller coaster. Consistency is trading a plan, taking proper risk, taking proper profit. And that's the key to long-term success.
Right. Cool. Another question. Paul, is it possible to be a profitable trader without using the dome?
Sure. Absolutely. We all have different personalities. We're all human. We can all have different ways and different perspectives of the market. Going back to the floor, how many different people had different ways of trading, but they knew their role and they knew their execution and they followed the rules. All right. So you don't have to have the dome. Heck, you could.
We never had anything on the trading floor.
As long as you're consistent and you manage your risk. I can't say that enough. Preserve it. Number one rule is preserve your capital.
Right.
Without your capital, what do you have? You can't trade. Game's over. Because I really have this belief that
game over, man.
The game is that early on when the Nintendo came in the late '80s, early '90s, I was addicted to it. I loved it. And I would say, I'm
still a junkie.
Yeah. Well, it was a Madden football. A friend of mine, we just go up in the office after, and we were grain traders. So we were done at 1:30 and we play for hours. We're like, I will never forget. We were like, we should get other people and do a league. Well, who else is going to play this? Right. But why you bring that up? And if you're a gamer, you have a life, right? And then you have to protect that or else you have to reset. All right. And then you do it and keep failing until you go, well, the only way to win this game is to keep my life. I put that that's my, my risk capital. That's rule number one. Preserve your risk capital. And then your plan is to trade through your plan But, the principle is this. Preserve that capital. We've all heard it. Cut your losses, let your winners ride. Practice good risk management. Mm-hmm. That's the principles. We can all have different rules as long as they follow the principles. So if your observation and your rules come from following the dome and it works, keep doing that. Do what works. If it's from following a 5-minute chart, do that. If it's from a half an hour chart, do that. But consistency comes from following a plan that manages risk well, trades, letting your winners ride, cutting your losses. How you do that is, it's up to you, but it has to be consistent.
Right. Cool.
Spoken like a true pro right there.
Yeah.
Well, thank you.
Now, let's see.
By the way, I had to fail to learn this.
Well, yeah, guilty as charged.
Guilty as
we all are.
Ray Dalio puts it best in his book, The Principles. If you haven't read that, read that. And by the way, Ray Dalio, one of the largest hedge fund manager, started out in the futures business as a hedge.
Wow.
Yeah, read that book. In that, he has a concept that's called struggling well. And that's what trading is all about. We can struggle well, or we can struggle poorly.
Yeah.
Following
emotional aspect of it. Mm-hmm.
Yeah, exactly.
Read another question coming up. Rob, you trade the overnight. What's a safe number?
I do jump in now and then. Mm-hmm.
Okay, what's a safe number of contracts to take during the overnight session? This is coming from Jamin.
Jamin, that's a loaded question, my friend. Depends on what overnight. First of all, Asia, at the beginning of Asia moves more than middle. When you get close to that London Open, 2 a.m. Central Time, it gets more volatility, then it kind of fades out a little bit. Then you go around 3 or 4 a.m. and you have the algos and stuff start kicking on and start doing that pre-market movement stuff. So it depends on what you mean by overnight, number one. Number two, it depends on the instrument you're trading. 3, it depends on the account size you're trading. And 4, it depends on what your risk tolerance is like. So this is a loaded question. One thing to keep in mind is that it does, for lack of a better term, move slower. And when we say slower, there's just not a lot of up and down movement because we trade price, right? Not necessarily time. So if you have the structure around what your particular trade is and you put that trade on, and let's say you're going long and you're expecting 20 points, limiting 20 points, it might be 2.5 hours versus during the US session, it might be 2.5 minutes. Right. So it's going to be a lot of patience up there. So I wouldn't worry so much about changing the number of contracts, but more so changing the size that what you're going for. Just look at it. Excuse me. I'm an NQ guy and the market's moving. It was a couple hundred points today. Well, in the overnight, it's only going to be about 50. So I can't expect to make 50 points in the overnight because it's only moving 50, and you got to get that top and bottom tick. Doesn't happen very often. You can pull 50 if the market's moving 200 or 300. So you have to adjust it accordingly. So I wouldn't be so focused on how many contracts. It's more so of how should I trade it. If you are looking for that and you're like, oh, there's a 50-point move and it's only moving 10, well, now you have to use 5 contracts, right, to do that equal amount. But at the same time, the risk is still there, if you're trying to play that game. So I would suggest just taking it, not increasing on the contracts, but reducing the amount of movement that you're actually looking for based on what time that overnight is in the instrument you're trading.
Okay. You're getting a shout out here, Coach Paul, from Trading Futures Daily. Nico says, hi, Coach Paul.
Hey, Nico.
From Nico.
How you doing, Nico? Great trader.
Really? Tell us, you know what? How about a good story? Before we go here, we got a couple more minutes. This doesn't have to be this week, last week, whatever. One of your good stories of how you helped the trader and where they ended up.
Well, Nico's a good example of, Nico works on executing his plan, and there were some struggles, and at one time it was struggling poorly. I mean, we all go through that. But he's willing to learn and willing to observe his losses, go through his losses, and find out where it was not working. And then, and was very, very good at it. And now that brings out, opens your eyes to doing the right thing. Mm-hmm. Sometimes we won't look at it. We're like, well, the market was wrong. We can go through all those emotionals, but then he came back and corrected it and got on a run. So that's why we're here.
See, the thing is, you mentioned he got on a run. When you said that, the most important thing is that he fixed what was broken or what was wrong. And that's usually the hardest. And then comes the trading, because you can't bypass that and all of a sudden magically become a good trader. So correcting what is holding you back, like you said, Paul, this is more important than the charts and everything you have in front of you. This is more important. This is comparable to the mindset. If the thing is, you're never going to progress if you cannot fix what is wrong, if you cannot adjust what is holding you back, if you cannot reach out and ask for help. That's the only way I got my shit straight. Was saying, okay, you know what? I threw the towel in. I'm spinning my wheels. I ain't getting any. Very frustrating every day. And coming Friday, and you'd look at your numbers, you'd be like, and then coming in Monday would be like just so stressful. What's the market going to do to me today? Bend me over, kick me in the head? Probably. Probably. And you got that mentality where it's like, well, I'm waiting for it. Oh, here it is. Another loser. All right. Another loser. But that's a mentality. That's something else you got to correct. The mindset, a lot of traders and a lot of coaches, they firmly believe that, don't worry what happened yesterday. Okay, well, that's cool. But the thing is, if I got a $1,200 loser yesterday, and then today's today, the next day, I can't forget about that. I got a lot of work ahead of me to get back to zero, to get back to flat. And sometimes that can be a wall, just getting through that. So, it's tough, but what is wrong? And please don't be ashamed to reach out. Don't be the bullhead. I was the bullhead. I was an idiot. Okay. I was a bullhead, and now nobody's going to tell me nothing. I didn't think there was much more than what I knew. But gosh, you get with somebody and they open up a whole new world for you. Oh, look at this is, give this a try. Or how about this? Would this work for you? And that's what I did. That's what I did. I said, okay, enough is enough. Enough is enough. I need to try something different. Honestly, what was said to me is like, you're not going to be on this floor much longer. You keep doing what you're doing. Straight up.
Straight up.
No sugarcoating, no. Be okay, hon. Working really hard.
Yeah.
No. And Paul, on the trading floor, if you didn't do good, man, they kick you in the ass and put the next guy in or the next girl in.
You don't have money in your account. You're not getting it. You don't have an account. It was brutal, but it was true.
Yeah.
And one of the, I've been bringing that mindset. There was a guy named Everett Clipp on the Florida Board of Trade. There's an elderly gentleman just with a Western bolo tie, and he trained some of the best traders on the floor in a financial room. And I knew a couple of them, and they were, I'm friends, and I'm struggling, and these guys are and he goes, and the guy I'm talking to him, he's like, well, our mantra is love your losers. And I'll be we're on TV, so I won't say what I said to him. I couldn't, but I'm like, you love your losers? Here, love my losers. Take them, because I wouldn't take responsibility for my losers, right? I never understood it. Right, and it was like a while later when I kept on I wouldn't love my losers. I just avoid them. They just became bigger. And like you said, I came to a place. I'm like, it's really it's a dark, deep place. I'm like, okay, and then it clicked. I can take losses, and I actually, when I did well, I was like. Someone asked me, what happened? I said, man, I'm the best. I lose really well.
Best loser wins.
Best loser wins. Another great book. I learned how to lose well. I didn't take it personally, right? Because we're brought up to fight through, especially, at least males, when I was in the 60s and 70s, fight through adversity, right? Oh, yeah, maybe not in this arena, because I would do that, right? Who are you fighting? The market?
Yourself, just yourself. You're getting to the crux of things. Yeah, you're getting to the crux of things here. I'm going to bounce off the show here momentarily, but I did want to leave something that I've heard recently, and I don't understand and cannot figure out why I have not heard this in the past. With all the self-help that I've read, with all the trading strategies and psychology that I've researched, I don't know how recently, and I mean within the last month, I heard this particular force setup thing from John Maxwell. And if you guys know about it, it's the 4 reasons people change. And I'm going to print this off and pin this because it makes all the sense in the world. It's not just trading, but we have to change. We have to adapt. Just like you said, love the losers. Eddie, don't worry about it. Your loss. There's the next best coming around. Me with the emotional side of things and blowing up or not. This is the reason. There's a 4 reason. John Maxwell. I got to give the shout out for this this author here. Here they are, and I will put them in the chat when I'm done here. The 4 reasons people change. People change when they see enough that they're inspired to. They change when they learn enough that they want to. They change when they receive enough that they're able to. And they change when they hurt enough that they have to. That just hits every single part. You got to see it. You have to learn about it. You have to get the pat on the back for it and get the growth with it. And then you got to have enough damage that you actually want to.
Right.
Yeah, it covers all the. It's a beautiful thing. I don't know why. Maybe you guys have heard of this, but of the books that I've read and everything, I don't know why I just came across this a month ago. It's always learning, right?
That's a good share, Rob. Post that in the chat.
I am.
Post it in Discord. But Paul, I appreciate you being with us here today. We got you back again next Thursday.
Yes, and thanks for having me. I really enjoy it. Eddie, good luck with TopstepTV. You're awesome. I'm glad to be a part of this. And Robert, one of the most disciplined, focused people I've ever met. So it's great to be here.
Like that, ain't he?
Yes, he is. It's funny. We talk real quickly about different styles. He's like the complete opposite of what I do. I put on small positions and let him run. He is direct, focused, precise. He finds it in and out. Like I said, plan your trade and trade your plan.
You got it.
That's where it comes from. So
100%.
Glad to be here. Thanks for having me on.
Thanks, buddy.
All right, guys. All right, appreciate that, guys. We'll
All
be
right.
back again tomorrow with Coach's Call. And I do think we got Coach Vince going to be with us. Andrew, 8th FXA account blown in 3 days. I need help. If you can, bring that back tomorrow. I know we've got to be moving on here. We're already 6 minutes after the hour. And CC, you got a question about Crude. If we didn't get to your question, bring it back tomorrow, please. We'll get to those when we do Coach's Call. But once again, guys, thank you very much. And don't go away. If you like what you heard, smash that button. Be a subscribe to TopstepTV. But coming up next is one of the podcasts I did with Dr. Brett Steenbarger. You've heard that name before. Trading Psychology 2.0. This might help some of us here that are listening too. Now, tips avoiding common pitfalls, how to keep a trading journal, and always ways to learn from trading mistakes. We talked about that, trading from our errors. So we're going to put this on here. And then coming up at 1:30 to 2:30, we've got the Hoag. And Coach Ray's going to be with us. Boy, I tell you, a lot of coaching stuff. Hey, there you go, CC. And bring your questions to the 1:30 session with Horn and Hoag, and we'll do that. Andrew, you too. Stick around. We'll get to these questions. Just remember, we're here to help, and we appreciate you being with us. So until then, take care.
This is Limit Up, the place where we explore markets, strategies, and trading psychology to take your trading to the next level.
Hey everybody, this is Dan Hodgman from Topstep, and today we're going to take a look back at one of our podcasts from earlier in the season with Brett Steenbarger. Pretty excited to listen to this and kind of prepare for some new interviews and things that are going to happen for season 2. But to keep things fresh, we're going to sit down with Mark Meadows right now, and Mark's going to talk about some stuff that we heard from the Federal Reserve recently. Mark,
let's move this up a little bit.
And trading business. And I'd like to say
exchange is December highs.
There we go. We're moving it up here.
Great opportunities coming up in the future with the equity markets.
Awesome. So let's launch into our conversation with Dr. Brett Steenbarger. Eddie, take it away.
Well, it's a complete honor, and I'm going to call it an envy for many to introduce my guest, author of multiple books on trading psychology, including The Psychology of Trading, Enhancing Trader Performance, The Daily Trading Coach, and Trading Psychology 2.0. He's also worked with prominent traders and hedge fund managers. He also runs Trader Feed blog at traderfeed.blogspot.com, which I'm going to tell you right now, if you don't have bookmarked, you should. And I'd like to say, welcome, Brett. How are you today?
Doing well. Thank you very much, Eddie. I appreciate the opportunity to be part of the podcast.
This is a great time for many traders to be able to listen to Dr. Steenbarger's knowledge, shared knowledge, and what you do say. And, as I was going through a lot of the blogs and the podcasts, and the bottom line is I can say that it makes complete sense on your approach. And, a lot of educators try to teach what you talk about. Now, if we could, let's jump right in. Now, you've worked with some of the best traders of our time. What is it about how they approach trading, and what makes them great?
Well, the successful ones truly do approach trading as a performance activity, just like an Olympic athlete pursues sports as a performance activity, or a world-class actress or actor pursues their craft in a performance manner. The successful trader is always working on their game. They're always reviewing performances. They're always learning from performances. They are always working on themselves. And that's a huge part of what makes a performance activity lead us to ultimately to peak performance. The term that's used in the research literature is deliberate practice, where every performance is treated like a practice, where we learn what we did well, where we learn what we didn't do well, and keep setting goals, keep improving what we do.
Now, you mentioned performance a few times, and if you sort of go full circle, everything that is taught in the trading business has to do with performance, whether it is discipline, patience, management. You need to be your best at those points. Now, performance is every bit as much about maximizing your strength and minimizing your weaknesses. Now, if we can, let's drill down on that a bit, because it's very easy to get self-crucial. Let me ask you, much of trading performance is in being self-aware. How do I know what I do well in trading?
It really does take some study. It takes some review. One of the things I've written about on the blog and also in the books is that in any performance activity, the elite performer spends more time working on their performance than actually performing in competition. So if you think about the amount of hours and days spent by a basketball team practicing and the amount of time they spend in an actual game, there's a lot more time spent in working on the game than in actually playing. And the same thing is true when actors and actresses rehearse on stage, or musicians rehearse. They spend more time in preparation than they do in performing. Many traders spend their time in front of screens, trading, and relatively little time working on their trading or studying their trading. And as a result, they have a hard time learning what their strengths are. They don't really review their successes. They don't review their mistakes. And so they end up not really understanding themselves, and therefore they can't really develop themselves.
Yeah, I don't want to say quick fix, but as a trader, trading electronically here, what are some of the red flags that we might see or that might warn us, hey, you know what? You've sort of veered off the path a little bit. You need to get yourself back on the path. What can we at least break down from our trading? And how would we break down our trading and find out what are those culprits?
Right. And I think it's a good question. I would just add that I do think it's important to find out what we're doing well, what our strengths are as well, so that we're reviewing the positives that we can build on as well as the negatives that we can correct. For several different firms, I've been involved in the recruitment process in hiring traders to manage money. And one of the red flags for the recruits is when I hear from them, I really have a passion for trading. When someone tells me that, I basically know that they're fucked. That's a technical psychological term.
Right.
Yeah. No, seriously. The real successful ones have a passion for markets. They have a passion for understanding markets. They have a passion for mastery. And trading is the result of that. The ones who have a passion for trading, it's like having a passion for playing poker or having a passion for playing roulette. It becomes little more than gambling because they don't really have the passion for working on their game.
Mm-hmm. No.
So here are a few things that traders will do. They will set up processes both for preparing for the market day and for reviewing their performance on the market day. Preparing for the market day means looking at where opportunity is, what's going on in the world. It's culling ideas, talking with knowledgeable people, and putting that together into some tentative game plan for what you think is moving and how you want to try to exploit that. So there's a whole preparation process that starts before you place that first trade. And some of that preparation process is self-preparation, getting yourself into a peak performance state, both mentally and physically. So many traders I work with will work out in the morning before the market opens. They might do some meditation and get themselves in a clear, focused mindset before the market opens. So they're working on themselves as well as preparing for that trading day. And that's all part of a process that's repeatable, that becomes a set of positive habit patterns. Now, on the back end, there's the review of the trading day. What did you do well? What could you have done better? How do you want to use that information to set goals for the next day? And once you set a goal, how are you going to pursue that goal? What's your plan for putting that goal into action? It's not enough just to say, oh, I'm going to try to do this better, I'll be more disciplined. No, specifically, how will you do that? With a number of the day traders I work with at SMB, you might be familiar with them, we have a daily report card. Every single day, they're sending out a report card that goes to the other traders, that goes to their team leaders, that goes to me, that goes to their mentor. So everything's public. Everyone's commenting on everyone's goals, and it really gets people focused on working on their game.
Now, Brett, you mentioned passion for trading is not what someone like you wants to hear. Now, a lot of traders I hear say that. And
exactly,
you know, I mean, I just want to sort of corral everything you said after that regarding, you know, you got to have a passion for looking at charts. You got to have a passion for watching the. Doesn't it all sort of fit into a same category? Like if I was to say I've got a passion for baseball, I'm a professional baseball player. Baseball is my passion, but you know, I'm a pitcher. I'm working on my curveball, my slider, my fastball. You know, I mean, I'm sort of trying to cover it with saying baseball is my passion. Am I sort of misleading myself when I do say that?
No, not necessarily. Yeah, there was a well-known basketball coach at Indiana University, Bob Knight.
My goodness.
And, yeah, Bobby Knight, yeah. And I have a lot of good feelings for Coach Knight. And, you know, he said the will to win, many people have that. Not many people have the will to prepare to win. And I think he is spot on. It's not just the passion to win, to trade. It's the passion to prepare for victory, to work on your game, to work on understanding markets. That's where the passion lies. It's a process passion. Mm-hmm. Many people have an outcome passion. They want to make money. And yeah, that's good. Of course you want to make money. But that's what their passion is. And so you know what happens? When they don't make money, and certainly we all go through losing streaks, when they don't make money, there goes the passion. And they're not working on themselves. But if you have a passion for understanding markets, you're going to be at it day in, day out. You're going to be looking at it weekends. You know, one of the things I also mentioned in my book is that the great traders, they're working on, they're looking at markets, they're thinking about markets, they're working on their game when the markets are closed. Other traders, when the markets close, they're not working on anything. They're not really focused on anything. That's the difference.
You know, I got to agree with you there because when I get on my soapbox, always talking about making yourself better when the markets are closed. Never shortcut. Never half-ass, because all you're doing is you're cheating yourself. And I completely agree with that. Now, Brett, you talked about developing a trading process. Now, in a recent said that we have to pull our egos out of look at what the market is really doing. Part of that's going to be trading journal. It's something that everyone talks about, but is harder to do in practice, as you're mentioning practice. Now, what are the core elements to a successful trading journal?
Yeah, there are really two issues embedded in what you've just asked me. And so if I could address both of them, because I think they're both really important, and I'm glad you pulled them out. The first one is taking and what I was referring to in the blog is just like a psychologist, like myself, you have to be effective, you have to be a great listener. And when people's egos get involved in trading, they want to call the tops. They want to call the bottoms. They've got their view of the market. They're a perma bull. They're a perma bear. You know, right. There are a lot of idiots in this world. You know what? No, seriously, there are a lot of. Anyway, so. But when you're a good listener, you're sitting back and you're seeing, what is that stock telling me? What is that market telling me? Readers of my books know that I follow a measure on the overall market called the NYSE tick, T-I-C-K. It's $tick on most platforms. And it's literally every moment in the market of how many stocks are upticking, trading an uptick, and how many are trading on a downtick. And so every moment you're seeing, are we getting more upticks down, more downticks? Are we, and that's flowing. And the market will come down and will start to make a new price low, but there are fewer downticks. And then all of a sudden it bounces up, you get some upticks, it comes down, and you can't get the downticks. And you realize you're listening and you're feeling that action, and you're realizing the sellers can't push it any lower. And at some point you get a good risk reward entry and you say, I think we can go back up into the prior range. And there becomes trade. That's the result of listening, taking the ego out of the equation. It's not about your view. It's not about you predicting what the market will do. That's ego stuff. It's you following the market. So that's the first part.
All right. And like they say, leave your ego at the door. And
yeah, it's not about you. It's you being attuned to the market. And it's too much mental wear and tear if the ego's involved, because great when you're winning, and then you get overconfident, and then you feel like shit when you're losing, and then you miss opportunities. Over time, it just takes too much of a toll. It's not about that. Like I said, it's like being a psychologist. As a psychologist, I'm there to listen to the person I'm meeting with and understand what they're telling me. If I make it about me, how much help am I going to be the other person? I mean, but it's funny because we see how when we apply it to something like being a psychologist or even being a parent or a spouse, but people make that mistake all the time with respect to markets.
I like that. I like that a lot. What you just said. You got to be a psychologist. Listen. No.
So you'd also ask me about journals.
Journals, trading journals. Now, we talk about them. We preach, use a trading journal. I know here at Topstep Trader, in the broadcast, we've got a thing called the community journal, where everybody sort of puts in their good, the bad, and the ugly.
That's great.
Now, why is everyone talks about it, but it's harder to do in practice. What are some of these elements, the core elements, to be successful having a trading journal?
Yeah, so there are two types of trading journal. One is the kind of journal that you keep about yourself, and the other is the trading journal that's actually about your trading, and both have their places. We'll start with the trading journal about the market. All too often, what people do with trading journals is they will vent. Everything they did wrong and the mistakes they made, and these people are manipulating the markets. It's the algos.
The algos.
Yeah, exactly. Yeah, so but it's a way of venting. There's nothing constructive in that, right? I mean, they're not really working on anything, setting any goals, anything like that. The minimum journal that I talk about in my books is just write down 2 things. What's the one thing you did best today that you want to make sure you continue doing tomorrow? And what's the one thing you did worst today? What's the biggest mistake you made today that you're going to make a concrete effort to change and improve tomorrow? And then, how am I going to do that? How am I going to make sure that I do that one best thing again? That's the plan. And how am I going to make sure I correct that one mistake? If you just do that, I mean, that's a small journal, relatively speaking. If you just do that every single day, think of the compounding effect that has day in, day out, over the course of a month, over the course of a year. You're constantly refining yourself, strengthening your strength, correcting your weaknesses. That has a huge cumulative value. So that's a trading journal. You're concretely focusing on your trading and what you could be doing better. The journal about yourself is more about monitoring you and making sure that you're in your peak state. So I encourage people to keep a journal, not only about their time in trading, but basically about their personal goals for the day, for the week. What are they trying to accomplish? And we set up a structure for that to make sure that they're firing on all cylinders in their personal life. Are they doing things that bring them happiness? Are they doing things that bring them personal fulfillment? Are they doing things that give them energy, that keep them in shape? Are they doing things that build their relationships? These are key areas of emotional well-being, and we can track those and we can work on those just like we can work on our trading and keep ourselves in a peak emotional and cognitive condition.
You know, what you just said there, involving your life as a whole. For those listening to this podcast, I would suggest that you just rewind and listen again. What Dr. Steenbarger just said, that is just so important to make your success in your career a positive one. I mean, it has to do with everything in life. Otherwise, there's always going to be that gap that you cannot fill. So, well said. And on my end, I'm taking that to the bank.
Yeah. And the broader point is that trading has to fit into your life. Your life can't fit into trading. If your life fits into trading, then the ups and downs in P&L are going to be too much to go through. If you are diversified in your life's portfolio, you know, if you have many sources of success, many sources of happiness and fulfillment, then when the trading's not working out, you're not devastated. It's one thing that's not going right that you can improve, but the rest of your life is keeping you energized, keeping you focused.
You know, working on the trading for 2 decades plus, I saw a lot of that where, you know, people traded. They came to work. They came on the trading floor. It really, they didn't belong there. There was a lot of people that came to the trading floor each and every day where you saw them and you said, you know what, there is a professional. But you know, the professional obviously was one to repeat year after year, profits and good trades and good mannerisms. And then those that traded, that really, in my eyes, were like, boy, you don't belong here. You need to do something else.
Yeah.
They would make money here and there, and it would be like a jump every time. Like I mentioned, gaps. There would be just so many gaps, and they would be hanging on for life in that business. So it was a very unhealthy thing. And once again, what you said, you need to sort of work both work and family life and your life all together to make sure things do work.
Absolutely. And if trading can't work for you for some reason, if it's not your ultimate path in life, then you're going to have a happy life. the trading fits into your happy life. The trading can't make your happy life.
Right. And, a lot of people just don't want to let go of that and move in a different direction. So it's a healthy thing. You want to be healthy in any career that you decide you love. Now, let's talk about the Trading Psychology 2.0. Now, Doctor, this was your latest book. All right. Now, I think this was meant to be an update on your first book. Was it possibly the Psychology of Trading?
Yes, it really, the newer book, the 2.0, represents a lot of the things that I learned in the course of working with traders in various strategies, various markets. So it was an update, I think, in my understanding, an attempt to broaden out the field, because so much of what I was reading in other places about trading psychology seemed pretty narrow and incomplete.
What has changed your thoughts about the market or applied trading psychology over the years?
Well, you read the traditional books on trading psychology, and what they talk about. They talk about how important it is. You find your edge, and then you have to be disciplined, right? You have to, be consistent with your edge, and that success is derived through being emotionally controlled, and not letting your emotions get away from you, and being disciplined. And I found that absolutely was not true. That what would happen was markets would change over time.
Mm-hmm.
At one point in time, markets are moving with a high degree of momentum, or perhaps trend. At other times, there's an anti-momentum. Things are reversing, and things are very choppy. Sometimes things are very volatile. Sometimes things are very narrow. And different parts of the market lead at different times. What was an edge at one point in time suddenly goes away. And so what I was seeing was that the most successful traders and portfolio managers were the ones who are most flexible, the ones who are most creative in viewing markets and seeing new sources of opportunity. The ones who are super disciplined, that was great as long as their edge continued. But as soon as that edge eroded, they were consistent in doing the things that didn't work. And so it's like the discipline is necessary but not sufficient. We have to be able to be creative, adaptive. We have to be able to see how things are moving, listen to markets really well, and adapt our trading to what we are seeing and researching.
Right. And now with the electronic trading, we have so much information in front of us. I wanted to ask you, what's your takeaway on the open outcry versus the electronic trading?
Well, and that transition's happened for a while. I think the transition now is from small data to big data, and the use of computing and methods, quantitative methods, to assist the trading of discretionary traders. So that trend toward hybrid trading. If you, at any of the places where I work, where I'm involved in hiring, and there are several, if you were to say, if a person were to apply for a position as a trader and say, my edge is that I trade these and these chart patterns or indicators, that would be the end of the interview. That's done, that type of trading.
Mm-hmm.
What we're seeing is that people who can combine a discretionary, intuitive read with some bigger data analyses of what's going on, that's where there's particular edge. And that's a huge change. That, when I wrote my first book, that was not going on nearly to the same degree.
Right.
So it's a great example of the need to adapt as markets change.
Now, Doctor, let's run through a couple of common pitfalls that many of us do have here, and what you might suggest to the trader as a way to overcome it. One of the things, let's start out with over trading. And sometimes, I catch myself over trading, and I'm caught up in the moment. I see another opportunity. Over trading. What's your thoughts?
Yeah, over trading is by definition trading based on our needs rather than on what we are legitimately reading and hearing in the markets. And so that's one of the reasons so many traders find it helpful to engage in meditation before they trade, where they get themselves calm, they become more mindful, and they're in a more receptive state to just follow what the markets are doing rather than get caught up in their own needs. That mindfulness, that self-awareness really helps them. The other thing that's very helpful, Mike Bellafiore calls it developing your playbook. Just like a football team will have a playbook. Yeah, that you have certain plays, certain setups, certain ways of trading that have worked for you, that you have studied, that capture some edge in the marketplace. And when you study and study and study your playbook, that allows you to stick to those plays, to focus on those, to mentally rehearse those before you start trading, so that you're less likely to trade for random reasons and emotional reasons.
All right, let's move on. How about another one? Not sticking to loss limits, limiting yourself, making your own rules and not following them.
Yeah, that's one of the deadly ones. The risk management is so key to success in markets. Because without sound risk management, we never survive our learning curves. And so whatever loss limits we set, we really want to set them in stone. And so to journal about those, to rehearse those mentally before we start trading, to size our positions so that we're not going to just automatically hit those limits. Very, very important. One of the things I've written about on the blog is a basic rule that I've had and that I've used with day traders I've worked with, and that is to make sure that you don't lose so much money in the morning that you can't come back in the second half of the day. Make sure that you don't lose so much in one day that you can't come back on the week. And you make sure that you don't lose so much in 1 week that you can't have a profitable month. In other words, you're thinking about risk management in terms of always giving yourself a reasonable opportunity to battle back. And I found that keeps people positively, constructively focused, and prevents them from digging big holes, both financially and psychologically.
Right, Doctor, how about overconfidence? We talked about ego, and ego can be a big hole for getting overconfident. What's your take on a trader being overconfident?
Yeah, I'm glad you're asking about it, because it's an unappreciated risk factor. If we start losing, often we'll pull back from trading and pull back our size and be careful. Become extra careful about following rules. That's all good. But when we go on a string of winning trades, it's easy to feel like we have the hot hand, and we start to size our positions larger. We start to talk to ourselves in overeager ways. I could make this amount if I just, and that means that we're not focused on risk management. And when the time comes when we inevitably will have some losing trades as markets change, we're sized so large that we can give up the prior gains relatively quickly. So I work with traders on exercises where they take their emotional temperature. It's the checkup from the neck up. Every so often during the day, you take your temperature and you follow your self-talk. And am I chilled or am I running hot? Am I calm and focused, or am I getting upset? Am I getting frustrated and angry? Am I getting overconfident? And again, it's back to that self-awareness so that throughout the day, traders are stepping back, assessing themselves, and keeping themselves in the right zone.
Doctor, we talked to a lot of traders. You've talked to thousands of traders. I've talked to hundreds of traders. One of the big things that seems to be a real problem is accepting losses. I think that could probably sort of apply to overtrading, not sticking to loss limits, overconfidence. But they cannot accept the loss, walk away from a losing day. What's your thoughts there?
Yeah, I think that not only do you want to accept a loss, you want to embrace it. Because there's a good possibility that in that loss, there's something you could learn from. There's something you could improve. Maybe your read of the market or your read of the particular stock or instrument you're trading. Or maybe your read was pretty good, but you didn't trade it very well. Maybe you didn't manage the position very well or size the position very well. But usually with a loss, there's something you can learn from that loss. So the idea is sometimes you win, other times you learn. And you embrace the losses as learning lessons. Those go into your journal. They become goals for the next day. And your losses are there to make you better. That's the idea. And so you can embrace them. You don't have to be threatened by them. You could get better from them. And that's a much more empowering attitude. And it allows you to not go on tilt, during those times of frustration when we have a string of losing trades.
One thing I heard from Hall of Famer Willie Stargell, played with the Pittsburgh Pirates.
Oh, yeah.
And, one of the questions was, Mr. Stargell, how did you hit so many home runs, hit over 500 home runs, Hall of Fame? And they asked him what benefited him. And he said, benefits me, it helped me hit 500 home runs was striking out. And they asked him, why would that help you? He goes, because when you hit a home run, let's just sort of compare this to trading. When you have a winning trade, of course, it's celebrated as you get in and get out. When you get out, you're like, awesome, great trade. And you go on to the next thing. But when you have a losing trade, as Doctor is talking about, you dwell on it. You should dwell on it. And that's exactly what he did. When he struck out, he'd go back and sit on the bench and think about it and break it down. So next time, if that situation arises, he can take that situation and he can gain on it. He can turn that negative into a positive and benefit for himself. So I've always taken that with me. When that was said, I heard it and I'm like, wait a minute. Okay, explain yourself, Mr. Stargell. And it makes complete sense.
Absolutely. At the time, it doesn't feel good. No, we're all, people in markets, we're all competitive, so it doesn't feel good. But quickly you go into the mindset of, okay, why did I strike out? What could I have done differently? Next time, I'm going to look for that off-speed pitch. Next time, you know what? There's a tell there that in certain situations, that pitcher, he's going to throw his heat. And I'm going to watch for that. And I'm going to lay back. I'm going to be ready for that. And that's learning from the strikeout.
You got it. Agreed. All right. Well, Dr. Brett, let me ask you something here. If you could go back in time, let's go back in time. I bought a time machine on eBay.
All right.
So I want to invite my friend, Dr. Brett. Let's go back in time. All right. And I'm going to let you tell yourself one thing. When you started out, all right, so we're back in time. What's that one thing you would tell yourself when you started?
About trading, you mean?
You started about trading.
Yeah. The one thing I would tell myself is that if you're going to approach trading as a career, you're always going to have to be learning. You're always going to have to be developing. And that every edge in the market has a shelf life. and you have to be prepared for that. No edge lasts forever and works perfectly for all time. Different edges appear at different times because there are different market participants at different times and different economic conditions at different times. And so you're always learning, you're always adapting to the next set of edges.
That's right.
And this too shall pass.
That'll be on the back.
Yeah. This too shall pass. You know what? The things that are working now, they're not going to be working later on. And if you're learning, the losses you take now, the drawdowns you have, those too shall pass. And so you learn to not get too high when you're winning, and you learn to not get too low when you're drawing down.
Keep the balance. I like that.
Keep the balance, keep learning, keep growing, keep focused. Yeah, that's what I would tell myself, my younger self, when I was first learning how to trade in the early, it was the late 1970s. So I'm dating myself, but I can tell you what the market was doing. But I didn't recognize or appreciate how much markets change and how the edges change. So many people who were in the market wizard books, I mean, they're great people. They're great. Their accomplishments are great. But if they started trading now, how many of them would now be labeled market wizards?
Mm-hmm.
Yeah. Things change. The people who we would label right today as market wizards, 10 years ago, we weren't talking about them. Yeah, always changing.
Right. Exactly. All right. Now, Doctor, we're going to close this out with some questions that some of our listeners have asked through our Instagram feed.
Right.
Good for that?
Oh, I'm good. Yeah.
Okay. First question's from Jeremy. Jeremy wants to know, what is the best way to detach from markets each day? It's all I think about day and night.
Yeah, that's the dark side of that whole thing about having a passion for trading. It's a great question, Jeremy. The one thing I've said in a number of forums is that you always have to have something in your life more important to you than trading. If trading is the most important thing and P&L is the most important thing, you're going to rise and fall with your equity curve, and that's a vulnerable way to live. And so, having a full life, pursuing relationships, pursuing personal interests, doing things that make you happy and fulfilled, giving back in some way. Those are all ways of diversifying your life so that you don't feel so much pressure and devastation if the trading thing isn't working out at a particular point in time.
All right, thank you. Sarav has a question. Wants to know, Doctor, if you have any advice for growing a small trading account.
Advice for growing a small trading account. It's a good question, and I would first say realistic expectations. Too many people want to be quote-unquote trading for a living, and they start out with a trading account of a couple of $1,000. It's like, what the fuck? You would have to take so much risk with your small capital that eventually, by random chance, you would blow out. It's called risk of ruin in the risk management research. So what you want to do is have P&L goals that are appropriate for the amount of capital that you are trading, and focus on the consistency of your trading, not the absolute dollar P&L. So the two things I look at are, do you have more winning trades than losing trades? And is the average size of your winning trades greater than the average size of your losing trades? If you have those conditions working in your favor, then you're in a position to really grow your success. And if you don't have much in the way of savings to trade your own account, that's when you start thinking about growing an account through a proprietary trading firm or getting funded and so forth.
Right. Okay. Cross has a question, needs some advice. Cross said, I'm impatient with trades and give away a lot of my money. What's the advice you can give to Cross?
Yeah, I think it really, really helps to not only focus on the entries, but focus on your position management. The traders I see succeeding, and this is very true right now, the traders I see succeeding will get into a position, and then as it goes their way, they're very quick to take some profit off the table and leave some part of the position to a further price target. But those points of taking profit and those targets are already identified, so they've been mentally rehearsed. And that's what gets away from the impatience. There's a whole plan, there's a whole scheme around taking profits during the trade, building the cash flow during the trade, and then letting a piece ride if you think we could, let's say, break to a new high or low.
And finally, Ryan wants to know what you think the most important characteristic for a trader to possess is.
There are a few, and actually at several firms where I've worked, we've done research on what makes traders successful. Certainly persistence, diligence. It's part of what psychologists call conscientiousness, being detail-oriented, working hard at things. The person who keeps a journal every day and has goals and plans and really works their game, they're very diligent, they're very conscientious. That's a very important piece. And the second piece I alluded to earlier is open-mindedness, which goes along with creativity, that traders are open to the possibility that markets can do different things on different days, and they can make those quick adaptations. A lot of traders go into the market with a preconceived notion of what they think is going to happen, but the successful traders have a high degree of open-mindedness and flexibility, and they really work at that. So, for instance, they might develop plans on the day that say, if the market does this during the opening half hour, then here's how I want to respond. If the market does that, here's how I want to respond. And so there's a tree in their head that allows them to be flexible.
Doctor, I really appreciate you being with us today, opening up, sharing the best advice, I believe, out there for a trader. Now, Doctor, is there a way that those listening can contact you online?
Yeah, so my blog, the Trader Feed, it's all one word, traderfeed.blogspot.com. If you go to that site, there's a link to my email, and people can contact me through the email. I don't work commercially with individual traders, and that's because I can tell it as I see it. I'm not trying to sell anyone my services. I'm not trying to sell them products. I'm not trying to promote myself. I don't get paid if people read my blog or don't read my blog. I'm trying to help people, and I love helping people. And if folks have some questions, my email address is right there on the blog site, and I welcome questions.
All right. Dr. Brett Steenbarger, I salute you, my friend. And
thank you.
It was an honor to ask you questions, to talk to you, and to relate to your vision of success with my vision. And I think everybody listening to this blog should line it up that way. What you have said and how they are going through their career in trading. So once again, all the best to you, Doctor. And I hope maybe down the line we could maybe get together and have a craft beer.
All right. Yes. Well, yes, I host craft portfolio managers, and I'll come back and we'll do a session that talks about the best craft beers out there, which some traders would be more interested in than markets.
There you go. All right,
Yeah.
Doctor, all the best to you. Thanks a lot for your time.
Okay, thank you. I really appreciate it, and thanks to all who are listening.
All right, Michael, a few things.
I bet you'll come around, but don't get me wrong. Do what you gotta do. Do what you gotta do. I feel it in my bones like you'll come along now. Baby, you're coming through. Do what you gotta do. Take it to the big scene, take it on. Go for hope and glory. Go long. Baby, for love, go all for love. We're going for love. For beating hearts off the charts. Love, go all for love. We're going for love. Baby, going for love. I bet you'll get it right, but don't get me wrong. Say what you gotta say. Say what you gotta say. Go like a satellite, just go like a star now. Say what you gotta say. Say what you gotta say. Take it to the big scene, take it on. Go for hope and glory. Go long. Baby, for love, go all for love. We're going for love. For beating hearts off the charts. Love, go all for love. We're going for love. Baby, going for love. Baby, for love. Take it to the big scene, take it home. Go for hope and glory. For beating hearts off the charts. Take it to the big scene, take it home. Go for hope and glory. For the charts. I bet you'll come around, but don't get me wrong. Do what you gotta do. Baby, for love, go all for love. We're going for love. For beating hearts off the charts. Love, go all for love. We're going for love. Baby, going for love. Baby, for love. For beating hearts.
Things aren't always what they seem, so don't believe everything you read. You and I won't happen again, and I will never let this go. I know that I will get by. Or did you think I would cry? Or did you think I would fight? Baby, you crossed the line, and there's no way to make it right. Sure, I can get hurt, but I won't let you this time. 'Cause I know I will get by. Come down from your pedestal. This is what you get when you think you know it all, but you don't. When you did it wrong, 'cause I won't crash and fall already over you, over you, over you. I am over you, over you, over you. I don't want want you to think that I want you to change. You can make this right now when all is ruined again. How many times did you think that I was gonna let this slide? Now I know I can and I will get by. Or did you think I would cry? Or did you think I would fight? Maybe you'll cross the line. There's no way to make it right. Sure I can't get hurt, but I won't let you this time. 'Cause I know I will get by. Cut from your pedestal. This is what you get when you think you know it all. But you don't, and you're dead wrong, 'cause the one cries and fall already over you, over you, over you. I am over you, over you, over you. I'm down from you, but there's no over you, over you, over you. This is such a rush.
I just wanna be someone who matters. Free falling vagabond. Come on, feel my heart beating faster. I just wanna dance and dance till I'm numb and I'm done and I'm ready to the ground. Can you feel it now? When we're dancing to the stars. I just wanna be someone you remember. A star glowing like the sun. Can't you see my heart is soaring tender? And I just wanna dance and dance till I'm numb and I'm done. Now the rattling has just begun. Can you feel it now? When we're dancing to the stars. Can you feel it now? When we're dancing to the stars. I just wanna be someone you remember. Not just one in a million stars. I just wanna dance, dance. Can you feel it now? When we're dancing to the stars. Can you feel it now? When we're dancing to the stars.
All right, coming back here at about 1:30 here, we've got Hoag going to join us. We'll take a look at the markets and got some stories for you also. And we're going to be bringing in one of our coaches, Ray. Ray's going to be joining us maybe about 1:45, 1:50 here Central Time. And remember, hey, we've got the Discord channel available also. We've also got the YouTube channel here if you'd like to post any comments, questions, suggestions, by all means, please do. And every day we are here at 8 o'clock in the morning Central Time. And we do have, we open up with opening call here with Hoag and myself. We also, about right before the opening bell here at 8:30, we do have Fast Market with Hoag, Michael Patak, and myself. We also got a segment called Stat Guy with Robert. We've got So Crude with Danny, Talking Shop with Andre, Shoulder Tap with Mick or Brett. And then, of course, one of the more popular things here, Top Quiz, where we are giving away combines. Yes, trading combines, 50, 100, swag, some of the stuff from our gear shop. resets, lots of things that are going to vary throughout the days. So be with us for that. And of course, coming in the afternoon, Squawk Radio. Welcome back, ladies and gentlemen. How was your lunch, John? What'd you have for lunch?
I had actually a leftover grilled hot dog from last night. It was actually pretty good. Some nice diced onions on there, a little mustard, a little sport pepper. If you're not from Chicago, you may not know what a sport pepper is, but I gotta have those on my hot dogs. On the Chicago dog. Yep.
Yeah, that's a Chicago dog, where they put everything on there, a little celery salt. Oh, yum. See, if you haven't been to
Chicago, for me, I'm kind of
go ahead.
Kind of anti-salt myself.
Yeah, if you haven't been to Chicago, there is a lot of great food here you got to try. And if you need any advice, you can ask either me or Hoag. You know that we
for sure
food connoisseurs. So, you know, we had a archived podcast with Dr. Brett Steenbarger that we played earlier.
Hearing it the first time, and I listened to it this time. Always very good.
That good stuff too, and you know, just a way of approaching your good and your bad. That you can't sort of tuck the bad away. You've got to face it, and you've got to correct it.
Nor can you tuck the good away. You've got to maximize your good and work on the bad.
Right, and it's got to be a balance. You got to have a balance, and that's good stuff. So I was sitting there too. I was eating my leftover taco meat that my mom. Sorry, Mom. That my wife, who's now my mom. She's like my mom. Made last night. She made some good taco meat. Got this stuff she puts in there.
That's funny. We had chicken tacos on Monday.
You had the chicken tacos. Oh, okay. Yeah. Every day is taco day here at the Horn residence. So I love a good taco. But anyway, we had some opportunity this morning. We saw the open. Bottom fell out of our friends, the NASDAQ and the ES. And I tell you, the EIA number for crude, it was a big change. It was a big miss. And it took a while for the market to sort of recognize that. And that's what Danny mentioned. He goes, hey, don't jump on it right away. And then, now we see some movement here, maybe a little digestion in the market in the crude. But we're getting some decent candlesticks here in your ES and in the NASDAQ.
Well, yeah, there were a couple of things I wanted to kind of talk about in the E-mini S&Ps here. And, you know, when we left the opening range at the high of the session initially, you know, that was a short signal for me, but we never really did get down through that 44.34 naked TPO point of control that we talked about yesterday. Actually, Andre mentioned that this morning. He was like, that was quite a good target, but we found some buyers down there. It's not a very strong low if you look at all these candlestick and the wicks at the bottom here.
Right.
We just
lining
need to run out of sellers down there.
Yeah, what do you got? I've got like around 34 even, right?
Yeah, 44.34, and that is right on. That's a direct hit to the naked point of control that we were talking about. That point of control goes way back here. Naked point of control, 34 right here. So it never was revisited. We revisited the volume point of control here, but we never visited the TPO point of control, which was 3,400. And that's where we went to today within one tick of it. It's amazing how visual markets are, Eddie.
Point of control, it's point of control, POC. That is the abbreviation you might see sometimes in our chat. But you mentioned naked. What is a naked point of control?
Good question. So I'm going to use a different platform to show this because this has the TPO profiles on it.
What's TPO?
Or the market profile. So what we were looking at was, this is a TPO point of control. And what the TPO point of control tells us is, it's basically the mean price of the day. It's the most popular, most revisited price in time during the day. It's the widest line of TPOs closest to the center of the range. But this is where that target came from. So where is it here? Let's be precise, even though nothing in futures is precise.
John,
44.34 quarter. Okay. That is where that naked point of control. Now it's naked because it was never revisited in regular trading hours. So if we go all the way to the right, there it is, a perfect 100% exact hit. And you remember, nothing in futures is ever exact, but in this case, it drove right to it. You know, the initial balance, the opening range was initially the low of the high of the session. We probably should have noticed that we were up against that. This is more of a target than really an entry level, but it certainly would have been a really good entry level for us today because we've been pretty much grinding higher overall the rest of the day. Mm-hmm. Now, there's another thing that I wanted to show you, Eddie, and everybody. When we look at the delta, yes, Michael, the TPO is the time price opportunities.
Right.
Yes. And it's good to see Joe, Dan, everybody. Hoop, good to see you. Kevin, glad you're enjoying it. Nighty night, it's kind of like a banana pepper, but it's smaller and it's a little bit hotter than a banana pepper. We're talking about the sport peppers earlier, Eddie. So we came and we revisited that. Now, why are those so important? Because they are levels of comfort. That's what I like to call them. They're very popular levels in the past, and when they're revisited in the future, when they have not been checked or revisited before, they become visual targets. And markets are extremely visual. I think we mentioned this morning, Eddie, that when traders are focused on a level, they tend to make price go to that level. And whether you're a profile person or not, that was the fairest price of that session because it's centrally located in the range and it's the most popular. It was visited the most times, and it's the widest line of TPOs closest to the center of the range. So that was left out there. And if you start watching these and watching profiles, you'll see how often when price comes near them, it trades to them, because again, it's a comfortable level. It's the most popular and the fairest price from the 28th of August. We went right back down to it, and then we turned around. All right, Eddie, I know we've got our good friend Ray coming in here pretty soon, but I wanted to mention there were a couple of things that have been very difficult to trade today. I had a loss first. I had a couple more losses, and I called it a day. I'm not going to lie. All week we've had some pretty good trades. Today it wasn't that way, but we managed risk, and so what we're seeing, the market opened. It looked lower. It tested down to that naked point of control. If you think about what delta is, and if you don't know what delta is, it is the number of contracts that trade on the offer would be positive. So if 1,000 contracts trade on the offer, that's positive 1,000 in delta. Then you subtract from that all of the contracts that trade on the bid. It's a bit of an order flow tool. And when we have a divergence like we see today, then there is a potential for a late push, in this case to the upside. So we see price attempting to move higher all day long, while delta increasing in negativity. Right now it's negative 8,500. The zero line is this yellow line here. So since the open, we've had delta increasing in negativity all day while price continues to move higher. What does that mean, Eddie? That means that there is the distinct possibility that there are longer time frame traders just placing bids and then moving those bids up and then moving those bids up. So they get the short time frame traders using market orders, showing that negative delta because sell market orders are negative delta, and they'll just scoop up whatever they can scoop up here for as long as they can. And then when the short time frame traders get wind of it, or they kind of sense that they're not going to be able to push price any lower, the longer time frame traders, if they still have business to do, will push those bids up. And then they'll pick up everything they can here for as long as they can. And then you'll have the short time frame traders figure out they're not going to get paid. They'll get out. And then the longer time frame will bring all of their orders up to this level. So we're continuing. Well, we just took a little bit of delta off because we're starting to see the market kind of turn to the upside. But if we continue to see delta increasing in negativity, deeper negative numbers, that's more shorter time frame traders that might end up stuck short at the end of the day, and most of them aren't going to want to hold those positions overnight. So that's when we end up with a kind of a late spike to the upside. So we're gonna, we'll have the opportunity before 3 o'clock to find out if that actually plays out. If the short time frame community is too short at the end of the day, you might see price push to the upside. This is something that you really have to be patient for, because it usually doesn't happen until about the last 30 minutes of the day.
Right. Now, there's two things that John mentioned. I know that we've got some new traders here talking about what is delta. It's used to calculate risk. That is delta. And another one that you were using was divergence. That's when the price of an asset is moving in the opposite direction of a technical indicator or other data. So those are some things that, just so you understand what we're talking about. I know there's a lot of terms in trading. A lot of us know what these are, but there are a lot of us that don't.
Right. Ryan's thinking about his option days, and it's a completely different thing than option delta. It is really quite simply the number of contracts that trade on the offer minus the number of contracts that trade on the bid. So looking at negative delta of negative 8,100, there's 8,100 more contracts that traded on the bid today than on the offer. Now, that's indicating that the sellers are more aggressive, which you would think would bring price lower. right? More aggressive sellers hitting bids would usually move price lower. But when it doesn't, there is a hint there that there may be a longer time frame presence operating in the market at that time, because it's an accumulation or liquidation of a longer time frame position. So if we continue to see delta decreasing through the end of the day, all of the short time frame shorts might have to cover, and we might see that big move to the upside, which is also another kind of special situation. And this I learned in Mind Over Markets, is the value area special situation play. It's a mouthful. Value area special situation play. We opened out of the range from yesterday, out of regular trading hour range. So we opened with a gap. We close the gap. When we do that, if we find acceptance, that is a subjective term, inside the previous day's area of value. So you've got the value low here, approximately 44.55, and you've got value area high up here at 44.75, 76 area. So if we do find acceptance inside value, there is a pretty good probability that that acceptance will make price at some point during that session reach the other extreme of value. So now, have we accepted value? Have we accepted yesterday's value? When I first learned of this opportunity, I had to basically wait for two 30-minute bars to close back inside value. We have that. We have this 30-minute bar, we have this 30-minute bar, and we have this 30-minute bar, all of which closed back inside value from yesterday. So there are a couple of things stacked up against shorts here. We're showing acceptance of previous value, which might bring price up to the value area high from yesterday. And we have delta divergence. So we may be lighting a little bit of a fire for a push to the value high from yesterday at the end of the day today. All of you watching, this is something that we can review again tomorrow. You can also join Jack and I for the reflection at the end of the day, turn those machines back on, and we'll take a look and see what happened at the end of the day here. We're going to have about a half an hour after my session here with Eddie and Ray, to see how this plays out for us, to see how this, see what happens here. So even if you're not going to participate in it, watch it and see if there's, something that you can learn from this. I know that, we've had some okay opportunities off the high here. And so we'll have to see what happens.
John,
I kind of cut myself up a little bit trying to catch the value area special situation play because of the delta divergence. I got a little too early in it. I started getting a little bit chopped up, so I just shut it down. But,
John, earlier today, there was a lot of questions regarding market profile. Now, will we ever have the chance to learn that, or where's the best place to learn that? Because it is very attractive, and a lot of people who do follow you know that you use that. And
it's to me, I think that Eddie, visual learners, and I think most of us to some degree are visual learners, have a tendency to appreciate the picture that the market profile provides. There's volume profile, which we're seeing, right here. This is stacking up the volume at each price, so we can see where more volume has occurred. But the market profile is a little bit different. It's price over time. So time in market profile is the indication of acceptance or rejection of current price. So they're similar but different. I think the market profile does provide more detail, more nuance than the volume profile, although I find the volume profile useful in certain situations, even more so than the market profile. But the market profile is really the tool that I use to put the context over the marketplace.
John, Stuart's got a question. Stuart McAllister. And this is probably true. Will the NASDAQ do the same thing as the ES? Well, I mean, the real question is, we talk about leader lagger, and if we can include Dow into this sort of recipe, why do they do this, John?
Why do they
follow suit? One's a leader, one's a lagger. Why are we always moving the same direction?
Well, there's a couple of major differences in the NASDAQ today from the S&P. The NASDAQ opened with a gap and never closed the gap. Okay, so in that case, the market is showing over time and volume that it is accepting price at lower levels. If the market comes back into range and finishes the value area special situation, this again is the NASDAQ now. Okay, we've closed the gap in the S&Ps. We've shown hints of acceptance inside value in the S&Ps. If the S&Ps break and the NASDAQ and if the S&Ps follow the NASDAQ and break late in the day, the NASDAQ has been the leader. But the one other major difference between the two of them is the delta. Here, let's take a look. Here's the delta 9,400 positive. It's congruent with direction. So the more aggressive market order buyers that have created a 9,400 positive delta are driving price, where the opposite is occurring in the S&Ps. You have negative delta as price continues to push higher. Now, you look at the NASDAQ, it's 100 stocks. You look at the S&Ps, it's 500 stocks. The S&Ps is the broader of the indices. The Dow is 30 stocks. I would probably say that the Dow, I don't even have it up here. The Dow hasn't left yesterday's range. So let's take a look. Here's the volume profile, and this is just going to point out the range from yesterday. Here's the range from today. Inside. NASDAQ opened with a gap and hasn't closed it. S&P's opened with a gap and closed it. The NASDAQ or the Dow really just holding pat. No real change in value. Value is inside yesterday's value. So not really going to be helpful as far as trying to find a leader or a lagger in this, right? All right, so here's the NASDAQ. On its highs, delta positive. Here's the S&Ps. Off its highs a little bit, but we're starting to see some of this delta peel off. Some of our short time frame, short holding positions, short time frame shorts are already getting the vibe that this thing isn't going to break. So now we're going to see if we finish the value area special situation play.
It's holding nicely, and it looks like that we're on very close to it here with your NASDAQ and your S&Ps. Little surge here with the buyers. Let's see how long they can last here.
Yeah, and it's, these buyers, we were just up around 8,000, 9,000 in negative delta. We've taken off 2,000 or 3,000 in that delta on this push to the upside. We've got short time frame shorts in this market. If they do continue to bail out of those positions, again, you might see the late spike to the upside at the end of the day. That might finish the value area special situation day.
All right.
See, I got too aggressive too early, looking for the special situation play to play out. I could see the delta. I was done being short once I saw that, and I just got a little bit chopped up and said, you know what, I'm not going to do this. We're gonna chill.
Tomorrow too. Also, besides the Baker Hughes rig count, tomorrow's going to be a chill also as far as eco goes. So we're going to have to just rely on what us traders think and what us traders want.
So
we are seeing that NASDAQ. Yeah, NASDAQ moving nicely here.
Yeah, I'd take out the high now.
Took out the high last time we saw this was early this morning around 5 a.m. Central.
Mm-hmm. Yep, it is going to likely close the gap. If it starts to accept the range from yesterday, the next acceptance would be value. Acceptance and value brings us to value area high. So this morning, Eddie, on the opening call and in fast market, we talked to Michael about the possibility of an acceleration day in the NASDAQ where the market gaps and then continues lower. It didn't happen. That was probably my primary hypothesis today for the S&P and the NASDAQ. It didn't happen. So not an acceleration day. We need to come up and close this gap really for that to be. So the secondary hypothesis was, we nailed the low in the S&Ps. I can't believe we didn't take advantage of that, but that was more of a target than anything else. But if you're going to get out of shorts there, you might try along there, right?
A lot of volume did kick in when we were on those lows. That was the highest volume of the session when we did tag that low first time.
Do indices tend to move towards settlement if they haven't already by market open?
Yeah, Kevin's got a question. Right.
Yeah, his question is, do the indices tend to move towards settlement if they haven't already by market open? It depends on the situation, Kevin. What we look at there, here's settlement price in the NASDAQ from yesterday. Approximately our overnight high, pretty much right at it, right? But all of this momentum, all of this movement to the downside puts the short time frame traders already short. So when the market opens and they don't find what they're looking for, and that would be continuation to the downside, quite often the market will come back in and test back to either where the market opened the previous night, which would put us all the way up here, or back to settlement. So if we're still holding all of those overnight short positions, that's fuel to the fire to the upside. If you're short and you have to get out, you are a buyer.
What about the equities?
Well, this is one of the equities. This is the
same
NASDAQ.
question. Indices, equities.
Yes. So it's situational, Kevin. If the market is really range bound and we get an overnight inventory that's one side or the other in the equity indices, you may see a quicker move back to settlement or to where the market opened the previous night. So the market opened last night right here. So that would really be where the inventory began. Then it started to get short. We didn't really see much of a inventory adjustment. Whatever happens this afternoon is going to happen this afternoon. But the fact that we had overnight inventory that was short on the open didn't help the fact that they were still holding those shorts. They're looking for continuation. If continuation doesn't happen relatively quickly, they'll bail. And to a degree they did. The first 30 minutes, second 30 minutes, third 30 minutes, there was an adjustment in that overnight inventory. It just wasn't a full adjustment back to settlement or back to where the market opened.
All right.
Right.
Hoop is commenting
Blue, yeah,
about you always said markets like to test the market prior settlement at some point on the open.
After the open.
Okay.
Yeah. Ocean Blue, I would love to. I'll probably be talking to Deanna sometime soon, and we'll see if we can't get her on Topstep TV here, if she would be so obliged.
Right. Topstep said we will indeed be reaching out to her. Yes. Got her. So that'll be cool. You know, a lot of people asking about that too. Market profile, like I mentioned earlier.
Well, you know, it is a lifelong study. I've been studying it for a little over 30 years, I guess. And it is something that takes time to learn and to absorb. So we are going to have a lot of time to talk about it and to discuss it and to learn more and more about it. And I look forward to having anybody that wants to learn about it, ask about it, and you know, we can start from the basics and we can keep moving forward. You know, as new people come up, we'll step back and bring them up to speed. You know, to me, it's the picture of the market to me. Sometimes when things line up and the nuances line up so clearly, it almost looks like it's three-dimensional instead of just two-dimensional to me.
Okay. Jimmy's got a comment saying that he said this morning the Asia session for the market to extend that bearish sentiment.
Yes. Yeah. So you get, you know, the Asian markets start, and, you know, if we get some short time frame sellers, then you get the Europe Open, the London Open. Here's when that happened. We had a little bit of a balance area here, but then they continued to break it. The balance area became resistance. Sellers continued to pile into those shorts. Then the numbers came out at 7:30. More shorts came piling in. But the shorts that came in down here certainly didn't have much of an opportunity to make any money. So,
you know, John,
now yes.
Now, just taking a look here at these markets, can we just slip over to the Dow and see what the Dow has done today?
We just did a little bit ago, but here, hang on.
Well, I mean, I want to break it down in a little more detail. If we could sort of superimpose these.
Here's yesterday's range. Here's today's range.
See, now we're seeing something a little different.
Pardon?
Seeing just something a little different from what we're looking at for the ES and the NASDAQ. A little different.
Very much so.
Pace.
Yeah, the market open in range and in value, and really hasn't even left value for the better part of the day today.
Now,
here's the value area from today. It's inside yesterday's value area.
Right. Now, what I wanted to ask is, okay, now that we've got these up here, how do you pick a leader and a lagger? How do you know that the NASDAQ was the leader today, or the S&P, or the Dow?
Well, the Dow didn't really lead anything. It didn't even lead itself, right? I mean, it's just inside yesterday's range, inside yesterday's value. No change in the perception of value in the Dow. The blue chip stocks did not move. As far as the S&Ps are concerned, the S&Ps opened with a gap and have closed the gap. The NASDAQ is trying to work on closing the gap, but has not. So I would say that between the S&P and the NASDAQ, I don't think there really was a leader. They're both kind of acting in concert. They both opened out of range. They're both working on either getting back to yesterday's range or value. So it kind of working in concert today.
Mm-hmm.
The the correlation between the S&P and the NASDAQ. The 30-day correlation is 96%. So they're really acting in concert most of the time. 60-day correlation, 94%. So they're very related. As far as who's leading today and who's following, they're both heading kind of in the same direction. If the NASDAQ closes the gap, I'd say the S&Ps were the leader.
Okay.
So we've got a little over an hour to close that gap if we're going to.
Okay. All right, watching it. It's an opportunity this morning, but I tell you, we're trending here, but considering these 30-minute candlesticks, it would be really tough to at least put something on, hoping that you can look for a longer profit, longer trade. I myself would be very short with these trades. I'd be taking these small profits and getting back in. I'd probably have a very high trading day today.
A lot of smaller trades.
I would think so. Yeah.
Yeah, that might be the right thing to do, but you got to think of things in context. Where we've been putting in lower highs and lower lows for 3 or 4 days now. Once we broke out below this low here yesterday, the kind of tint is to the downside, but we've been grinding higher all day. So the short time frame, the market has been putting in higher highs, higher lows. This may end up just being a bear flag. But yeah, especially if you're short today, you certainly wanted to keep your expectations reasonable and short time frame.
Yeah. Keep an eye here.
So, the delta in the S&Ps, where is it now? Minus 8,100. It is increasing again, and price isn't really pulling back that much. I mean, one of the things you have to be careful about with the delta divergence is it's kind of like if Elvis leaves the building, if the longer time frame buyers finish their business for the day, then you might see a move to the downside. But if they keep the pressure on all day, at the end of the day, you may have those shorter time frame shorts screaming towards the upside at the end of the day. We're going to have to see what happens.
Right. Question Bob's asking, Hoag, hope you are well. Is there a delay on the live stream data?
Is there a delay on the live stream data? Well, if you're watching on YouTube, yes, there's about an 8-second delay. But, the live trading platforms, there shouldn't be any delay.
Dom is asking, previous what we were just talking about, on what are you basing your daily or weekly bias?
Well, there's a whole lot of things. I mean, there's the technical analysis part of it, when you're looking at the charts. I start every week looking at a monthly, down to a weekly, down to a daily, and then down to a 30-minute chart. So, I try not to have a bias unless there's a good bias to have. Not only am I looking at the technical analysis, there's also the market profiles. So let me give you an example. So looking at the S&Ps, we had excess on the daily bars up here. There were a couple other things that were kind of pointing out to us that the downside auctions were not finishing. We don't have excess here. We have excess at the high. Excess is price got too expensive. Buyers wouldn't buy it anymore up there. Sellers took over. So there's excess at the high here, no excess at the low. It's an unfinished downside auction. The next day, excess at the high, an unfinished downside auction. Yesterday, we gapped lower. Okay, and then we continued the push to the downside. There was a degree of excess down here, but we opened it with a gap. The potential for the move downside is also in play. Now, there's also volume and open interest numbers that kind of tell me that if an auction in one direction or another is doing well or not doing well. So one of the things on the opening call that I'm going to be adding is if a market is in a longer time frame auction, we're going to give it a letter grade, and we're going to base that letter grade on what we're seeing technically and through volume and open interest studies. So there's a lot that we're going to be discussing, especially in real time when these things are valid and important to traders, at least me or the other traders here, to be able to kind of. I've always kind of felt like you really want a really round picture of the markets. It's not just technical analysis. It's not just market profile, but there's volume and open interest, and you really want to get a kind of a holistic view of the market. And then, like Mark Douglas says, you gotta kind of meld that into your psychology, and then find your way to find good opportunities. It's not easy. I've been at this for 30 years, and it's still not easy. But there's a lot to know and a lot to learn. We don't want to confuse. All we want to do is give you the opportunity to learn the tools that might be helpful for you. Not every indicator, not every tool is going to be useful for every person. No indicator is going to be right all the time or wrong all the time. It's more about what's going on between your ears than it is what's going on in the charts. So, if I have a bias, it's more of a hypothesis. I think the market might go down today. What proves me wrong? And then if that gets proven wrong, then there's a secondary hypothesis. All right, well, we didn't get our acceleration move today. What is the secondary hypothesis? What am I looking for if my initial hypothesis doesn't work? And then you take the strategies that fit that hypothesis, as simple as if the market's range bound, I'm selling the high of the range and buying the low of the range until proven wrong. If the market's directional to the upside, I'm going to be looking for pullbacks to buy so that I don't have to take a whole lot of heat when I buy the high in a market that's moving higher. So your strategies can be that simple. I see Ray.
Right, I was going to bring him in. Yes, I was waiting for you to finish, and yes, I was going to bring him in. But go ahead, bring him in.
Sometimes I pontificate, but Ray and I have a long history together.
We do.
How are you?
I'm
my wildebeest trader?
Yes, that's the acronym of choice.
It's good to see you. Glad to have you with us today. How are things going?
I'm good. Things good. Eddie Horn said I could come and join Mr. Hoag for a session, and I would not pass that opportunity. Sorry about that.
Well, I'm glad that you are here, and
your hot pocket's ready.
My hot pocket. Excellent. It is my hot pocket.
I wanted to bring you in. You could go ahead, John.
No, go ahead, Eddie.
No, I wanted to bring him in. He's one of our coaches, and I know that you're a teacher by day,
yes,
and a coach by night,
yes,
and a superhero all around.
Thank you very much. I appreciate that.
Just like the way you like your style, Ray, and like the way you approach helping other traders. And I wanted to bring you in here. Sorry that we got you on a little late.
No worries.
I was hoping we can talk about, some of the instances, some of the issues that our traders are having, and some of the corrections and advice that you're giving them. So let's just start with introduce yourself, Ray. You got the wildebeest thing with John going. I'm going to stay out of that.
Okay.
Not a zoo person.
Yep. But
who are you? What do you do, and why are you here?
Well, I've been fortunate enough to be a part of Hoag's group back in the day. I think it was probably a good 5-6 years ago. I think is when I was a part of it. But I was really trying to get into futures at the time. And we actually have a common mentor. I don't know about mentor, but common person, Deanna Angelo, is another person that I kind of got mentored with as well. They kind of helped me with supply, demand, order flow, and those sorts of things. So I've kind of evolved from, I guess, a scalper to more of a position swing intraday trader, you know, in that time frame. And as mentioned, the wildebeest is kind of synonymous of how I approach the market. So I hang out in the brush. I wait for the three-legged wildebeest to come to my way, and if I see evidence of what I need to see, then I pounce. If I don't, then I just hang out by the brush and keep sleeping.
Well, I mean, that's when we talk about opportunity. I mean, that's what you've got to do. You've got to be patient.
Yes.
And you know, like if you want to relate that to the Serengeti, I mean, sometimes lions will sit in the or whatever, the predator.
Yep.
For hours and hours, and sometimes get nothing all day.
Absolutely.
So,
I mean, and I use that analogy with my students all the time, right? I say that, look, the lion is not going to chase every gazelle that comes its way, right? It's going to wait, hang out by the brush, maybe by a water supply, and just hang out, right? And see if it finds a weak or three-legged wildebeest to pounce on.
Or an unaware wildebeest.
Or unaware wildebeest, exactly.
Yeah, I'm a war vet. I lost my leg in Nam.
Yeah. Well, it's probably on my platter at some point. Sorry.
Wildebeest. I don't know what they would taste like. I've never tasted wildebeest.
Neither have I, but it's stuck.
Probably beefy, gamey.
Yeah, probably gamey. I would assume.
Dusty.
Yeah.
So jumping in, Eddie, my dad had wildebeest once, and he said it was one of the worst things he's ever tasted.
I was going to say maybe it tastes like chicken.
Yeah, I wish.
Yeah, that's the only thing that says everything tastes like chicken except wildebeest.
Yeah. So I guess Eddie, to kind of summarize, I guess I'm a malformation of Hoag and Deanna Angelo. I tried to take in the best of both, and I kind of crafted a strategy or kind of an approach to the market as a result of their guidance.
Now, are you sharing this with your traders that you're coaching?
Absolutely. I feel I owe it. I guess I was fortunate enough to be a part of Hoag's group and Deanna's group that I tried to do in part the same with anybody I'm involved with.
Okay. Now, I know we've got limited time here. I wish we had. I guess we can get you back on again another day. But
okay.
Can you share with us some of the positive stories you've had with traders? How about the recent trader that you have coached and has got funded?
Yeah. I mean, I don't, unfortunately, I run through so many, it's hard to remember the names, but I think the biggest thing is that I've, kind of gravitated people who used to be scalpers, right? And have now kind of reduced the amount of trades, and the very function of reducing the number of trades allow them to pass the combine, right? So I've, right? So that's kind of, I think, would be a success story.
So would you say that you have taken them from a lion that will chase any wildebeest to only find the wildebeest they can catch?
Yes, absolutely. I would say that. I think for the ones that have gone through the combine, I managed to get them through that kind of scenario, right? Where they were taking anywhere from, 20 trades, 25 trades, which I kind of have a hard time imagining myself, to maybe 1 to 5 trades, which I think is a huge win.
Yeah.
Well, were you that trader at one point?
I was when I started, yes. But I've over time, with working with you and working with Deanna, especially, it was always about, I think you always kind of mentioned, the extremes of swings is where we find opportunities.
Yeah, Ray, I got a question from you coming off of YouTube here.
Sure.
Luke is asking, if I'm trading only one contract, is it best to trail my stop or hold my stop and wait for my TP?
Well, I have a multiple. Yeah, I understand. Yeah, I have multiple exits, right? So I have a time-based exit. I have a profit exit. So it really depends on the time frame. Okay. Now I go from consolidation area to consolidation area. So if I do my trades correctly, I'm entering close to the brush, and I'm waiting for the next area or brush area where the evil stepsister lives on the upside, right? On a slightly higher time frame. So I go from consolidation to consolidation area, and oftentimes that is the target price is in that range. And again, another Hoagism, within 10% of that is kind of when I start to look.
Yes, you get within 10% of a profit target.
Yeah.
Don't let it go back.
I'm happy getting paid 90%. Right, I'm happy to give 10% to whoever needs to be paid.
Yeah, leave 10% for the hyenas.
Yeah, exactly. You go to a nice restaurant, you want to leave more than 10%, right?
Sure.
J-Bo's got a question here. Question: to let winners run past the combine's max daily consistency target to insulate losing days and extend the time to pass the combine, or try to pass the combine as quick as possible, limiting winners. What's your take on that, Ray?
I would say I'm not really a fan of either, to be honest. I would say that the tortoise always wins the race, right? So I would much, if I were a risk manager or part of a risk team, I would take that, $200 or $300 winner guy over the guy that wins $2,000 one day, loses $1,500 the next.
Right. I mean, it goes into saying once again.
I'm going to add to that answer, Eddie. What I used to coach baseball before, right? And I used to get kids come up to me and say, "Hey, Mr. Trende, should I go up and hit a home run?" I said, "Look, absolutely not. That's not the mindset you should go up with. You should go up with the mindset of, let's make good contact. And if I make good contact, some of that good contact will turn to a home run. If you go up thinking home run, you end up most likely striking out.
You overswing.
You're overswinging." I know that Hoag would love that kind of baseball analogy. So
yeah, I was a baseball coach too.
Yeah. So
that makes three of us.
A lot of parallels.
Yeah. Right. Yeah. Eddie was a baseball coach too.
Yeah. So it's all about making good contact. All about making one good trade.
But as a coach, you'd always wish and hope that kid swinging for the base hit got a little extra behind that and put it over the fence.
Absolutely. But the thing is,
but you wouldn't say that.
No. But the focus is, if he makes good contact, that some percentage of those will make a double or a triple or even a home run. Right. It's all about focusing on making good contact. And the same here with trading. Focus on making one good trade, and some of those trades will actually turn into home runs.
Yeah, best trades are, sometimes in spite of myself.
Right.
I tell you, a lot of glory goes in baseball for the home run hitter.
Yeah. Well,
and there's seldom that any one of those home run hitters has a good batting average.
Correct.
So I mean, it's almost like traders trying to manage their account.
Correct.
How many winners do you have versus losers?
Correct.
Consider a winner a base hit. Consider a loser a ground out, a strikeout.
I need to pick up my ego.
Is that my hot pocket?
I don't know.
Sorry,
I want a
guys.
hot pocket now.
Sorry, guys.
It's okay. It's okay. But I mean, it's we can relate to that.
Yeah.
That I mean, obviously, us all being coaches, we give advice, we give direction.
Mm-hmm.
We give the best advice we can give in these certain situations.
Correct.
I used to say, if we were up a sufficient amount of runs, I'd tell the kids, guys, I mean, I coached everything from peanuts to 40 and over league, managed and so forth. I would say, hey, the first swing is yours, the second swing is the team's, and the third swing is mine.
Absolutely.
And they'd go up there with that first swing, and you'd see them like, hey, if we're up and we're having fun, go ahead, man. Give it a shot.
Yeah.
Have some fun with that. Swing as hard as you can. But as we would say, now the second one's for the team, and the third one's for me.
Absolutely.
You'd see a more directed, focused.
Mm-hmm.
Let's do it for the team.
Mm-hmm. Yeah, no, absolutely. I mean, I use a lot of, as people that I work with, I use a lot of analogies when when I work with them, and that's one of the big ones, right? Because they're always there. I always hear them, oh, if I let one go and it went to my target, but I just wasn't there for it, whatever. And I go, well, there's another trade, there's another pitch that's going to come down your wheelhouse that you're going to get a chance to swing at. We just need to wait for it.
Mm-hmm. Yeah. It seems like if you go looking for it, it's not the pitch you're waiting for.
Exactly. And you know what pitch, what kind of pitch slightly on the inside of the plate, maybe a waist high is kind of that pitch, right? So that's what we need to do. That's what, as traders, we need to do as well.
Okay. Let's see here. We got some more comments here.
Mm-hmm. Hopefully you have people out there who are baseball fans.
Well, Jabo says it's awesome. You guys love baseball, so do I. So
yeah,
you hit a home run on that one, Ray.
Oh, great, excellent. You see, I was just thinking base hit. I wasn't really thinking anything more than that.
Yeah, but you hit one. You hit one.
Yeah.
You hit one. Cool. Dan's asking about.
Same applies to basketball too. Free throws, right? Just make one free throw, right? That's all I.
One out of two.
Yeah, I mean, you start with, I just need to make one.
The next one.
Yeah, and then let's see if I can make the next one.
Right.
Don't focus on trying to make two.
Right. All right. Well, Ray, we've got you. I'm glad that we got you on here to share some of your advice, some of your experience, who you are, why you're here. What's nice about it is we usually don't have coaches this late, but you're the only one that can make it at this time. So
correct.
Give us a day next week, and
yeah,
we'll get you on again.
Yeah, absolutely.
In the afternoon, you can join me and John.
Love to.
And if you can, let's bring us a good story and a bad story. Okay,
Absolutely.
We want to know about the success, and we want to know about those traders that are just a little too bullheaded to listen. And I know there are those.
Those people don't exist. Not after working with me after a while.
Oh, okay.
So you beat them up.
You're the Messiah. Okay.
I'm the Messiah. Yes.
All right, Ray. Thanks for being with us here.
Yeah,
and
likewise.
We're just about
Thank you
out
for
of
having
time
me.
here.
Yep.
Coming up here, John. You got the 3:00. What's going on at 3:00 here Central Time in a half an hour?
Turn those machines back on.
Yes, indeed.
Machines back on. Do a little reflection of the trading day. Ray, it was great to see you. I'm looking forward to seeing you again next week.
Yeah, likewise. Thanks, Sean.
All right, man. Take care. All right, so we're going to pack it up here just for a little bit. Don't go away. We want to. You definitely want to stick around for Jack and Hoag talking about possibilities for tomorrow. Now, we did mention that the economic numbers tomorrow very light. Really nothing except if you're in Germany, the CPI number is coming out. You might want to watch that one. But otherwise, I think that might be it. Really nothing going down. I want to keep an eye here on China. There's just so many things coming out of China that don't seem stable. I've been watching the news a lot, and there's a lot of things sort of happening over there. And I think something's going to pop. That's my gut feeling.
But what do you think that's going to be? You don't know?
I don't know. It's just building. I think it's just building, and
yeah. Well,
I mean,
let's just keep praying.
Yeah, but I mean, the thing is, the one stock, the Homestead stock, up 80%. All right. I mean, that's one good thing. The crude right now cutting back, and now they're China's effect on crude. The Apple incident, breaking Apple. Now the thing is, John, the question is, why would you not want your top brass to have their iPhones? I mean, unless they were getting caught, too many were getting caught playing, I don't know, Candy Crush or something. I don't know. That was just a little weird. I can see saying, okay, employees, you can't have your phones at work. But when you're talking about boardroom executives, office manager, like I said, the top brass, You can't have your phone with you yet.
Well, in the article that I read, Eddie, they were banning employees of the government from using the iPhone at work. You couldn't even bring it in. And so according to the article that I read, and the focus, it wasn't necessarily because it's an iPhone, but they're trying to get the focus on Chinese-made smartphones versus the Apple, which probably is made in China, but they're trying to bolster their own companies in their own country.
Yeah. Well, what other phones do they have there? Sure. If you haven't heard, China bars government officials. You're right, government officials using iPhones at work. Shares in Apple decreased under 3.6 yesterday after the Wall Street Journal reported that China has banned government officials from using the tech giant's popular iPhone and other foreign brand devices for work. Okay. I don't know. I think we might be seeing some tightening the screw on both ends here. So, I mean, what are they going to use? What are they scrambling for right now? Huh. I don't know. But anyway, John, we are past time. I don't want to keep you any longer, but did you know that this was one of the hottest summers on record? Did you know that?
Since when?
What do you mean, since when?
Well, I mean, do they know how hot it was 3,000 years ago?
Yes, John. It's just a comment that you said, since when? It sounds like something. Sorry, I was thinking it funny, but I guess it didn't come out that way. Anyway, let's see. It's the hottest month ever measured globally. So here's your date. Since record recordings back to 1940. So there you go.
1940. Okay.
There you go.
All right.
Hottest.
It was pretty hot for a while there, huh?
Well, today was beautiful, but I got about 65. What's it? Well, it's 70. It's showing 70 right now. Nice cool breeze going down. Not too sunny. I'm happy with that. But it was just too hot this summer.
Yeah, in certain parts of the country and certain parts of the world, it certainly was a very hot summer.
So, okay. Market reflection, my folks. And hey, if you're still here or if you're just joining us, remember to smash that like button. Be a subscriber, because when we do have our new content, you will be notified so you don't miss nothing. Okay. So smash the like. I know that earlier today we had, if there was 500 likes, Michael Patak will wear a shirt and tie tomorrow. And I think it was just
we beat it.
Matter of seconds. And the thing is too, we had our fantastic traders in the chat room saying, "Hey, yo, you hit it. Tell him to get his tie and shirt ready." And he's going to do that. So we got some more likes here, but subscribe. We really appreciate it. We're glad that you're here for us, and we're very happy to be here for you. So until we meet again tomorrow, 8:00. Don't miss it. And remember, it's all Central Time. We'll start again, and we'll have our Friday, last day of the week. But don't leave, because Market Reflections here, and that's going to get you ready for tomorrow. So, John, I appreciate you, brother. Love you, man. And
Love you too, buddy.
I'll get you first thing tomorrow. Do you want me to get you a breakfast hot pocket tomorrow?
Yeah, that would be great.
Those were pretty good. The ham and cheese ones. Those are my favorite. Ham, cheese, and egg. All right, bro. We'll talk to you later. Take care. Bye.
Good afternoon, everybody, and welcome to Turn Those Machines Back On, our end of the day reflection of what the four markets we kind of focus on here did today. We hope that you had a positive, successful trading day. Jack, how are you?
I'm doing fine. I am glad that we got to the end of the day here, Hoag. We made it.
Yes. End of another day, day 3, really. I mean, day 1, but day 3. I think things are going pretty well.
I think so. People seem to be enjoying it. As I was saying in the comments earlier, it sounds like the music choices are the most debated part of it, and I'm fine with that.
That's all right.
At least they don't hate us.
Yeah, right. And music is a very personal thing. We understand that. So we're going to try and, I guess, find something for everyone, right?
Right. Well, we want to take a look at the charts?
Yeah, let's take a look. All right, so we've got the daily and the S&Ps up here, and maybe a little bit different look. Sorry about that. I closed out my platform. I had kind of a rough day today. You know, the hypotheses that I put forth either didn't work or didn't play out the way I had intended to, so I shut the platform down. Didn't want to get caught up any more than I already was. Didn't lose a lot of money, but just was not in step with the markets today. Even though, you know, we talk about the context and everything, sometimes things just don't work the way you think that they are, even when you go to your secondary or third hypothesis. So looking at the S&Ps, we saw that the market was continuing to push lower, but it was kind of weak as far as open interest is concerned by only adding 4,000. So we're not looking at a market that is highly directional, at least not yet. Now, tomorrow we know we don't really have any economic numbers. We're coming into rollover. Next Tuesday will probably the day you're going to want to switch in the equities from the September contract to the December contract. But we will keep everybody abreast of that situation and let you know when we are going to and when you guys should move over. I'll check the volume tonight and tomorrow morning, make sure we're still in the most liquid month, and we'll let you know when we're going to move over. So excuse me, this morning we
take it easy, Hoag.
I know, right? This morning we opened with a gap, and my thought was, well, if we can see some more sellers come into this market, we could push down towards weekly kickoff low, which would be around 4,400. Yesterday, we did talk about the target being a naked point of control, which was down around 44.34 quarter, and it hit it to the tick. These visual levels can really be magnetic and really good exits for trades, and obviously today it would have been a very good entry for a trade. So I was looking for the market not to close the gap. Well, it closed the gap pretty early. So my initial hypothesis of continuation to the downside was a little bit kind of removed from the situation. So now I'm looking at, well, if we're not going to push lower, maybe we're going to have another opportunity to push higher if we can accept inside value from yesterday, which it took a long time for us to do. We eventually did, but we were never able to push price up to that level. So now I'm thinking, well, we've got value lower, we've got range overlapping to lower. The overall direction of the day, however, was to the upside, and we see that we've got a little bit of a delta divergence here. Now, the delta is something that I talk about a lot, and a lot of folks have a lot of questions about it, but it's quite simply the number of contracts that trade on the offer would be positive delta. Those are buy market orders, positive delta, minus the number of contracts that trade on the bid, which would be negative delta, market order sellers, negative delta. So usually when we see delta moving in one direction, it's telling us that there are more aggressive traders on that side. They're actually taking action to get into trades or to execute trades. When price moves in the opposite direction, however, that gives me a kind of an indication or a potential indication of maybe there's more than just short time frame traders in the market. So tomorrow morning, I'll be very interested to see what open interest does. If we have a whole bunch of open interest on the upside today, that may indicate a potential kind of bottom here. Now, the daytime frame bottom here was not very good, although it does show a degree of excess on the low on this daily chart.
So, does when you're talking about Delta, something I'm curious about is that for all ES contracts or just for that particular contract?
It is just for this particular contract, and I anchor it to the beginning of the regular trading hour session. So it's not a cumulative delta. All I want to know is what the delta is for the daytime frame today.
So does the rollover play at all with that?
The rollover plays with everything.
True. Well, because I was thinking that I guess it depends on, I guess everyone's short and long and they got to all roll them. So it's probably just cancels out.
Right. Yeah. The way I think that the longer time frame traders choose to roll is they either work the spread, which is at the very same time they can sell their September contracts and buy their December contracts, or vice versa, depending on what position they're trying to move over. And that I don't think really does all that much to create delta divergence. Delta divergence is something that takes all day, and it's like there's longer time frame buyers accumulating, but it very well might also affect delta, because if they're accumulating longs here in the September contract, they're probably getting out of shorts and then putting those shorts into the December contract. So there really isn't much that rollover doesn't affect.
There's a few questions here in the YouTube chat. I could take a stab at this too. Ocean Blue is asking, Hoag, why do you say short-term traders affect delta? Why not large players or position traders? Can I take an educated guess first, Hoag?
Yes, please.
If you're a large player, you're not just going in and hitting the bid or lifting the offer. If you're doing big size, you're probably going to levels and waiting for people to come to you. Am I on the right track?
Excellent. You're on. Yeah, it is the right track. So on days like today, and this may be a function of rollover, like you said, Jack, we started the day down here. We ended the day up here. Delta was increasingly negative throughout the day. The shorter time frame traders are much faster to just get in and out of the market using market orders. The longer time frame traders use, I'm sure you've probably heard of iceberg orders. So what they'll do is if they have 10,000 E-minis to buy one day, they're not going to just put in a 10,000 lot order and let it sit there, because nobody's going to get anywhere near it. They'll pick a zone and they'll place bids at smaller quantities, 14, 6, 15, 17, 42. They'll just keep putting those bids in there and letting the short time frame traders hit those bids using market orders. And then when they figure out that they're not going to be able to continue that accumulation there, they move their bids up. So you can almost see it in the chart today. With the market opened, buyers were here. This was the zone that the longer time frame, and we're making an assumption here. There's nothing 100% for sure in anything in trading, but you can kind of see the delta's decreasing already here in the first hour and a half. So the longer time frame may have been sitting here just accumulating longs, letting the short time frame traders hit them with market orders. And as soon as they're not getting those fills anymore, they'll move those bids up. Well, here you can see a bit of a capitulation from possible shorter time frame shorts that may have been short here. They decided, we're not going to make any money on these. Let's get out. They bring price higher. This longer time frame brings their bids then up to this level, and they'll accumulate whatever they can. You see delta continuing to decrease in value while the market sits here, and you may have had longer time frame traders accumulating or liquidating, right? This could be new longs. It could be short covering. But what the thing is, they don't want to move the market. They just want to use the liquidity created by the shorter time frame traders to aid them in their execution. That's what the speculators are here for anyway, is that liquidity, right?
Yeah.
All right.
Good question.
Does that include growler orders? Dan has a great question here, and I know Dan knows the answer to this. Iceberg orders are just traded out from one side. If there's a buyer out there that's using iceberg orders, they're going to get tipped off in Delta. People that are watching Delta will say, there's a snake in the woodpile here. Something else is going on. I better be careful if I'm going to try and be short with all my shorter time frame market order hitters. Growler orders are different. If they're using growler orders, and this is a little bit kind of difficult to explain, they'll put 40 on the bid. And as soon as 40 are filled on the bid, they'll put a market order to buy 40. So you get 40 on the bid, which is 40 negative delta. And then the second that's filled, you buy 40 at the market, which removes that negative delta. So you can have an accumulation of tens of thousands of contracts using growler orders and keep delta negative, or keep delta zero.
Neutral, yeah.
Yes. So that's one of the tricks that they use.
And there's a million tricks, Hoag. This goes into more.
Yes.
This is more akin to the type of trading I did when I was trading professionally, as far as when we were doing spread trades, right? A lot of the stuff we're talking about, it was more what is the most creative way to keep your queue position and get filled and things like that, as opposed to, and everything was fade, right? When you're doing butterflies or stuff like that. So there's a million tricks out there, and everybody wants to hide their size. If 100%. You can see it, they probably want you to.
Yes. Right.
Other quick question here. We got, when should I change the ESU3 to the ESZ, or just set platform to front month for ES and forget about it?
Okay, good question. So this is a dome for the S&Ps. Whoops, hang on a second here. I don't want to cover the whole thing. So there were 1,529,000 traded in the September contract today. This is the December, 183,000. So expiration is a week from tomorrow. So I would imagine either Monday or Tuesday, you're going to see the volume move from the September to the December contract. If you're watching TopstepTV, the day we switch over is the day that the volume is mostly going to switch into the December contract, and we will be letting you know.
Right? Rooster mentions the level 2 data there. Basically, the rollover sometimes gets complicated. You just want to be trading the contract that's more liquid, that has more volume going on. So if you just look at the domes next to each other, that'll give you a good idea of which contract you should be in.
Yes. Yeah. And any platform is going to be able to tell you in real time what the volume is at that time during the day. So, but we'll be watching and we'll let you know. It's good to see you, Rooster. Good to see you, Bill. Good to see everybody, Dan. Ocean Blue. All right. So I didn't get my big push to the downside. We left a poor low. I didn't get my value area special situation play. That didn't happen. I didn't get a huge late spike at the end of the day because of the negative delta. So I went 0 for 3 today in my hypotheses, and I don't like that.
I didn't even see those second 2 trades. I didn't know you did that.
Yeah. So we have a day where, the 3 main hypotheses that I came up with didn't play out as I expected. Tomorrow's a whole nother day, and we'll have to see what happens then. This is a marathon, not a sprint. So think about the S&Ps. We closed the gap. We almost went into value and accepted value. Maybe we did accept value. Delta was negative. Now look at the NASDAQ. NASDAQ, same thing. We've got We lost open interest yesterday. So this was more long liquidation than new sellers coming in. What are we going to see tomorrow? What are we going to see from today? We have value. We have no gap fill. Did we fill the gap? Looks like we filled the gap almost to the tick. What's this low? I'm going to get my glasses on for this. This low, 15.310.50. This high, 15.311.75. So we closed the gap, relatively close to the tick. We did end up closing the gap. So no acceleration gap. The market moved in the opposite direction. Delta was positive all day in the NASDAQ, where it was negative all day in the S&Ps. What is open interest going to tell us tomorrow? We lost open interest on the downside yesterday. Volume, a little bit higher today in the NASDAQ. But the daytime frame session, the daytime frame volume is where all that volume came in, and it was in the opposite direction. So if we added a whole bunch of open interest, we may have found what we were thinking we saw in the S&Ps, which was longer time frame buyers. Do we know this for sure? We don't know anything for sure. There's nothing that is finite or positive in trading. Everything is hypothesis, everything is probabilities, and everything is risk management. Everything I did today didn't play out, but risk management kept me from blowing anything up today. So that's a good thing, right?
Yes.
All right.
I'm looking up one of these questions right now. We got a couple in there. We got, is a gap close when we fill the low of the day before, or do we have to make it all the way to settlement?
No, a gap close is just closing the day over day. So here's the low from yesterday. It took us all day long, but we actually ended up closing the gap. So you do not have to go all the way back to settlement to close the gap. You just have to go back into the previous day's range, which we did by a couple of points.
Nice. And I'm working on that second question about the volume today compared to 20 years ago.
Huh, okay. You're doing a little research?
I'm doing a little research.
Awesome. So let's take a look briefly here at Crude. Still wrestling. Now, what was the EIA today? The EIA came out 6.3 million barrel draw in crude. Lower production, lower inventories here in the U.S. Why didn't the market rally? Is the fact that China's economy is doing that poorly? We don't know. We're going to trade what we see. And boy, this weekly kickoff high here, 88, certainly has paid off well if we had the opportunity to participate. Now, a lot of folks ask, where do these weekly kickoff levels come from? And I'm going to show you quite simply where this $88 weekly kickoff high came from. This was, and it's not always measured moves. Sometimes there's a lot more complication to it, but it's from this swing low to this swing high. Take that measurement from this swing low to this swing high. It just worked that way. Not only that, there was some information from back here on other charts that kind of supported this idea. So that is, in this case, a simple weekly kickoff level that certainly seems to have paid off relatively well. Take a look at the 30. Inside range, inside day, that range. Our low for the range is going to be down here at 85.54. Our high for the range is going to be up at $88. Anything in the middle is random. Short time frame control. We've been piling in the open interest all the way up here. I don't think we're going to see a big pile in open interest tomorrow morning. Watch the opening call and we'll discuss.
Hoag, when did they release the E-mini S&P? Because I'm realizing that the question, how many, what was the volume like today compared to the past? I mean, if you just looked at something like, you know, I'm sure it tracks with the general stock volume or something on the NYSE, but it's a little bit of a complicated question with futures because there used to be the big S&P contract that became too big, and so they released the mini, and then they've released the micro. So if I look way back, it looks like...
I'm trying to remember when they unleashed the electronic trading against us.
Yes. My guess is that it was around 97, 98. I'm seeing I have like the 12-month candle chart.
Somewhere right before Y2K.
Yeah, so volume took off from there. Actually, volume has come down a little bit in that because the highest years were 2008, 2011. So take that for what it's worth. It's not noticeably different in the last 13 years or something like that. At least on a yearly candle. For the ES is what I'm talking about, by the way.
Mm-hmm. Yeah, from the crash of 1987, we were told we had 2 years left in the pits. Computers were going to take over within 2 years.
Yeah, they were off by
a couple of decades.
20 years.
Let's take a quick look at gold, and we'll get everybody doing their homework and getting some rest. So
hell yeah.
We have the dollar index closing over 105. Didn't really scare too much of crude oil, or excuse me, of gold here. We actually ended up, I think, with largely an inside day. Some speculators wondering what the heck is going to go on, but we've got weekly kickoff low relatively close to us. Our low today, 1940.30, weekly kickoff low, 1938. See what it looks like on the 30. I really did not pay attention to it. I haven't been paying that much attention to it, but I'm getting a little bit closer to being more apt to watch this market because I think there is some change coming. So we really just an inside value day, just a watch and see what happens kind of day. Boy, if you really missed if you lost money on these moves here and here, the market has really given you very little opportunity to try and make that money back.
Yeah.
We'll see what happens. We'll see what happens tomorrow, huh?
Another day, another Topstep TV sesh. Hoag, you'll be there, right?
Yeah, I'll be here. I'm not going anywhere for a little while. So, and besides that, I love what I do. I love this. I love markets. I love when I can figure them out, and I love when I can't figure them out because it just reminds me there's so much more to know, so much more to learn, so much more opportunity, and you know, I get to spend time with you and with all these folks and with everybody, and just I don't even need to take time off. This is vacation for me because I like what I do so much.
You, sir, are a glutton for punishment, and I love it.
I've been told that. I have been told that.
Yeah, you got to be. All right. Well, thanks, everybody, for showing up today, especially that made it all the way. Hope we were able to answer your questions. And Hoag, take us home.
All right. Well, get some rest. Blessings to everybody. Have a good night. Do something nice for yourself. We work really hard at this. You deserve to do something nice. Don't forget to do something nice for somebody else. We'll see you tomorrow morning at 8 o'clock for the opening call. Have a great night.